Good morning, everyone, and welcome to today's Trader Summit. My name is Kelly Clement. I'm going to be your YouTube host today. I'll be back here in the back, making sure all the magic works. In just a few minutes, I'll be bringing on Jeff Gibby, who will be the host of the summit, and get everything ready for that. So I'm just going to go check, make sure everything's running okay. I'll be right back with you just to make sure. Okay, looks like everything is ready to go. We are all set for today. Hello, Greg Lewis. Welcome to the summit today. And again, hey, everybody, as you're coming into the room, make sure to say hello. Tell us where you're coming in from. We're here in beautiful Salt Lake City, where it is a balmy 4 degrees this morning, plus some wind chill. So it's delightful out. Anyway, so we're going to get started in about 5 minutes. In just a minute, I'm going to take you through the schedule. I'm just going to go back and check everything again, and then I'll be right back and I'll take you through the schedule and some things that you can do for today to be prepared. So, be right back with you. Again, my name is Kelly Clement. I'm glad to have you here today. I'd like to go ahead and take you through today's schedule before we get started here in about 4 minutes. So let me go ahead and bring up the schedule. Now you can actually get to the schedule by going to metastock.com. That's metastock.com. And then right at the top of the homepage, there is a banner that you can click. It says register now for the free online trader summit on January 30th. That is where you're going to go and click. And then it will take you to this page right here. So let me go ahead and scroll this up to the top if it'll let me. It's thinking hard about it. There we go. Okay. So you're going to get to this page. And what you're going to see here at the very top first is Jeff Tompkins is going to be our first speaker for the day. Then moving down to Fausto. Then Alex Cole. My mouse does not want to work here. Alex Cole, Melissa Armo, our own Jeff Gibby, and then wrapping up the day with Steve Primo. So we have got a great lineup today. Oh, excuse me, we did have Oscar Carboni and also if it'll pop up here. So anyway, and my mouse isn't working, so it's not letting me see the schedule. So you'll want to go to metastock.com. Click on that homepage banner. It'll take you to the Trader Summit. And when you do, if you go down to the bottom here, what it's going to do is it's going to allow you to register for some free promotional items from each of our presenters. So if you go to metastock.com/traders-summit, you can go ahead and do that. Now, I did put the link in the chat, so you can actually just click on the link from chat and go directly there. So let me go do my checks here. I'll be right back again. All right, welcome again to today's Trader Summit. We're going to get started here in about 45 seconds. As you're coming into the room again, say hello, tell us who you are, where you're coming in from. My name's Kelly. I'll be running the YouTube here in the background, answering your questions here in chat. So feel free to ask questions during the day. That's why you're here, is to learn, ask questions. So if we'll get those questions over to the presenter as they come in. Sometimes they may be at the end of the presentation, sometimes they'll be during the presentation, but put your questions in chat because we do want to make sure that they get answered. Again, you can go to metastock.com, that's metastock.com, and you can click on that homepage banner. It'll take you to the registration page where you can register for all the great bonus offers being offered by our instructors and see today's schedule. So let's go ahead and get the show rolling. Okay, Jeff, you are live and ready to go.
All right. Thanks, Kelly. I appreciate that. Good morning, everybody. Jeff Gibby here. I hope you're doing well. Welcome. I was thinking about it just a second ago. I think we've been doing these online trading summits and online trading events now for 10 years. Anyway, they've been a great event. I hope you're excited about another great session today. Let's go ahead and kick it off. I'm going to read a legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I hope everybody, like I said, I hope you're doing well today. If you're joining us from YouTube, make sure to like and subscribe. It helps a great deal. Before we kick off, I want to thank two of our sponsors. The first one being CMT Association. CMT Association is a very, very well-respected, well-reputed organization. They've been supporting us for a couple of years here. You can find out more about them at cmtassociation.org. And of course, Stocks and Commodities Magazine. They've been making technical analysis articles in the magazine since 1982. They've done 17,000 trading articles, 1.3 million subscribers, 1.226 actually. You can see the number there. Anyway, if you registered today, like if you're watching on GoToWebinar, you already registered. You're already qualified to get the free issue. If you're watching on YouTube and you haven't registered yet, well, Kelly in the control room is actually going to put in a link where you can actually go and register right now and get a free subscription, and also sign up for a lot of bonuses from all of the speakers today as well. So I do want to say real quick, thank you to Stocks and Commodities sponsoring all of the events that we've been doing. They sponsored us like every single year since we started doing these, and they're a really, really good partner. We appreciate it. Of course, we're Metastock. You're going to see the logo all day today. You're going to see the charts all day today. Metastock has been rated #1 in its price category for 29 years in a row now. We will be talking more about it, but if you want to get an extended trial or find out why it's been rated #1, go to metastock.com/trader-summit 3-for-1, and you can get a free trial. So with all of that out of the way, I want to welcome Jeff Tompkins. Jeff's been a presenter of Metastock, partner of Metastock for 4 years now. He, for 5 years, maybe 5. Anyway, he really does do really good lessons around kind of technical analysis and trading strategies. He started teaching people how to trade on a website called udemy.com and has a huge following there. In the meantime, since I've known him, he's actually become he actually manages, I think, a hedge fund. He's been very, very successful at what he does, but he teaches a really good class. So let's go ahead and get you started, Jeff. How are you doing today?
Good morning. I'm doing well. How are you?
I'm good. Let me go ahead and make you the presenter here.
I think you have us beat on the temperature. It's 9 degrees up here in Boise.
Yeah, we got 4 degrees. So
yeah, you're colder than winter.
It's
still
brisk out
cold.
there.
I don't think at that point it doesn't make much of a difference.
No, it's just, yeah, either way you're cold, right? I can see your screen. I'm gonna go ahead and turn off my camera. Fantastic. And it's all yours. Go.
Oh, thanks, Jeff. All right. Well, thanks for having me. First of all, I want to say welcome to everybody. Great to have you all on. Depending on where you are in the world or the country, it may be early for you. So great to have you guys on, and we'll make it worth your while. So today we're going to talk about my Slingshot setup, which can help us buy low and sell high in volatile markets. And we've certainly seen a lot of volatility in the markets over the last couple of years. So this is really timely information for today's markets, and I think you guys will get a lot out of it. So before we get started, I'll read a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options, and must meet suitability requirements. We'll be going over some various results today, both actual real money results and hypothetical performance. And just know that any past results that I share are not necessarily indicative of future performance. And even though they might be based on actual trades, including real money results due to the time critical nature of trading, brokerage fees, and activity of other subscribers, we don't guarantee that subscribers will mirror our performance. But performance numbers shown will be generally based on actual trades that users could enter based on trade signals. All right, so we're going to start off this morning by talking about actually why the markets are so difficult to trade. Of course, we're here to make things easier and help you guys with your trading and investing. But I think in order to do that, it's important to understand some of the difficulties that we encounter as traders and investors. And there's certainly a number of them, right? But a lot of it actually can be boiled down to psychology. So you may have seen a similar psychology curve in the past. And maybe even experienced it personally. I know that I have plenty of times, and eventually, if you've been trading or investing in the markets for a significant amount of time, you'll eventually encounter this mentality and experience that we all eventually encounter in the markets. And that really involves a kind of a roller coaster of emotions that often starts out when we're entering a trade or an investment with some degree of optimism, enthusiasm, exuberance, right? We obviously are making trading and investing decisions with the anticipation that they're going to work out well for us. So that's often how we start out. Now, sometimes that works out great, and other times, we encounter difficulties, the inevitable difficulties once we enter a trade or an investment that we then need to deal with. And what that often does for most of us is leads, if things don't go our way or the way that we anticipate at some point, then we often feel anxiety and fear and despair, and that can often turn to panic, and we become discouraged and may question our methodology, our system. We may abandon it even and think that it just doesn't work, and so this is not something to blame yourself for. It's a common psychological drawback that we all face as humans as we trade and invest. But that then can kind of swing back around, right? So maybe we find a new system that we think is the new holy grail, or the market environment changes, and all of a sudden, I hit a bump in the road and things are going to turn around, and so we can feel some degree of relief and optimism, and then that whole process starts all over again. So it really is kind of a perpetual cycle of a roller coaster of emotions that can actually make things very difficult for us. And so we're going to talk about a really great strategy and methodology to help overcome this, basically innate psychological drawback that we all face in the markets. And so let's understand a little bit about the psychology of failure and why a lot of traders and investors don't survive long-term to become profitable. And so when we look at that, let's look at it in the context of trading, because anytime we enter a directional trade, we have some goal in mind, right? And typically that's, if it's a directional trade, it's to buy low and sell high. And believe it or not, that actually goes against our human instinct. Even though we know that that's our goal, that's what we need to accomplish, it often goes against our psychological human instinct. And instead, as we saw in that psychology curve, when a security goes down, we sell it, and that's the the panic component. If things don't go the way we anticipate, we tend to panic, and then we sell. And then when something starts to go up, we then buy it, right? And often we do that too late, after the move has already occurred, and we see, we get trapped. Basically, we get caught at the top of an up move or at the bottom of a down move, and we're just basically not in tandem with the markets. So we panic when price is falling because we're afraid of losing money, right? And that's psychological. And then we buy when it's rising because we're afraid of missing out, right? It's the whole FOMO thing. So that's something that we're all vulnerable to. Nobody is immune to those feelings. And then to compound that problem, we're wired to repeatedly make the same mistake. So we buy low and buy high and sell low because that's what our emotions tell us to do. And then, of course, without a solid trading plan, we're vulnerable to our emotions, and those are always going to come into play. But if we have the right strategy or methodology, and we adhere to that, we can actually do a pretty good job at overcoming these psychological drawbacks. And of course, if you're lacking a strategy that can identify momentum shifts, meaning you don't know when to get in or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors. And again, it's at the crux of what leads to a failure for a lot of traders and investors. So what we're going to do today in our session is we're going to turn the tables. All right. So rather than being greedy when there's a high level of financial risk and fearful when it's actually the best time to trade and invest, we're going to flip that around and take a contrarian approach. So we want to be fearful when others are overly optimistic or exuberant, and we want to be greedy and jump into the markets when others are panicking. And that's really when it's the best time for investing. And it actually is an approach that a lot of very successful, in fact, some of the most successful traders and investors in the world take. Warren Buffett, of course, said, be fearful when others are greedy, right? And so he uses that contrarian approach to his advantage, and has led, to his, success in the markets and becoming one of the richest and most successful investors. So that's a difficulty that we face. So here's what we're going to do to make things easier. I'm going to reveal my Slingshot trade setup that, going back to the dawn of the markets, has forecasted 100% of market rebounds, and it does it using a contrarian approach to the psychological drawbacks that we've talked about. So I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Now, no system can tell us exactly where the bottom and where the top is, but we need something that can give us a good clue, to the near vicinity of those major turning points in the market. So I'm gonna show you how to do that. We can apply this to any market in any time frame. So everything that we cover today on our session is really fractal in nature. It can be applied to any market because psychology impacts all markets, right? Supply and demand, or fear and greed, which are very closely correlated to supply and demand in the markets, again, occur in any and every market, as well as any and every time frame. So it really doesn't matter what the market is or what the time frame is. I'm also going to show you some tricks on how you can also avoid bad trades and even eliminate a lot of your losing trades, which of course are our biggest overhead in the trading business, right? We all have losing trades, and we want to minimize those so that we have, improve our trade expectancy and have a positive expectancy to make money over the long term. So we'll talk about how to do that, and then we'll go through some trade examples together. And then stick with me to the end, and I'll show you guys how you can copy the success I've had in the markets and actually use my trade signals that I use to make a living in the markets. And I also use these to make trading decisions in my hedge fund, which I'll talk a little bit about with you guys today. So let's start out by imagining if we could actually buy low and sell high without any guesswork. I've been trading for well over 2 decades, and most of the strategies that I encounter that do well eliminate guesswork as much as possible. Reason being, the more we're guessing and the more that we're not adhering to a strict set of rules, the more our emotions come into play, the more impact the psychological drawbacks that we've talked about can have on our bottom line. So it's really important that we eliminate as much guesswork as possible and stick with something that has a statistical edge. And there's one particular volatility study that's made this possible since the beginning of the markets. And it's a unique setup I call the Slingshot. It's actually allowed traders to buy low and sell high with 100% accuracy going back to the dawn of the market. So if we apply this setup to the major indices, the NASDAQ, the S&P, the Dow, the Russell, you'll see very soon that this particular approach to the markets has forecasted market rebounds with an incredible degree of accuracy. Not only that, it also warns of potential market sell-offs. So it's a great tool for allowing us to spot what I call volatility expansions and pending market sell-offs. So once these volatility bands can't be stretched any further, they have to bounce back. It's an inevitability in the markets. And inevitabilities are really important to incorporate in the trading strategies and methodologies. We need to discover aspects of the market that have to take place in order for there to be a marketplace. And that's exactly what this does. And this rubber band effect makes it possible to accurately identify tops and bottoms in the market. And we'll look at this on some charts here momentarily. So let's start out by looking at one that may be a bit painful for some of us, but it was the most recent. Of course, we've been in a significant bear market sell-off in 2022, but this was going back to early 2020 as far as magnitude and the degree of the sell-off in a short period of time, which I believe was the S&P and the Corona crash back in early 2020 was a peak to trough sell-off of somewhere like around 35% in just a few weeks. So that's a significant sell-off. And in fact, the Slingshot setup could have easily warned us of not just the sell-off, but also the rebound that ensued in March. But this is kind of what it looks like. So thinking back to that psychology curve, right? We want to be fearful when others are greedy, right? So as markets are hitting new all-time highs in early 2020, we have a lot of market participants that are fearful of missing out on a continuation in the up move in the market. And when something derails that, the markets are very vulnerable to a significant sell-off. And of course, hindsight 2020, we saw that happen, right? So what we want to do is we want to actually sell when most traders are buying, right? And we want to buy when most traders are selling. So remember the psychology curve. When traders are panicking, that actually creates opportunity for us. And after this, 30% plus peak to trough sell-off in the Corona crash, in the midst of a major global pandemic, how did the markets see such a significant rebound in the remainder of the year, right? It wasn't very long till early mid-June that we were already back up to where the market began to sell off. And again, that's a great opportunity to get out of the market when most other traders are starting to become irrational, overly exuberant again, right? So I'm going to show you guys how to identify that, not just for past events, but future events, right? It's going to happen again. It's going to continue to happen over and over again. So before I do that, I'll give you a little bit of background on myself. If you guys aren't familiar with me, again, I'm Jeff Tompkins. I have 23 years of experience trading the stock options and futures markets. I received my professional training at the trade desk at Morgan Stanley. And I'm also the founder and chief investment strategist of Altos Trading. We currently have over 50,000 members in over 100 countries across the globe. As Jeff mentioned, I'm also a hedge fund manager, so I manage money for my clients at Altos Capital. And I'm the founder and creator of the Trade Trend Signal software, which we'll be talking to you guys about today in our session. So by the end of our time together today, you'll discover one trade setup that's produced massive returns going back to the beginning of the stock market. In fact, it's so reliable, it's worked 100% of the time, going again back to the dawn of the market in every major crash, black swan event, market correction, you name it. It hasn't failed. And even the recent Corona crash, like we just looked at. So we all know that if we look back to the beginning of the markets, there's been a lot of bad times. There's been periods of major market sell-offs, major bear markets, secular bear markets, right? And they always return. The market always comes back, right? Sometimes it takes longer than others, but it eventually comes back, right? And so that's obviously, an important thing to understand and know, that as economies grow and expand, the market will follow. There's just going to be bumps in the road, but it does happen over and over again. And whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So what you'll discover today is why volatility is one of the only leading indicators of market direction, how to identify when markets may be vulnerable to a sell-off. And when you understand this, it can really turn your trading around. It has for me. And we'll talk about how to identify when the market is likely to go up, how to determine exactly how far the market is likely to go up. And for me, this is one of the most valuable pieces of information as it relates to the slingshot strategy, right? It's actually what I refer to as the trader's dilemma. Once you get into a successful trade, how do you know when to get out? Because all too often, we're using guesswork and emotions to make that determination, and that often results in watching our profits evaporate or even turn into losses. So it's really important as far as the trade management aspect that we know how to plan our exits. And then again, stick with me to the end. I'm going to show you guys how you can get your hands on a really incredible tool that I believe can change your trading forever, and it certainly has for me. So let's start out by looking at the slingshot setup and how we identify it. So the reason I term this setup the slingshot is that it actually applies to the principles of kinetic energy. And so if we imagine a slingshot and pulling that band back, right, we're transferring the elastic energy of the bands to the slingshot from muscle energy in our arm. So after the slingshot's released, the elastic energy is transferred to the stone as energy of motion. Again, that's called kinetic energy. That's about as deep into physics as we're going to get. But kinetic energy actually occurs in the markets, and it presents itself as either supply or demand, right? Buying pressure or selling pressure in the case of supply. In the case of the slingshot, we're going to kind of focus on the demand side, but it also can show us when there's excess supply and risk in the market. So once a band becomes overstretched, again, think of a slingshot, right? We can only pull the band back so far before it breaks or it rebounds, right? So it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. And we're going to do that with a particular volatility study. And again, volatility is one of the only, especially if we look at specifically at implied volatility, the only accurate leading forecasting tools in the market, right? It can actually give us a degree of ability to see into the future, right? Whereas most indicators are lagging, right? So volatility bands can actually tell us when prices move too far from the mean or an average and is likely to reverse direction. Markets are either moving away from a mean or mean reverting, right? So they're always in one of those phases. So we're going to apply an indicator called the Bollinger Bands to our charts. And if you're not familiar with them, they're a study that can be used in many ways, and we'll go over some of the different ways they can be used. And I'm going to show you a unique way to use them. But they basically involve volatility bands. Okay. They're available on virtually any retail charting platform. We're going to look at them on the Metastock platform today. And they can actually pinpoint turning points in a security with quite astounding accuracy if you use them correctly, right? Just like any other indicator out there, there's a lot of ways to use them. And there's a lot of bad ways to use them, and there's some good ways to use them. So we're going to look at how they can actually tell us when the market is vulnerable to a sell-off and other traders are becoming overly optimistic, and there's a high degree of risk in the markets, and also when there's like a good likelihood for a rebound when other traders are panicking, and we're going to use them in a contrarian fashion, right? So if you're not familiar with the Bollinger Bands, I'll just give you a quick kind of overview of those. They're basically consist of 3 bands. So the middle band is a simple moving average of the securities price, and I'll give you the settings that I use for this indicator as well here in a second. But just to understand it, there's 3 bands. Center band is our average, our mean, and then we take the standard deviation of the average, the securities price. And standard deviation is just basically a mathematical measurement of average variance. So this is where the volatility component comes in. but it measures how spread out numbers are from an average value, okay? And again, just like a slingshot, price can only move so far from its initial resting point before it bounces back, okay? So I'm not going to get into all the nuances for the sake of time of the calculations behind that. But because standard deviation is a measure of volatility, when the markets become more volatile, the bands widen. So this is the key to understand. When markets are volatile, we see the outer bands widen, and when they're less volatile, we see the bands contract, right? And that happens rather quickly. So there's not a lot of lag in that volatility aspect. So these are the settings that I use, and they're typically the default settings. When you add the Bollinger Bands to your Metastock chart, these are going to be the default settings. So you shouldn't have to change them, but I use a 20-period simple moving average and a 2 standard deviation setting for the outer bands. So that means when price is at the outer bands, one of the outer bands, whether it's the upper or the lower, it's 2 standard deviations away from the 20-period simple moving average. Okay, that's important to understand. So as I mentioned, there's a lot of ways to use the Bollinger Bands, just like any other indicator, right? You could give a single indicator to 20 traders and they're all going to use them differently. So let's talk about some of the common ways that they're used and why I don't believe that those are the best ways to use them. And I'll show you how in a unique way that I use the Bollinger Bands that has proven very effective over decades. Again, going back to the beginning of the stock market, in fact. So one technique is to buy at the bottom band and sell at the top band. Now, the problem with this approach, and we'll again visualize this on a chart, is that price can hug the upper or lower band for extended periods of time. So for that reason, I don't favor this approach. Now, another way to use the Bollinger Bands is band contraction and expansion, and I actually do use this methodology, but not so much for making a trading or investing decision, more so for planning my trade and assessing the current market environment. So band contraction and expansion is important to understand, and it can often precede a big move when you have a volatility contraction. But the problem is we don't know in which direction the move will occur if we simply use that approach. So for that reason, we're not going to use that as a sole method for making trading and investing decisions. Another commonly used approach is to buy or sell at the middle band, right? So that's our average. And of course, as I mentioned, markets, when they're mean reverting, will often find dynamic support in an uptrend at the average. So that can work well in strong trends, but we all know that trends eventually fail or reverse. And when that happens, or if we're even in a sideways ranging market, this strategy or approach can fail miserably. So for that reason, we don't use that approach. Now, a unique way to use the Bollinger Bands, which again, I call the slingshot, is to wait for the lower band to break. So that's the lower volatility band, right? And when we think about this in the context of the psychology of failure in the markets, when other people are panicking and there's a market sell-off, right? We are waiting for that panic to ensue and then take advantage of it. So what that looks like is price will hug the lower band. In other words, the markets will sell off and ultimately rebound to where the breach initially occurred. And this is what the slingshot is all about, right? So let's talk about the Bollinger Bands a little bit more in depth, and then we'll look at this on some charts. All right, so they've been around for a long time. It's a technical analysis tool. Again, you can easily add it to your Metastock chart. And we're going to use a 2 standard deviation setting with a 20-period simple moving average. And it's been around for decades, right? And like I mentioned, used in many, many different ways. And so there's a lot of subjectivity behind the Bollinger Band indicator, just like every other indicator out there. But I think that you'll find that when we use it in this unique way, the slingshot method, it's much more effective, okay? So what we're looking for is price can exceed or hug a band envelope for prolonged periods during strong trends, right? But all trends come to an end and ultimately reverse. So what we want to do is wait for the lower band to break. And I'll explain what that means as we visualize it on a chart. And then we want to wait for a buy signal, okay? So this, again, is when other traders and investors are panicking, there's a market sell-off, and eventually there's enough demand that comes back into the market after the excess supply that caused the sell-off to attract institutional money, right? So enough big market participants come in to drive the price back up. That's like a Warren Buffett, right? So a Warren Buffett starts to buy when prices are attractive and there's excess demand. So we're not going to get into that on the fundamental side. Warren Buffett is a big fundamentalist, so he's looking at balance sheets and he's analyzing those and finding opportunities for undervalued companies. But he's doing it in the context of this contrarian approach. So we don't need to get into the fundamentals. We can actually visualize this on a chart, all right? Because once we can identify it and get into the markets at an opportune time, we wait for the price to return to the breaking point. And again, going back to the dawn of the markets, you'll see the reliability that's occurred with. Now, that includes major market, if we look at all the major market indices, so again, the S&P, the NASDAQ, the Dow, the Russell, so that makes up the bulk of the market, right? They've returned to the initial volatility breakout with a really high degree of accuracy, okay? And we're going to see it happen again from the recent bear market sell-off. But that includes all 4 major corrections we saw back in 2018. This is really when a lot of the volatility started. We're kind of approaching the tail end of this long secular bull market that we've been in. And that often leads to more significant market corrections, market sell-offs, when things like the COVID pandemic ensued, and then ultimately results in secular bear markets like we're in as of last year. But also looking at some of these major crashes prior to that, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis, that was even more severe than what we saw last year. The market lost more than 50% of its value in 2008. The 2000.com bubble, another really severe one, right? So thinking back to all of these major market sell-off events, what's happened after every one of these? The market has rebounded from a major sell-off and gone on to make new highs, right? So again, this happens over and over again, whether it's a black swan event, a market correction, a major crash, a bear market, right? This continues to occur. And we wouldn't, nobody would invest in the stock market if it didn't continue to have a long-term upward trending bias, right? So let's start to look at the slingshot now, and what that looks like and how we can identify it and even trade it if we decide to do so. So we've got the Bollinger Bands plotted here on the chart. You'll notice on the very left of the chart in February, right? So this is going back to early 2020 during the Corona crash. The bands are very close together. They're very narrow, right? And horizontal. And what does that tell us? It tells us that we're in a period of low volatility. So there's a lot of complacent traders and investors out there who are just kind of sitting on their fat 401ks or IRAs. They're happy and the markets are continuing to go up. In fact, they're making all-time highs. Everything is great until mid to late February hits, right? We start to find out the severity of the COVID pandemic and everybody panics, right? And what happens? Price starts to trail the lower band. Now, remember, one of the approaches that a lot of traders and investors use as it relates to the Bollinger Bands is they buy at the lower band. And that can work well in certain market conditions, or they'll sell at the upper band. In fact, if you look at January, February, that was working out pretty nicely. You can pick up, 10, 15 points going both directions until you can't, right? And then it wipes out all your profits. And so in this case, price starts to trail the lower band. We get a huge sell-off in just a matter of a few weeks. But what happens? Eventually, in mid to later March, the bands are overstretched. We can't sell off anymore. Eventually, it's going to attract, demand's going to get pumped in the market. It's going to attract enough buyers and drive price back up. And that's exactly what happened, right? There was really nothing that, on a fundamental basis, that warranted price coming back up to the initial sell-off level. In fact, things were getting worse, right? COVID was continuing to spread, and major economies were shutting down. But the market went back up, right? So it's kind of counterintuitive. And this is why it's important to use a contrarian approach, right? So think about that. Now, does this only work with the major indices? No, it's psychological. So it works with individual stocks. It works with Forex. It works with futures. Regardless of the market or the time frame, it can be applied. So here's what it looks like again, right? Apple's in this really beautiful uptrend, right? So we're getting a volatility expansion to the upside. Oh, we have this nice little retracement down, up, couple bullish reversal candles there at the lower two standard deviation band. This might be a great opportunity to take advantage of a bit of a retracement in Apple and jump into the long side, because what the uptrend's got to resume, right? It's got to go back up. Well, it didn't, right? We actually had a volatility expansion to the downside. So look at what's happening. Price is trailing the lower volatility band. We get a significant sell-off in Apple, right? But eventually, we come down to a support level, and price reverses right back up to the initial volatility breakout. So the slingshot kind of looks like an upside down triangle, if you want to visualize it that way. And it plays out in different fashions, right? So here's another example. What do we have that preceded this slingshot setup? We had volatility contraction. How do I know that? The outer Bollinger Bands are narrow, horizontal, they're close together. We're in low volatility, and we're hitting new highs in the markets. Now, what do I want to do? Do I want to be fearful of missing out on a continuation of the uptrend and have fear of missing out? No, I want to be fearful because I know that if the markets start to rotate to the downside, they're very vulnerable to a sell-off. And that's exactly what happened here, right? But eventually, the markets attract demand, right? The demand gets pumped in the market. They attract buyers that will drive prices back up to the initial volatility breakout. Does this work intraday? Absolutely. Same method, same psychology behind intraday charts as well. So this is a 5-minute chart of AMD, right? We're in low volatility conditions early on in the trading day. So we see price in a range. Again, if you're buying at the bottom band and selling at the top, that worked pretty well a few times until it didn't. And we get a volatility expansion to the downside, right? But eventually there was a buying opportunity. And what happened if you had gotten in on the sell-off? Well, you would have had a much greater profit potential if you were buying in low volatility conditions when price is just oscillating between a narrow upper and lower band. Because we know with a high degree of certainty that price is going to return back up to that volatility expansion level. So let's talk about how to identify the buy zone. This is kind of the trick. And we're going to hop over to the Metastock platform here in a second and take a look at this in current charts. But the trick is to identify the buy, when the band's overextended and when to jump in. Okay, and there's a number of ways we can do that. We can use candlestick patterns. We can use support levels, which is one of the things that I look for. I look for price to sell off into a major support level. But I've actually spent more than a decade in hundreds of thousands, if not thousands of hours trying to determine when momentum shifting and a new trend is starting. And I've actually developed an algorithm behind that methodology that I actually use outside of the slingshot setup. But I've discovered that when I apply it to the slingshot setup, it's an incredible powerhouse combination when we use them together. And it gives us very accurate buy and sell signals near the outer channels of the Bollinger Bands. And often can do so up to 3 candles in advance of the moon. Right. So I'll just show you that real quick here on the Metastock platform. So I've just got a chart of, hopefully you guys can see the chart here. I've got a chart of the QQQ, the NASDAQ 100 ETF. Just pulled up a daily chart and applied the Bollinger Bands. Now I've also got my trade trend indicator on here, which I'm going to talk to you guys a little bit about here in a second. But those are the red and green diamonds and arrows that you see. Okay, but I want you just to kind of see what the slingshot setup looks like, because we actually just had one, a nice one in December. Okay, let me see if I can get drawing tool up here to show you guys. Okay, so so a red diamond, right, is the trade trend algorithm noticed that there's a pending market downturn. Okay, if there's follow through below the warning candle, right, we'll get a confirmation arrow that prints. So the algorithm identifies an entry price to the downside on a sell signal, and if that price is reached, then it's a confirmed signal, and we'll get a follow-up arrow, right? So what happened right here? Well, if we look at the Bollinger Bands, they're horizontal and narrow. So we have volatility contraction, and it followed an uptrend, right? A volatility expansion. Now, this is the start of a slingshot setup. So this can actually warn me of, especially when I look at the confluence between the trade trend sell signal and price trailing the lower volatility band, that there's a high likelihood of a sell-off. And of course, that occurred. Now, the sell-off, is basically in process in December. So how do I know when it's likely to reverse direction? Well, I want to look for a major support level, which we had right around 260 on the Qs. And then I want to wait for a trade trend buy signal, right? And that's the green diamond that you see here in late December. Okay. And then if I'm going to get into the market to the long side, I wait for follow through into the forecasted price level, which actually can be found. I'll show you guys how to find that in the Metastock platform, but it gives it to you. And there's our confirmation here, right, on the next trading day. Okay, so we have the sell-off, and then what happens? Price goes right back up. In fact, it far exceeded, but it went right back up to the initial volatility breakout. Right, so that was good for a good 10, 15 points if you just got out where the slingshot started. Another aspect of the slingshot that's kind of beyond the scope of today's topic and the time that we have together is to also look for breakouts of the initial volatility expansion, because those can lead to extended moves. And so I'll often use a trailing stop level in those types of circumstances, or wait for another buy signal from trade trend. Okay, but that's what that's an example of the slingshot. And again, you can find these all over the place. And clear these out. Right, so it's a great exercise to just go back on your chart and look for these, right? So here's another great one. This one, took a little bit of time to come back, but there's our buy signal down at the bottom in our support level, and now we're on our way back up to the initial volatility expansion, right? And it works in both directions. So, here was a volatility expansion to the upside, right? So here's a breakout volatility expansion to the upside. And these are tradable as well. We actually got a buy signal from our trade trend algorithm with confirmation. There's the volatility expansion. Then we get a sell signal. I mean, look at the incredible accuracy of this with a confirmation of the triggered entry. And where did price go? Right back down to the volatility expansion, right? So that was a short setup, right? Just kind of works the opposite of the long. Here's another nice bullish slingshot, right? There's the volatility expansion. There was the rebound. Okay. In fact, on the short signal, trade trend algorithm got us out right at the bottom of that slingshot expansion. All right, so let's talk a little bit about, let me clear these out here, a little bit about trade trend now. So trade trend is an algorithm that we developed in partnership with Metastock that combines momentum studies, volatility studies, and price action setups that can accurately identify buy and sell signals at the outer bands of the Bollinger Bands. So it's a great indicator to use with the slingshot setup that I've taught you guys today on our session. So it provides accurate buy signals at the bottom of the Slingshot. And it does that again with a proprietary blend of momentum indicators that can not just identify when there's excess supply in the market and demand starting to come in, but also when there's oversupply, right? And markets are vulnerable to a sell-off. And it can help us predict short-term and long-term trends with quite astounding accuracy on any market, stocks, ETFs, futures, Forex. We can use the Metastock platform to screen for these signals in just a matter of seconds on any time frame. We can also use the incredible robust backtesting tool that Metastock provides to see how the signals work historically. These signals don't repaint. They don't disappear once they've shown up on your chart. And so we can actually go back and backtest them. A lot of our members, including myself, use these signals to trade options. A lot of option strategies, especially directional option strategies, have a very time critical component, right? We have to be not just right with our directional forecast, but on our timing, right? So trade trend is also designed to work in tandem with option strategies to help us with our timing and remove a lot of the guesswork from our trading. Now I mentioned, I'm going to show you kind of a little, and I kind of alluded to this on the chart we just looked at, a little trick to help eliminate a lot of bad trades. So we all get into bad trades. They're inevitable. We're going to have some losers here and there, right? But we want to minimize those because they're our biggest overhead as traders and investors. So this is something that we've actually programmed into the trade trend algorithm. And that is to not just jump into the market when we get a signal with a market or a limit order, but for a long signal, a buy signal, we actually want to use a buy stop or a buy stop limit order and wait for price to follow through in the anticipated direction. Or for a bearish signal, a short setup, we want to use a sell stop order to enter short trades. And that can actually help us filter out, the less likely trades. So you'll notice that we do get signals that don't trigger because there's no confirmation arrow. And so it can help us stay out of bad trades. Even if the algorithm eventually is right, it may not have been right at the right time, right? So here, for example, was a buy signal, and that was a great signal. In hindsight, the market moved way up after the buy signal, but the signals are only good for 3 candles. If we don't get the follow through, then we wait for the next one. So you'll notice that there was no actual follow through above the candle, which is where we place our buy stop order, right? So you can actually see that in the platform by going to the expert commentary, and it's going to give you the stop order for every signal. So there's no guessing. So if you get a buy or a sell signal, it's going to explain where to place your buy stop or your sell stop order. And so, for instance, if I go back to this December 30th buy signal in the context of the Slingshot setup, you'll see that on the 30th, the criteria for a buy setup had occurred, and the suggested entry price is at 266.50. Well, that's just above the closing price from that day, from December 30th. So we would use a buy stop limit order only if the market trades up into that level, which of course occurred. And we see that the very next trading day, we get the confirmed entry on January 3rd, right? And so triggered signal, there you go. And then once the signal triggers, we get full instructions from the expert commentary on how to manage that trade as well. Right, so that's how we've incorporated the buy stop and sell stop approach to entering long and short trades respectively with the trade trend algorithm. Now, I told you guys that I actually used this setup, the strategy, the Slingshot, and the trade trend algorithm in my own account. So I think it's important to back up what I preach with real money. So I'll give you some real money examples of how I've used this. And these are from the COVID crash back in early 2020. So I identified that the initiation of that Slingshot setup that we saw back in 2020 and that I showed you guys on the charts. And I actually traded it to the downside in February when the markets were selling off. I did it relatively conservatively. You can see that I was only trading, 1, 2, 3 contracts at the time because I knew that there was a lot of volatility in the markets, but I wanted to play it to the downside when other people were panicking. So I pulled a statement from my TD Ameritrade brokerage account at the end of the month, February 2020, and was actually able to make over $13,000 by using the Slingshot setup with the trade trend algorithm. I got the trade trend sell signal, and I saw the Slingshot setup and the volatility expansion occurring to the downside. And I knew it was just a matter of time before the markets hit bottom and reversed. And that's where there's the real profit potential lies. So in March, I got the buy signal from trade trend. We sold off into a support level. We just had a beautiful Slingshot setup. The markets are down over 30%. So I start to jump in with more positions, still relatively small position sizing, but I'm putting on more positions. So by the end of March 2020, I booked over $27,000 in profits on very small positions. You can see that my position size was just 1, 2, or 3 contracts, right? But I was adding more positions to the long side because I was playing the Slingshot setup with the trade trend buy signal, right? So a lot of people got killed back in early 2020. It was a rough time. 30% market sell-off is hard to survive, right? If you don't know how to spot it and how to play the rebound. But at the end of February and March, I booked over $40,000 in profits. Again, this isn't to brag, it's just to show you that this actually works if you apply it in the way that I'm teaching you. So I can't guarantee that you're gonna make money with it. I can't guarantee that you're gonna make any amount of money. But I can show you that I've used this personally in the markets, the exact strategy that I've taught using the exact indicators, the Bollinger Bands and the trade trend signals on the Metastock platform that worked in the real markets, okay? So again, this can be applied to any market, any time frame, any size account, and it provides predictive buy and sell signals before the move occurs. So the algorithm is designed to be forward-looking and not lagging. And that's why you get the buy or sell warning signal up to 3 candles in advance of a potential move, right? So you get the green or the red diamond up to 3 candles. So in the context of a daily chart, up to 3 days in advance. Okay, if you're trading intraday, let's say off a 5-minute chart, you get up to 15 minutes of advance notice of a forecasted move. And trade trend, again, doesn't repaint, so you can go back and look at all the past signals, has given us buy and sell signals on every Slingshot trade, going back to the dawn of the market. Okay, so looking at the flash crash of August 2015, right? We're in low volatility, sideways ranging market, prices bouncing between upper and lower band until mid-August, right? 2015, we get the flash crash. Markets open way down, and then over the course of the next few days, just tank. But that's a beautiful Slingshot setup and a beautiful buy signal on the double bottom before the markets rebound from trade trend. The 08 mortgage crisis, right? Things are looking great. The housing market's on fire until it's not, right? We get the subprime crisis, and all of a sudden the markets figure out that we've got a bunch of default going on in the housing market, and 08, starting in May, the markets lose over 50% of their value in just a matter of months. We got a sell signal from trade trend back in May when other traders are becoming overly exuberant, right? They have fear of missing out. The markets are on fire, right? But they sell off, lose more than 50%. The buy signal comes in late November, and then 09 comes and we get the rebound up to the initial volatility breakout. The 2000.com bubble, right? Similar situation. Markets are on fire, new all-time highs, and then the crash comes, right? And mid-September, we finally get a sell-off and a major support. We get a buy signal from trade trend, and markets ultimately rebounded. Of course, we're decades later at that point, and they've made far greater all-time highs in the coming years. So virtually every system that you try will produce winning trades at some point, right? They're also going to produce losing trades. But the problem is that they may not keep you out of the market when conditions aren't favorable. And if you're like me, when I first started trading, you have some successful trades, but then you end up giving back your profits on the losing trades. And that's a huge frustration. If you don't, if you follow the herd, right? If you trade with everybody else, this is likely going to be the outcome. Which is why I wanted to share the Slingshot setup with you guys today in a contrarian way to approach the markets using 2 incredible indicators in tandem. Okay, again, here's more real money proof. Using the Slingshot, I use it in the futures markets. Okay, just trading a few futures contracts, the E-mini S&P, NASDAQ, and the VIX. Okay, I did over $28,000 in profits in a day with over $122,000 in open profit, over $13,800 profit in a day with over $150,000 in open profit on just 3 futures contracts. So when you hit these, they can have incredible potential. Okay, and these are real money results from my personal account. They're not hypothetical. They're not back tested. This is actual real money. So my promise to you guys today for joining me, first of all, I want to thank all of you for being here. I want to help you guys have days like this and be successful. So I'm going to give you access to a tool that lets you copy my signals. Now, you can't copy my actual trades, of course, but you can use my trade signals and my Slingshot setup and actually use the same signals that I'm using personally in the markets. These are the exact signals that I trade off of. So I want to invite you to join me how to discover how I make consistent income in the markets day after day, week after week. Yes, I have losers, but over the long term, I need to have an edge. I need to make money. And this is one of the ways that I do that. So I reveal every one of my special techniques and indicators that make profits like this possible, and I don't hold anything back. So I'm going to give you all the exact tools that I use. That includes Trade Trend, which you'll get on Metastock for an entire year. And you can apply it again to any market, stocks, futures, Forex. I use it as well to make my options trading decisions. You get 3 months of the Metastock platform. If you don't already have it, you get it with the Zenith data. You get exact entry and exit signals. You get live interactive trade sessions with me. I hold those every Tuesday evening at 7 p.m. Eastern. You get members area access for all the replays and recorded training sessions. So I don't just give you the tools and I've taught you one of my strategies today. I have many more that I teach on my weekly sessions, but I don't just give them to you and say good luck. I do, stick with you week after week and help coach you to become successful. So you get that from me, again, every Tuesday at 7 p.m. Eastern. We also teach a lot of other trade management aspects of trading and investing, right? So trade adjustments, we get on a lot of that, the nitty gritty on our Tuesday sessions. And I also go through some of the current symbols and tickers that I'm, trading at the moment. So you get a lot in addition to just the strategy, and you get the indicator, right? So the indicator is going to give you what you need to eliminate the guesswork in your trading. Okay, so you get all of the signals using the proprietary blend of momentum and volatility studies to help you predict trends in any market, any time frame. You can again back test these on the Metastock platform, get all the different trade metrics and everything to make a determination of whether you want to take a signal or you can use it if you're an options trader along with your option strategies to help make more timely and accurate options trading decisions, and hopefully help eliminate the guesswork involved in trading, cut the learning curve, and start trading with more consistency and confidence. So I want to invite you guys to try out the Trade Trend package today for taking part in the Metastock event. Again, you get 12 months of Trade Trend on the Metastock platform. Normally that retails for $1,499. You get my weekly live trade sessions, which normally retail for $550. You get personal coaching from me on our live sessions. Normally that retails for $1,997. You get exclusive invitation-only Facebook group access. We have around 900 members who use our indicators and strategies in our private Facebook group. If you do use Facebook, you can join that, get access, and interact with our community. Normally that retails for $199. We're going to also teach you a lot of other strategies, including how to adjust losing trades. So you're also going to get all the course information and online education that goes along with that, which is retailed at $900. And ultimately, I want to invite you guys to learn to trade with more consistency and confidence, which we just really can't put a price on that, obviously, right? I'm going to throw in a couple bonuses. Not only am I going to give you my Trade Trend indicator on Metastock, but I'm going to give you access to my top 2 weekly Trade Trend picks. In fact, I'll be sending one out tonight. So every Monday evening, I run all my scans and run through all the opportunities for the day, and I send you my top 2 picks every Monday. So it's a great supplement if you're just getting started out with the indicator to see how I'm using it. And I throw out a couple of trade alerts and also provide a supplemental option strategy to go along with that. Normally that service, if you just want the 2 weekly alerts, you're going to get 104 alerts per year. That retails for $997, but I'm going to throw that in as a bonus as well. And then bonus number 2 is my latest ebook, How to Create Risk-Free Trades, which is a great supplement to the strategy that I taught you in the Trade Trend Indicator, and basically runs through a lot of the psychology that we've talked about and money management aspects of trading that can help you mitigate risk in your trading, and even in some cases eliminates a degree of risk using different money management techniques. So it's a great supplement. Normally retails for $97. So really valuable package I'm throwing out today for the MetaStock event. Retail value to buy all these from us individually is over $5,000. We're going to take 80% off the retail price, break it down to less than $3 a day. You get it for $997 for the entire year. And if you want to do that, all you have to do is go to altostrading.com/metastock, and you can be one of the 25. And we do limit the number of seats so that we can give you the white glove treatment. MetaStock does the same. They have incredible white glove treatment to help you guys get set up on the platform, get your indicator up and running. So obviously it takes some manpower and time for us to make sure everybody is successful. And as much as we'd love to take unlimited members, we're not going to do that to sacrifice service. So we do limit that to 25 seats. Once those are gone, you can still get everything here that you see on your screen, but it will be at the retail price of $5,145. So if you want the 80% off, which again breaks down to less than $3 a day, you can do that by going to altostrading.com/metastock. It looks like I'm right up on my time limit, but I'll pass it over to Jeff, and if there are any questions that I can answer, or if there's any time left, I'd be happy to do that. Again, altostrading.com/metastock.
Thank you, Jeff. The only question we had is about the recording of the seminar, and so I can answer that.
Sure.
Let's see. I do want to actually type in this email address or this web address real quick. Okay, for the recording, it will be available. We're making it available. It's going to be sent to you automatically within about an hour after we're done today. And it's on YouTube right now. We're simulcasting it to YouTube. So I also sent the link around that as well. altostrading.com/metastock for that offer. Thank you again, Jeff. I appreciate your coming in today.
Great to be here. Thanks for having me.
I'm going to spend, I know we're just 1 minute over. I'm going to spend a really quick minute showing how easy it is to scan. Thank you again, Jeff. I appreciate your coming in. Okay. All right, let's go ahead and do this. Okay. Yes. Okay. And let me just make myself the presenter. And we are right up on the hour, but I do want to show this real quick. And so let me go ahead and kind of get this out of the way. And one of the things I love about MetaStock is the scanning engine. I think it does such a great job of actually scanning and showing you where all the opportunities exist. Here's a chart of the Dow Industrial Average. If we're looking at it, we did have a setup just a couple of days ago. We had a trigger here, and we'll see kind of how this market shakes out. But one of the things I think we do best, or one of the biggest things that you can do in MetaStock is find trading signals. So if I'm here and I'm looking for an opportunity, and let's say that I want to find anything that has an optionable, or any optionable stocks that has either like a setup or a verified confirmed entry with Trade Trend, I have the ability to do that. So I just pulled up our scanning engine right here. I've got Trade Trend long setups selected. There's also long signals, short setups, short signals. You can do any of those scans. So you can scan whatever instruments that you want. For the purpose of just showing it to you, I just selected the Trade Trend long setups, and I have it set to just scan the S&P 500. So you go ahead and start that. As it's kind of running through that, I just want to kind of explain to you, no matter where you're at, if you're interested in doing this with India, you can do this with Indian stocks, London stocks, Australian stocks. With the data that we get from Refinitiv, we can basically give you data from just about anywhere in the world. You can see how fast it's going through here. Keep in mind, not only am I scanning the S&P 500 during the market, I'm also broadcasting video and audio to all of you guys, and it's almost done. So out of those 500 stocks that we ran the scan against, about 400 of them were rejected. And the thing I love about Metastock is we can focus on the ones that have an opportunity. So any of them that are in this column here, I could save that off as a list. I could go look at them. But any of the ones that I actually just scanned on this list should have confirmed markets. And I really do think that that's one of the things that's helped Metastock become one of the highest rated software platforms in its category for 30 years straight. Okay, so that's a Jeff Tompkins trade trend. It's designed to fit on top of it. In real time, it can give you signals, setups, triggers, exits. It'll give you detailed commentary, which will cover commentary and the alerts and all that, how that all works in a little bit, maybe as we go along today. The full market scanning, it does have system testing, so you can test it to see how well it works. And of course, it has a comprehensive user manual. So Tompkins had talked about how you can get the package that includes about $5,000 of value. You can get that at altos.com/metastock, altostrading.com/metastock. If you do have questions about it too, you can give us a call at 800-882-3040. We do have a number of really good speakers today, and one of the things that we're going to offer is like 3 months of trade trend, an add-on called GoNoGo Complete, some training that we recorded with Oscar Carboni, 3 months of Metastock, 2 years, like a free 2-year included 2-year subscription to Stocks and Commodities magazine, and Unleash the Power of Metastock. So you can get actually this package that includes 3 months of trade trend, the GoNoGo Complete, Oscar Carboni's training, and you can do it at metastock.com/summit deal. And again, you can do that, or you can do the year package that Jeff also offered. Either way, give us a call, 800-882-3040, or you can go to metastock.com/sales-chat. So there you go. Fausto says he is done with his hair. He's ready to go. So let's go ahead and get him started. Actually, we are a little bit late. Let's say really quickly, thank you to Stocks and Commodities again for sponsoring the event. Again, if you are watching us on YouTube today, either you can go to metastock.com/trader summit. Just for registering, you'll have the ability to get not only a free month of Stocks and Commodities, but any of the other bonuses that are being offered by any of the presenters. So if you do spend $300 or more today with Metastock, we're actually going to give you a complimentary 2-year subscription as well. So our next presenter, and we're going to start you just a few minutes late, Fausto. I'm sorry. But our next presenter is a good friend of mine that we've been working with for a long time. I remember we used to see him a lot at the trade shows. I remember that when one of his kids was born, he actually did a Metastock webinar either right before or right after that. He's one of the most dedicated presenters out there. Fausto, I'm never going to stop telling that story.
That's all right. You keep telling about it. I love it when you even talk about it. But yeah, it was actually before. It wasn't after.
Yeah, I think
that's what made it worse.
Yeah, after might have been. Yeah, but everything's well. I assume you're still married.
Let me just share my screen really quick. Does everybody see that okay? Yeah, we can.
Yeah, I can see it. Now, did you want to turn on your camera? Yes, it's on. I can see you. Yeah, I can see you.
That's good. That's good.
All right. It's all yours, Fausto. Let's go.
All right. Well, thanks for everyone for coming, and I appreciate it. And thanks, Jeff. You always run a great event when it comes here at Metastock. Let me just do a quick audio check. Can everyone hear loud and clear? Just give me a chat, because I'm going to be asking a lot of questions. And listen, the whole point about being here is not just to hear us sit there and talk and teach you things like what makes us different than everyone else, but the goal is that you really want to know what we're doing and why we're doing it. So just give me just a hello. I see we got over 100 people in here. Just want to just get a chat back, make sure everyone's paying attention, because you know what? You should not be trading. If you're trading, you shouldn't be here. You should be focusing on what we're covering. All right, there we go. All right, good to see. All right, good. All right, so anyway, the funny part is Jeff Thompson just came on to talk about breakouts. I'm also going to talk about breakouts too, but I'm going to teach you a little bit more of a different type of breakout that focus on. It was actually a coincidence that he was doing the same thing. But before we get started, obviously, quick little risk disclosure. Listen, I'm not going to make any guarantees this works. I'm not making any promises, but just want to let everybody know that trading, obviously, is different from trader to trader. So please be very smart before you go out there and make an investment out there. So anyway, this is what we're going to talk about, what we're going to learn. Basically, we're going to talk about how to scan the markets. You can actually use the MetaStock platform, how to do it. There's a lot of platforms out there that pretty much the same, but it's not just having a great platform on it. It's also learning how to stop losing money. That's what we're going to focus on. I'm also going to talk about how most people blow up their accounts. I'm the type of person that really wants to teach you all not how to make money, because the winners take care of themselves. Everybody likes to talk about winners. Does anybody see anybody talk about losers? Because that's really why we're here. We don't want to lose money in the market. We're going to focus on that. I'm also going to show you how to follow the big buyers and sellers. So I'm not going to focus on the past. I'm going to teach you how to read the future, and that's going to be awesome. I'm also going to talk about how to minimize your risk and a live trading room. So at the end of this presentation, I'm going to invite every single one of you to come in and watch everything we talk about for free. And the big thing is this. I don't want you to judge and look at what I'm buying or selling, or all my instructors that are in there, but I want you to look at the other traders and see if they can think for themselves, because that's the big thing you got to focus on. Can I do it? Now, over the years, I've traveled around the world. I've been the 12-time champion at trader shows and money shows. And like I said, that was a long time ago. I don't really care for it anymore, because you know what? That doesn't really do anything for you. You need to know if I can actually teach you how to do it and how to figure it out yourself. And, and I've been doing this for over 30 years. I'm actually one of the original day traders that started one of the first schools. Listen, I know Jeff ever since I've been in the business. We go way back to the money show. And let me tell you, we hit it off. Ever since then, we've always done events together. We work together. And listen, that's what separates and helps you as a trader, to make sure you surround yourself with good traders, because that's what really helps out. Now, I'm also at the end of the presentation, I'm going to give you guys my free book. Now, you can go to Amazon. You can pay me $47 for it, or just stick around. I'm going to teach you how to register for it. I'm going to give it to you for free. It's a very good, fast read. I'm not going to bombard you to watch it for 2-3 days. You're going to like it, and I'm going to throw that in at the end. So my question to everyone here is this. How long have you been trading for? Okay. I've been doing as long as me, 30 years. And how long is Jeff? Did you just start out? Is it, you've been doing this for a week, doing it for several months? I mean, tell me, how long have you been doing this for? Because that really has a lot to do on your experience when it comes to trading. Okay. Like I said, that's just helps me out and helps you out. All right. So we got people from all different types of time zones. All right. Perfect. So let's just jump right into it then. Has the market hit a bottom? I mean, that's what everyone's always worried about. Yes, no, I'm not sure. Is it like you see what all the stocks are doing? We know that. What are we having going on this weekend? You got Amazon coming to earnings. You got the Fed talking tomorrow. You're like, what am I going to do? I mean, some people complaining that last year was not a good year. So either way, it's a clear traders. It's a much better opportunity. Just basically knowing how to trade what's moving over the course of the day, which will trick into a swing trade and a day trade. Now, I just out of curiosity, did anyone see this stock Shop? Anyone see the stock that traded this week? Shopify went from, you could see it here, the stock literally ran from like $44, once the market opened up, and it shot up to $48. I mean, that's a pretty substantial move. Talking $4 on 1,000 shares, up to like 4,000. You're talking about like almost $1 million salary you could do that every day. Now, the question is, okay, that's one. What about AI? Did you see AI on Friday? Great mover. Like some of you like, never traded AI. I didn't even think of it. What happened with it? What makes us better than Facebook or Google? Well, AI, a $15 stock at 9:30 this morning, literally ran in 1 hour, ran to $16.50, and then shot up to $18. Here's another one. Probably familiar with Wayfair. Another big run up, 56 to 65. Now you're probably asking, and like Carvana's also, it's about big today. Did you guys see Carvana today? Another big run up. I mean, if you've been following us on Facebook and Twitter and YouTube, I mean, listen, we share all our watch list so you can see what we're looking at. Big gainer today. I think it hit almost 9. I think if I'm correctly, right? I think it hit 9 today, Carvana. Way to go. Oh my God, it hit the 10. Look at this thing. Yeah, this thing run up. Beautiful. That's actually Friday, and that's actually today. Ran to 1080. Wow, that's awesome. Very excited. All right. So the point that you probably need to figure out is that, well, who's running these things up? And how do I know it's going to continue to go higher? And what makes them go higher? Because everyone likes to brag and talk about woulda, coulda, shoulda. This is where I was at. Like, I'm not here to talk about that. You need to see is that could Fausto and Josh and Rich and all the instructors at Cybertrade University, can they teach you how to think for yourself? But also, is it ready to sell? Is it too late to jump in? Some of you might know that this stock was like a $350 stock. It was down to $4. You know, it's like, is it too late? Listen, there's a lot of stocks like that. But you have to know how to follow the orders. Now, to tell you a little bit about myself, for some of you who don't know who I am, like I said, I've been doing this for 30 years. I feel that it's time to give back everyone here how to think for themselves, because like Jeff and, you know, Gibby, everyone and the staff at Metastock, we do these events because we hate seeing people lose money. We want to give you the tools how to think for yourself, because I know we're not going to go to a stockbroker or a mutual fund and let them, you know, do what we could just do ourselves, because that's basically what they're doing. So you got to know how to play the game, because that's all it is. Now, it doesn't need to be as complicated as some of you guys make it to be, but you really want to know what's driving it up, what's making them go up, and like anything else, just follow the money. So before you really get into the meat potatoes of my actual trading strategy, you know, I want to kind of ask a couple of questions here. First of all, some people always ask me, how do you find these stocks before they make a big move? Well, listen, go back and just register on our YouTube channel and our Twitter feed, and you can go back and you can see all these stocks, and you can look at the dates and you can watch it. Now, just to let you know, we're not in the stock picking business. We don't tell anybody what to buy and sell. First of all, it's illegal unless you're registered. We don't go around there and showing you, you know, like I don't like bragging and talking about how much money we made or anything like that. But I think a lot of you need to realize that there's always a new adventure every day, and you just need to know where. Like, I don't know about you, but like I'm a big fisherman. I love fishing. I live here in Long Island, New York. I'm like 30 minutes outside Manhattan. I learned from some of the best traders. But one thing that prevented me from leaving Long Island is I love to fish. And if anyone, you have any fishermen out there, you know, or maybe some people like, I go fish, I can't catch anything. Well, you know what your problem is? Maybe you don't have a good captain. You know what? Because if anyone knows anyone in the business, they're like, oh yeah, I'll tell you exactly where the fish are. I'll tell you what time they're there, and I'll tell you what bait to use. And you know what? You might miss the big ones, but if you keep going there, they're there. You know, because that's where they basically, you know, they live. It's the same thing like trading. They're there. You just don't know where to look, and you just don't know which one to trade. And that's what I'm going to kind of teach you in the next few moments. Now, let's talk about the scanner. The scanner on the Metastock platform, I mean, basically I don't have a crystal ball, okay? And I'm not going to pretend I even have one. Basically, what we have is we just look at the big percentage gainers and losers. That's it. We only want to trade stocks that have good volatility in it, things that are moving. Listen, you can keep the TV station on all day long. You can look at Benzinga. You can look at the news feeds, Bloomberg, CNBC, whatever you're into, Fox Business, whatever it is. But unless there's volatility, you're not going to make any money in the market. So just working off the scanner is going to help you. Now, this is the problem. There's a lot of stocks that are moving today. Now, your question is, how do I know which one is going to give me the least amount of risk with the high amount of reward? And, you know, that's what I'm going to invite all of you to come into my trading room, because I'm going to show you how to do that. There are thousands of stocks that trade every day. There's only about 5 of them that are very active right now. And you know what? Later this afternoon, there's going to be another 5. And tomorrow there'll be another 5. There's always new stocks. But remember, if there's no volatility, if the stock's not moving, you're not going to make any money. But the big thing, which is about half the failure rate in today's markets, is if you trade something that is what we call not tradable, meaning the spread's big and everything else, you're going to get yourself in trouble. And that is, once again, teaching you how to stop losing money. Now, early bird gets the money. Now, what we do here I don't know about what time you guys start trading, but to me, trading is like a Jimmy Buffett. It's like going to the buffet. There's always going to be food out there, no matter what time you come on. And obviously, there's a time when they take the food away. So, but there are better times than others when you get the good food and when you get the bad food and when you get the food that's sitting there and when a new one's going to come out. So timing during the day is very, very critical. I mean, we trade at the most volatile times of the market. I like personally pre-market because I get in before everybody else does. I also like to trade the first hour. And I like to trade the last hour. So I do a lot of pre-market trading, and a lot of you are going to see that. We're going to invite all of you to come in there, and you're going to see what it's like to be in what it's like. Because some people are like, how do you pre-market? I mean, my broker doesn't let me. There's a reason for the way they do that, okay? Because they don't want to tell you what they're doing. That's one of the big things. Now, the other problem that people have is they want to know what makes these stocks break out. What makes a stock go higher than the next stock, or like how would I have had a game plan knowing what does that? Well, there's not really a big strategy behind this. It's all about consolidation. Okay. I think we all could agree to this question. I'm going to ask it again. What drives a stock up and down? Buyers and sellers. That's it. But and that's about 70% of the movement, that there are people out there that mainly control the market. Think how much smarter and better trading decisions you would make if you were able to see those buyers and sellers. Well, you're in good news. I'm going to show you. Okay. So like most traders, we look at the past historical charting. We look at these indicators, price action. Now, as a day trader, we don't really use as many indicators as most other people do because, the problem with the indicator on an hour type of style is that by the time the indicator kicks in, it could be a little delayed. So we kind of focus a little bit more on other tools. Now, you're going to notice you have a lot of great speakers in here, and you should listen to all of them. Now, this is basically the way I look at it. You should try a little bit of everyone's stuff and see what's your style. Personally, I don't like to invest. I like to sleep at night. I like to just make my money for the day. I could spend more time with my family. I could work on my home living channel that I have running, and raise chickens and cooking and spend time with my family and stuff. So, but I don't want to get bothered. Some people like that, So, but you should see a little bit of everyone how we do it. Now, let's go back and let's talk about a stock really quick here. And let's talk about, Carnival, Norwegian Cruise Line. Okay. And you can see how the stock is basically trending up. Now, you see the big difference in charts where now you're starting to add all these indicators and stuff. Now, to me, as a day trader, that's a little confusing because it's hard to see when all these indicators and the dots get dotted and the T's get crossed, and the Halley's Comet crosses with the other one. So it becomes a little bit of a distraction. So what we need to focus on is not the past. I want to teach you how to read the future. Okay. Now, how can we look at the future? Because that sounds pretty cool, right? It's like, wow, no one ever taught me about that. Well, the answer first is in the question. What makes a stock move in the first place? So, anyone there alive? Anyone listening? Did I lose anybody yet? Can you put in the chat room and just tell me what makes a stock move in the first place? That's all I ask. Bob, I see Bob answered a lot of questions. Neil, Sudden. What about you, Todd? What about you, Tan? Listen, being a good trader, you have to talk. Okay, if you don't talk, you're not going to be able to know if you're right and wrong. So if you all said this and said supply and demand, well, guess what? You just got partial credit. That's really what you got, partial. Now, the answer is big orders. That's what it comes down to. You got to follow the big orders, which what we call here at Cyber Trade University, we call them iceberg orders. Now, look at the future. What do we need to find the big orders? Basically, what we need to focus on is a couple of different vehicles like level 2, level 3, and level 4. Now, level 2, I know a lot of brokerage firms offer it. It's been outdated since the 90s. But, listen, just give you a little breakdown of what we got going on over here. Let me just write this down. These are your buyers. These are your sellers. And you got 3 columns. 1, 2, 3, 1, 2, 3. So the first column is a 4-letter abbreviation of the brokerage firm's name. Second column is the price that they want to buy for. And the third column is how many shares. Whoever wants to buy the stock for the most is up on top. Whoever wants to buy for less money is down at the bottom. So basically what you're looking at is just everyone negotiating what they want to buy and sell the stock for. Okay? Now, the issue with that is it only shows you a fraction of the orders. For example, CHIP, PT, you're just seeing what the stock is trading at the New York Stock Exchange, the NASDAQ Exchange, but it doesn't show you every single order that's trading out there, right? So let me move on. Let me show you something a little bit different. We're going to talk about something called level 3 and level 4, okay? Now, let's hop over with level 3. Now, I don't know if anyone here knows this, but I'm a regular guest at NASDAQ. NASDAQ actually hires me to even, teach their own employees how to work on this. I'm actually working with their designers right now how to redesign their new book viewer on their platform. But here's a photograph of me at the New York Stock Exchange, at the NASDAQ Exchange, doing demonstrations. Now, you can watch all these videos. They're on NASDAQ. You could also watch all these videos on our YouTube channel and so on. But the reason why I'm really stressing this is because NASDAQ wants you to know how to trade. Listen, some people don't even know what the bid and offer is. Now, when you think about it, now listen, I'm not going to hold it against you. And I understand people think things a little bit advanced, but if you don't know how the NASDAQ actually works, what the hell are all those indicators and charts going to do for you? What the hell are all those stocks and a big watch list are going to work for you? You have to understand how it works. So let me kind of explain to you how we use this. What you're looking at right now, which is absolutely mind-boggling, you have a seat on the exchange. Now, when I started back in the 90s, we had to pay $1 million to have a seat on the exchange. Millions, not millions, okay? Now, they got rid of that. Everything is electronic. They found a way that you don't have to come to New York and get a job and work on the floor. Now you have access to have a seat and you could trade on the exchange. Isn't that awesome? I mean, think about it. Wow. Now, the next question you're probably asking, what does that cost? Well, to have a seat on the NASDAQ exchange costs you $15. It's like a no-brainer. Now, the question you're probably also asking is what am I getting out of it? Like, okay, so what am I looking at? You're like, wow, that's pretty cool. Like, okay, well, let me show you how things work. Buyer orders equal support. Sell orders equal resistance. Now, you know how you guys look for support and resistance? I'm going to show you what makes that support and what makes that resistance. So let's look at a stock called AMD, okay? Now, here's a stock that's trending down. Stock's trending down, it's going lower, all right? Now, the first thing everybody here asks is like, my God, I just bought the stock at 720. It's at 76. I'm losing money. Do I sell it? Do I get out? Well, the question you have to look at is, where's the future? Is there buyers anywhere? Where's the next buyers? So we're going to hop over here and look at we're going to go to NASDAQ. We're going to go to the exchange. And we're going to look over here on the left-hand side. We're going to look for buyers because remember, buyers make support. And when you look over here on the left and you work your way down from 75.66, let me get my little spotter here so you guys can follow along. So here you had 75.66 and you work down, you got 600 shares. 1,000, 5,000, 600. When you get all the way down to $75.40, okay, you'll see that there's an 80,000 share buyer out there. Now, when you look at the buyers and sellers, there's buyers and sellers at every single price, but there you have a substantial buyer, okay? Now, once again, what makes stocks go up and go down? Buyers and sellers. We have a stock that's trending down. What are we looking for? Where is everyone else in this world looking to buy it? And right there is what we call the next biggest buyer. Now, when I change the slide here, and let me show you what we got going on, you'll notice that AMD, that falling knife that you're looking at, that you're losing, came down to that buyer at $75.40, hit him. He obviously was a buyer and drove that stock from 75.40 back up to 77. So as much as you might think you're probably going to have a loser, that loser could convert into a winner. Why? Because of buyers and sellers. Now, let's look at a stock, Coinbase, which, in the past week, what happened with this stock. Now, Coinbase had a nice little run. It was up about 5%. Started around 51, was at 53 in a matter of, 20 minutes. It's pretty substantial run up right there. Like, wow, that's pretty cool. That's a lot of money, right? But your question you're asking yourself is, okay, do I take the profit now? Is it going to continue to go higher? I know Coinbase, it was a $400 stock at one point. Now, the only way to answer that question is in the question. Where are the other sellers? So when we go back to the exchange, we'll notice, oh, you know what? I'm looking on the right. I see that there's sell orders out there starting all the way at this price of, whatever the spread is, but at 53.80, 600, 500. Oh, what do you know? We got a 22,000 share seller at $53. Now, you might not think that might not be a lot, but when you're looking at the exchange and everyone's looking to buy 100, 200, and you see 22,000, that's almost like 200 times more than the average. So I don't know about you, but if I was interested and I own the stock and I'm making money on it, I want to know, okay, where's everyone else selling it? And there's your order right there. And guess what? If you didn't have that game plan, and now we start looking into the past, because you don't look at the future, look where we're at right now. We just went from 53.50 all the way down to 52. Now, dumb question. Did I lose anybody yet? I hope not, because what you're witnessing is the future of orders that are out there that a lot of you here are not using. Now, by the way, just to let everybody know, you could do this for options. You could do this for Forex. You could do this for swing trading. You could do this for everything, okay? Personally, I only trade the stock market. That's just how I was born and raised living here in New York. If I was in Chicago, I'd probably be a big options trader. But being in New York, we're very well known in the stock market. Plus, I don't know about you, but I like the stock market because it's just, you know what, they talk about it every day. You turn on the news or you watch the paper, even if you're anti-paper or anti-news. That's what I talk about all the time. Politics, whatever it is. So all that has to do with the stock market. So let's talk about level 4 now. Now, if you thought that was pretty cool, wait till you look at this. Now, we basically, there are tools out there, which I'll invite all of you to come in the trading room, where you could see it more of a heat map. And not only are you seeing what's on the NASDAQ, but now you're going to aggregate with the New York Stock Exchange, other ECNs. So instead of like just focusing on one exchange, how about looking at all of them and putting them all together? And then not only that, but seeing how long they've been out there for. So here you have, so let's talk about Apple, because this works for every stock, okay? So Apple, you could see right here, had a 200,000 share seller, okay, at $140. And you could see it right here. Let me get my pointer out here. This seller right here started around 9:30 this morning, and he's been out there. You can see this is pre-market. He started in pre-market, and in pre-market, the stock was at 138. And then all of a sudden, you could see these 3 little red lines right here, because that means that somebody was out there at 139, and it was someone out there at 139.20. Not as thick as red as the 140, where you have close to 200,000 shares. Wow. You know how much money that is right there? It's like $30 million worth of stock, okay? Now, that's not one person. That's all the exchanges and everyone around the world. But what the system is doing, it's aggregating, and it's letting you know that 140 is not, and by the way, I know some people here love Apple. They says, oh, I know that number very well. Of course you do. But now you're not focusing what's happened in the past. Now what's happening, you're seeing if it's indicative of the future. And by doing that, now you're seeing that order. And what's happening is that the amount of buyers that we hear at 9:30 could be a little bit different here at 9:55 by telling how dark it is, and you can follow the orders. Now, with that said, let's look at something else. Ever heard of breakouts? what made a stock break out? Now, you're probably thinking about like, holy crap, somebody bought 200,000 shares of Apple. You know what? That could happen. Like, right? That could happen. It happens all the time. Okay. So here you have a reasoning of a stock that just took that seller and took it out. That's called a breakout. So as much as you could see it as a resistance level in the past, some of you want to know, well, what caused that breakout? Somebody bought it. Somebody bought it. So as much as you think it was resistance, guess what? You're right. But resistance get broken all the time. And as long as that seller is consolidating and he's not getting done, that's how you have a stock from 10 o'clock go to 141, 142, and all the way to 143 in a matter of 2 hours. So some of you are like, oh my God, why did they sell at 140? All my indicators told me to get out. Or every news person told me to get out. It's a big, I know it is. I know 140 very, very well. Okay. But you don't know why it is such a big resistance levels. I do, because I just taught you that. It's sellers. It's orders. Now, how do you have a game plan to know when you're going to get a new breakout? Well, I don't know if you know this, but you ever heard of something called program trading? You ever heard of like, oh yeah, they're like, what is these program trades? Where did they come from? Well, these are orders that are defaulted, limit orders that are set to go out at certain prices. Now, you all know, because you do it too. You ever put a limit order out there? Like, okay, I set my limit stops that if it hits this number to sell the stock. What do you think? You're the only genius out there that knows that? Okay. Where do you think that came from? Okay. Hedge funds and market makers do that all the time. And actually, because we're human, brokerage firms don't trust humans. And what they do is they'll make sure that they get out so their egos don't get involved. So the system does it for them automatically. And by that happening, you could see those orders out there. Did I lose anybody yet? I hope not. I hope not. Let's look at another example, Mara. That was a nice little trade that we've been trading. Mara had a really good little trend out here. And you could see that Mara basically, this is what we call a Fausto flag. You might have heard of bull flags and bear flags. Some people don't even know what the hell they are or how they come to fruition. But it's basically, the way we teach it is a consolidation. And what happens, the sellers outbeat the buyers. And what happens, you start getting what's called a ladder effect. And what happens, the buyer keeps bidding it up, the seller gets done, and then what ends up happening, you get a breakout. Okay, so and then so if the seller gets executed, he sells all his shares. Guess what? If he's gone and there's no one else to resist it from going higher, that's how you have a breakout. And that's what happened when you had a 94,000 share seller out there and he gets done. Okay, because it's not as obvious as you see it here, but you can see that buyer keep going up and up and up. Now, do I have any more? Yeah. But then all of a sudden you start coming up to a very big seller. And that seller's been out there since 9:30, and since 1 o'clock, you could see that we have a 135,000 share seller out there. Now, to remind everybody, that could be on the NASDAQ, the New York, EDGX, ECNs, it could be from all different exchanges. Now, ask me if I know who. And my answer to you is, I don't care. Ask me, is the guy long or short? Okay, because I had people ask me all the time. And I'm going to tell you, does that even matter? All you know is that there's an order out there for 135,000 at $9. Okay? So let's go over, and with that big resistance, you got to look for that. Let's look at coin. Let's go back to coin again. That resistance we saw at 56. Look what happened when it got to 56. It hit it, it came down. It hit it, it came down. Now, what happened here, that seller probably says, you know what, the hell with it. I'm pulling my limit order, and I'm going to hit the bid. Meaning, you know what, I'm negotiating. Nobody wants to buy it. You know what, I'm just going to sell it to the buyers on the bid. And he's the main reason why that stock went from 56 all the way down to 54. And you know what? Remember, there's buyers and sellers at every price levels. Now you got buyers that are showing up here at 54 for 10,000 and so on. And you could see it as approaching a very big support right there at that 54. And you can see it was a pretty big buyer out here, but he keeps testing it. Eventually, buyer didn't want to give up, and that stock went right back up to 56. Okay, and it passed 56. All by seeing who's out there buying it, who's back selling it. Think about this for a second. If you go short the stock at 56, buy back at 54, go long 54, sell it at 56, you could make $2 long, $2 short, $2 long, $2 short. You know, and no matter what, and you know what, you didn't have to make the $2. You could have made 50 cents. 50 cents on 1,000 shares is $500. I don't know about you, but that's $100,000 a year salary. I know Social Security's not paying that. You know, I know a lot of us be like, I'll be happy with that. So, but it's all about, once again, following the future. And I'm going to show all of you this. I'm going to give it to you in my book, and I'm going to invite you all in my trading room so you can watch it, because, you know, the issue with this right here is that, which I kind of don't like to always show PowerPoints, listen, anyone could cherry pick, right? Could cherry pick the stock that they like. And that's an issue. And by the way, if anyone here right now wants me to look up a stock, as long as it's not an ETF, because ETFs are very hard to see iceberg orders, I'll be happy to bring it up. And I'll tell you exactly what the street is doing, where, once again, it's you need to know what they're doing. If you're not, you're trading blind. Now, one of my favorite strategies is seeing more of the support resistance levels. That's basically what I look at. Okay. And like here, we're looking at a stock, GNS. Look at this 65,000 share iceberg order at $4. Stock started at 3, went to 4. Now, I don't know about you, but I don't know if people are so shy and scared trading expensive stocks. Everything's, oh, these are penny stocks. I don't trade penny stocks because penny stocks don't have, you can't see orders out there. All right. So I only trade NASDAQ National. But like, why is anybody so offensive, insulted or defensive that, oh, I don't trade stocks under $5? Well, if that stock moves 50 cents, like this stock moved $1, you know what I mean? Like you bought it at 3 and you sold it at 4. Does it matter that you made $1 on a $3, $4 stock versus making $1 in an $80 stock? Because I know a lot of people probably can't afford to trade 1,000 shares in $80 stock, but I know you could probably trade a $4 stock 1,000. So it's all relative, regarding about point movement. But the big thing about this is that when you deal with less expensive stocks, you deal with less experienced traders. Trend lines are easy to follow. Things do breakouts a little bit easier. Okay. And this is why you could see how the stock hit that resistance levels and then broke up and went all the way to the next resistance, which was 450, which you could see right there. Once it hit 450, it came right back down to 4. Because remember, when you break through a support level, that support level becomes a new resistance levels. Okay. So, and then all of a sudden, 450 came back, did a breakout, which is what we were talking about earlier. How did it break out? The seller got executed. And guess what? It went to the next resistance. That trade has been out there all day. There was another limit order that was posted at $5. You could see it hits 5, came back down. Someone started showing up at 480, took him out, went to 5. It's testing the 56,000 share seller. And there you go. Now, I want to bring up a stock really quick, like here. I want to bring up Carboni, okay? Because that's a stock that we've been trading the last couple of days. Look at Carboni, a $7 stock this morning at 9:30, all right? You could have traded at 9 o'clock this morning. I don't know if anyone here has access in pre-market, but this stock went from 780 up to 840. Okay, so the trend was there. Actually, we start trading, and all of you are going to be invited. We start trading at around 7:30. The room opens. You don't have to be there at 7:30, but we start trading at 7:30. At 8 o'clock this morning, the stock started picking up around $8 a share, and it went all the way to 810, which is not a big move. And then you could see it. Once we got about 9:15, now we're at 840. And then right when the market opened up, it ran from that 840 and shot all the way up to $10 a share. And then you could see how it kind of hold there. And then it broke 10, now it went to 1080. Let me ask you guys a dumb question. Why did the stock stop at 980? And then why all of a sudden did it decide to, at $10? And then why all of a sudden did they decide to break 10 and go to 1080? Why didn't it go to 1120? Why did it stop at 1050? Well, why 1080? Where these resistance levels come from? Well, I'm going to go out there and I'm going to see what we got going on here. And CVNA, I'm going to go look at level 4. Let's see what we got. Hold on here. I got to bring up some data because I had it off. Oh, you're going to like this one. All right, we're going to like this one here. This one's pretty cool. All right, here we go. Okay, so let me bring this up. So here we have, you could see right here when the stock started. Oh, the stock got halted, by the way. Let me go back. See this little black line right there? Everyone ever been to a stock that got halted? This is actually a halt right here. And it was basically on a huge run up. But you can see right here that you had some big orders out there. There was 375,000 shares. The guy got executed. Holy crap. No wonder why the thing ran all the way to 10. And then you can see all the 10 lines started showing up. There was limit orders out there. Got hit. There was another sell at 1030. Didn't want to break it. Then when we get around 11 o'clock, that seller got done. Then it took the guy out at 1020. And now you can see right here, you can see now we're starting. We got some big orders right around 1080 for about 81,000, 9,000, 56,000, and 48,000. Now, listen, that could break it. Listen, someone's got to buy it. But as of right now, you can see it's got a tough time breaking it. So when you want to know how to have a game plan, that's your game plan. So if I had a stock at 10 and we broke resistance, I could see resistance levels showed right around 1080, 11 o'clock. I don't know about you, but $10 to 1080 on 1,000 shares is 80 cents. Do that every day. You're talking about a $200,000 salary a year. Who doesn't want that job? So let me move this over and get back to where. Now, did that seem hard, everybody? Everyone like that? Great. So this is what I'm going to do. I want to tell everyone how I'm going to invite all of you to come in my trading room, which is right here. Okay. Now, this is my trading room. I'm going to invite all of you guys in here. You can see all my instructors, me, Gina, Rich, Alex, John, Josh. Everyone's in here. These are just a few. We have a few more in there, but these are the traders that are working there. And these are all the students in there. They're all trading in there. And here's the chatting. We're working with them. We're in stocks right here. Actually, they're looking at Carboni right now. I'm going to invite all of you guys to come in here. Okay. Now, this is what we're going to do. I want to invite you in my trading room because I like to practice what we preach. Now, you could access on your phone. So if you're not around a computer, you can do it on your phone. You can do it or you can log into your computer. Now, what we're going to do right here is we do live audio broadcasting. We start around 9 a.m. Eastern, and I'll be on live. And we also broadcast live on YouTube. And we'll start commentary up until about 10:30. Right now, we stopped commentary, so kind of stopped. Now, we'll pick up in the afternoon around 2:30 to about 4 o'clock, trading the last hour. We also do traders talks. We have during the day when things are kind of on a little bit on the slow side, we'll bring guests to come into our show. We're gonna have Jeff come in also, but we have some great educators and classes that we do. So not only to give you some time to take off, but also time to learn how to trade. Just basically our agenda that we run for the day, for the whole week. So we're off on Saturdays and Sundays, which I guess is good. We're off on holidays, which I hate because it kind of ruins the week. But this is basically what we do in our schedule. Now, this is what you got to do. You got your phone. Take your phone and just take out the camera and just scan that barcode right now. Or you can go to the website ctu.co metastock and you could register on the website, or you just click on that code right there and we'll scan you. Okay. Now, a couple of people now, as you guys are doing that, a couple of questions just came across here. So I'm going to take a couple of questions. How much money do I need to start? You know what? I prefer you not to start with any money because a lot of people I know we want to learn and start making money, but why go out there and do that now? And you could do that. You don't need a lot of money to do this. Okay. And I think that's a misconception people have. So don't worry about the money right now. Let's just see if trading's for you and see if other people make money doing it. Do I need a brokerage firm to start this? No, you don't. You don't need a brokerage firm. We don't want you to trade. We just want you to watch, okay? Because you know what? You really don't take this in a bad or offensive way, but a lot of you are making trading more complicated than what it is. Some of you in a deer in the headlights. Some of you don't know the discipline and psychology behind it. Think about how much you've learned being in here, just me teaching you how to follow the orders. Do we need level 3 to do it? No, you don't. Okay. I don't want you to buy anything right now. Don't worry about paying $15 to NASDAQ. Don't worry about, you got the Metastock platform. That's all you need right now. Okay. You made an investment on that platform. That's all you need right now. Now what you need, which is what a lot of people don't realize, you need to be surrounded, a good staff, a good team. Listen, my dad always taught me, I'm first generation Italian. My dad always taught me, he said, listen, you want to make money? Go find people that make money in the business that you like. Okay. You hang out with that kid over there, the troublemaker. You know what? You're going to end up being a troublemaker and you're not going to make any money. That's how it goes. So if you want to listen, good traders surround themselves with good traders. Bad traders don't surround themselves with anybody. So you got to do your homework and find really good, not just good mentors and gurus, but also a very good team with them. Now, with that said, I'm going to give you my book for free. Okay. So just scan that market barcode right now. I'm going to give you my book for free. I don't need the $47 right now. If I did, believe me, I wouldn't be standing here. I'm looking for traders I could teach, so I could trade with. That's really what I'm looking for. And that's why I'm here. I'm always looking to recruit new traders. I've trained traders. Some of the people that you'll see in some of these events, these gurus, they're some of my students. Some of them my staff. And I hope that maybe one day you could do that. Because when you learn how to trade, believe me, you want to get back to the community. You want to go back and you want to make sure, because, you know, like Jeff could tell you this, we've done so many events together, and it just bothers us to see people like a deer in the headlights and losing money. Because you know what? I would rather you not trade than go out there and try to do it on your own. So you're going to get this all for free. Okay. And then what's going to end up happening after this, we'll have a conversation. You'll talk to our education advisors. And if you want to do this moving forward, we'll tell you what you need to do. But I think first, you know, because I can't teach how to trade in an hour. So hopefully I was able to spark your interest. What I was basically to show you right now. And listen, give it a shot. You know, I mean, what's the worst that could happen? It doesn't cost you anything. All right. Now, do we have any questions? I know I got about a little bit less than 5 minutes because I don't want to take away from the next presenter. You know, I had a couple of questions. Hi, I'm looking for liquidity, supply and demand. Is from Kenneth. Times highs don't. Does your software work effectively for markets that have no price history at level? Well, Kenneth, I don't have a software. Okay, I'm not here to sell you software. I'm here to teach you how to trade. That's really what my strategy is. And you already got a good platform here using the Metastock platform. But you know, and brokerage firms, you obviously have to trade off a brokerage firm also. 90% what they give you don't really need what they offer you. Okay, they do that because they want to appease everyone. You got swing traders, you got options traders, you got and different brokerage firms are better for different types of trading styles. You might not know that. We're endorsed by every broker, almost all the brokerage firms in the industry. I've done presentations for Thinkorswim, TradeStation, Charles Schwab. The list goes on and on. I'm just giving some big ones, but you know. These brokerage firms, I don't work for them. I don't have allegiance to any of them. I'm looking for traders like yourself to figure it out. But the thing is, you got to learn how to stop losing money. And I think that's why a lot of you here. All right. Any other questions? Like I said, it's free. It doesn't cost you anything. You got great presenters. Listen to all of them. They all got great products. But if you want to see what day trading and swing trading is all about, why you've been in business for 30 years, you want to judge us not on our winners, but on our losers, and see how few we have. Here's your opportunity to do it. All right. So with that said, Jeff, thanks for having me again. This was awesome. I love talking to your audience. I love being in here. Hopefully I didn't scare anybody too much. Sometimes I like to put the fear in God in certain people because it really could happen. But you know what? I think this is like the first time we ever actually did this for free for them. And I'd rather give you guys that opportunity to see what it's like. All right. Any other questions?
Yeah, we just have a question from Kenneth. He says, when looking at liquidity, supply, and demand at all-time highs, does your method work effectively when there's no price history at that level?
All right, so that's called uncharted territory. So I kind of use the theory of like a building, an architect building, and you got floors and ceilings. So what you're talking about is breaking through a roof. Okay, where's the resistance levels on the roof? Well, there isn't any. That causes so yes, people will always looking to sell and book a profit, so they will pop up there eventually, but that causes a big buying frenzy, and that's why you get these stocks that get these really big breakouts when that happens. So I don't know if that answers that question, but yes, we look forward to seeing that. And by the way, on the reverse side, if you break through a big support level, meaning you break through the basement of the floor and you don't see any supports, and you can go back 2 years, 10 years, 50 years, guess what? You know where the next support level is? 0. And you know what? That could happen. So it goes both ways. Yeah.
Okay. Fausto, thank you very much. I remember, like a lot of times people say, when you break to new all-time highs, there's no more resistance. It takes a while to kind of, everybody, like this, that's a big strategy, looking for those breakouts. So, Fausto.
Yeah, but not everything's breaking out all the time. So, you got to work what you got, when it comes down to it. So, if that's what you're looking for all the time, listen, I know there's platforms that do that. Sometimes there are things that will show you even break out like 52 daily highs, which is pretty cool. That causes momentum. Some of them also would break out 52-week highs, which also is pretty exciting. But then you also have, we could also be a breakout, Jeff, too, is also a gap fill. Gap fills, because that's uncharted too. So, and lead to another one. All right.
All right. Thank you, Fausto. Appreciate it.
Thanks for having me, Jeff.
Thanks for coming in. All right. Hold on just a second. Let me do this. All right. We enjoy having Fausto in. I hope you enjoyed that. Let me go ahead and do just a couple things here. Me, the presenter. Let me go ahead and show my screen. Let me go ahead and move this out of the way. So let me go ahead and do this. We're going to go ahead and say thank you again real quick to Stocks and Commodities Magazine for sponsoring the events today. We really do appreciate all the work that they do and all the work they've done with supporting the events for like 10 years in a row. 17,000 articles that are in the trading archive, 1.2 million subscribers, been publishing consistently since 1982. If you haven't registered yet, you can receive a free copy of Stocks and Commodities Magazine. Just go to metastock.com/traders-summit. If you're already in GoToWebinar, you're already registered, but just make sure to elect to get that free magazine on your way out. Okay. Also, if you take advantage of any of the offers that we do, like if you do a subscription to Metastock, we're going to give you a 5-month subscription. And if you spend $300 or more, you'll get a 2-year subscription as well. So big thanks to Stocks and Commodities for sponsoring the events. Our next presenters today. Oh, there's one other thing I want to talk about real quick. And we are a little bit ahead of time. Today, we are offering a Summit deal package. It's going to include 3 months of trade trend, the GoNoGo Complete software that's been a very, very popular add-on that we added to the library last year, some training that's done by Oscar Carboni, 3 months of Learn Metastock, 2 years of Stocks and Commodities Magazine, and Unleash the Power of Metastock, a workbook that can kind of help you get up to speed with Metastock. As we've mentioned, Metastock's been rated #1 for 30 years straight. And so the normal price on all of that put together would be $2,810. Here at the show today, it's only going to be $1,235. So you're going to get 3 months of trade trend, the GoNoGo Complete, the additional training that we do with Oscar Carboni, as well as the Kevin Nelson training. So it's a really, really good offer, $1,235. You have to do it today. You can do it by calling us at 800-882-3040, metastock.com/summit deal, or metastock.com/sales-chat. So there you go. Dan says, I tried to get the link, but didn't see the option to get the book. I don't know how to help you with that, Dan, but if you'll email me, I'll get you set up. Here's my email address right here, jeffrey.gibby@metastock.com. So sorry you didn't get the link to the book. Drop me an email and we'll help you out. So our next presenters come as a a dual action package, and they do a really good job. Alex Cole is the designer of GoNoGo Complete. Tyler Wood helps with a lot of the presentations. They like to talk to us together, and they do a really, really good job. With GoNoGo, they use a lot of concepts that come from rocket science. And again, like I was saying just a few minutes ago, it's really, really popular product that we added to the Metastock library last year. I'd encourage you to take a look at it. Let's go ahead and get you guys started. Alex, Tyler, how you doing?
Hey, Jeff. How are you doing, my friend? Thanks for having us on today.
I'm good. Wow. I don't think I've ever seen you. You're looking dapper today.
Thank you so very much, sir. You know, it's a busy time of year. I got to put the tie on so that I know at the end of the day when I take it off, I can relax, not be in work mode.
I'm hoping that Alex plays a little bit of guitar for us, but he never does. So in any case, Tyler, it's you that wants to share your screen, right?
I would love to. Yeah. Yes, please.
Okay. Go ahead, Alex. I'm sorry, I didn't mean to.
I was just saying, I'll play a little guitar if you sing, you know?
Ooh. We want viewer numbers to go up. Oh, there you go. Anyway, I just turned the screen share over to you. I can see.
Let me know when that PowerPoint is coming through. You can see it all right?
Yeah, it's coming through. So let me get out of the way. Your turn.
Thank you so much, Jeff. And thank you, everybody, for tuning in here at noon on Monday, January 30th. What we're going to do today is talk to you about how volatility doesn't have to be such a scary thing. It's another piece of market information that we can use to optimize our entries and exits from trades, to understand trends. But before we dive into all of that, we want to run through a little bit of a background about how you might think of following trends and using GoNoGo charts. So with that, I'll let you kick us off today, Alex.
No, happy to. So this is always one of our favorite quotes. We are what we repeatedly do. And if you've seen any of our presentations, you know we're big believers in a disciplined approach to investing and trading. And so we really believe that you need to have a process. You need to have a checklist that you follow. You need to take your hang-ups, take your emotional sensitivities out of your process and follow rules. So that's what we're going to start with today. We're going to talk about routine, and we're going to talk about how when you are looking at the markets, you need to follow a process that gives you confidence in what you're looking at and gives you confidence in your decision-making process. Now, we used to always talk about our friend Dave Keller, who's a former president of the CMT Association, and how he learned to fly. But at the moment, my son is learning to drive. So we thought we'd shake it up a little bit. And when I'm talking to him about being a good driver, I want to see him follow a set of rules that will help him be safe, right? Number one, when you have a child turn 16 and they say, hey, sign me up for driving lessons, I passed the test, your number one priority is you just want safety, right? You want them to be a good driver. It's a scary time. So, things like, I want him to follow a process where he puts on his seatbelt every single time. That shouldn't be optional. I want him to make sure that when he turns the engine on and put the car in gear, he's got his foot on the brake so he doesn't move forward and drive into something. Got to check your mirrors, make sure that there's an opening for you to pull out into the road. Make sure you signal to let somebody behind you know what you're doing. And then, of course, engage the gears and drive off. So these are unnegotiables, right, for me. Like when you're driving, son, do not skip any of these steps. And the same can be true with technical analysis, right? We want to follow our rules so that we remove self-doubt, we remove subjectivity, and we have a really clear sense of what we're trying to achieve and how we're going to do it without all the way through the questioning ourselves or doubting what we see on the charts. So it could be things like following Dow theory. It could be using trend lines, looking at moving averages, other indicators. It could be looking at pattern analysis, common concepts like support, resistance, confirmation, and relative strength. These could all be part of your process, and you could include them in a disciplined approach and create your own checklist that allows you to then follow the markets and understand what they're telling you in a fashion that is sensible when you're looking at your securities.
And for Alex and I over the last decade each, more than a decade, I won't date us, but spending time with the folks at Ned Davis Research Group, or Dorsey Wright, myself through the CMT Association, and Alex through his tenure at Bloomberg, we got to find out that technical analysts who are really at the top of their game, and global macro strategists and PMs at big mutual funds and heads of trading desks don't rely on any one indicator. They don't look at a single piece of evidence in isolation. They're looking through a checklist, a responsible process, because as the market goes through regime shifts, different tools are going to work a little differently depending on how the market is behaving. And here we are right now, January of 2023, arguably, potentially at the end of last year's bear market. And so what we're talking about is using a combined or a composite approach of technical indicators to get that overall sense so that you can have some confidence, some conviction in your trade. So Alex, let's talk about what a responsible approach to just identifying a trend might look like.
Yeah, and so this is a really simple set of rules, but something that you might see if you're working with a portfolio manager or a trader trying to make decisions. It's the kind of common thing that I would work on with clients over the last 15 years. The beard kind of gives it away. You don't need to worry about about dating me. There's a lot of gray in it now. But basically, if we can identify trend, that's really the most important skill that we can pick up as a technical analyst. Because if we can identify a trend in price action, then we can profit on the majority of that move. And we like to say that that's a simple idea, but it's not easy to execute. But what you want to do is go through a process that really confirms what you're trying to find on the chart, so that you don't make any guesses, you don't leave yourself with any kind of loss of conviction. So how might somebody do that? Well, the first thing you might do is just look at the chart and try to identify movement from, let's say, bottom left to top right. Can you see any kind of directional market movements? Are you seeing higher highs and higher lows? You know, as you move from the left through this chart, you start to see a higher high, and then you see a higher low. So now we're starting to identify some of the cornerstones of what we would consider trend. But how do we automate this? We want to, again, remove that subjectivity. One of the tools we might use is something like the Donchian channels, which automates the highs and lows on your chart. So that red line that you see is moving higher every time there has been a end period high in price. And usually the default would be 20 periods. But for every 20 periods, every day, we look back, and is today's price the high for the period? And if it is, then that red line moves higher. And the same for the lows. Now, the Donchian channels were used by the legendary turtle traders. So if you want to look that story up, it's absolutely fascinating. But that was one of their key entry decision-making tools. You might throw something else on here, like Bollinger Bands. Now, Bollinger Bands, so prevalent in the industry, so brilliant. And there's really two ways to read them. If you're looking for trend breakout to new trend, you're going to look for narrowing Bollinger Bands. And then when price breaks out of those bands, then you're going to be able to suggest that you should trade in the direction of the break, because there's been a push. There's been something that has caused price to move to a new level of trading. So you might look at Bollinger Bands and see where price is relative to its bands. After that, you could, of course, or before that even, perhaps simple moving averages are probably on everybody's chart. Where is price relative to its average? That's a very powerful concept, even as simple as it sounds. If price is above an average, that's inherently bullish, because it means that we are trading higher than we have over price history of price over a certain time frame. So that's a bullish idea. And then, of course, we might go to volumes, a confirmatory indicator. If we see something happening in price, we want to see if the market is participating in what we're seeing happening in price. So if you see a breakout to new highs, is volume healthy, or is it low volume? Does that affect your decision making? So you might look at volume in conjunction with these other tools. You may then throw on another indicator along the bottom to get a sense of momentum and to get a sense of how the shorter term prices are relative to the longer term average of prices. That's what MACD will tell us. And so when MACD crosses above its signal, or when they're above the zero line, that's a bullish indication as well. So to take a breath, when we see in the left side of this chart that we're making new highs in Donchian channels, we're above our moving average, we're breaking out of Bollinger Bands, volume is relatively healthy, MACD is crossing above its signal line and above zero, now we can start to say fairly confidently that our checklist has been hit every step of the way, and now the weight of the evidence tells us that a new trend has begun, in this case, in the up direction, right? We're seeing new highs, and there off we go, and that's what we can determine from a process like that.
Now that's the challenge with technical analysis. And Alex and I have fallen into the exact same trap that I'm sure many of you on this line have, which is we want all of that information. It's all helpful in forming a high conviction trade, in understanding that multiple pieces of evidence are forming this trend. The problem is you might have 2 or 3 moving averages. You might have redundant data on your chart. You might have conflicting data, right? Some of it not confirming what you're seeing in a price trend. All of this can lead to analysis paralysis. And I think the greatest struggle for technical analysts reporting to their buy-side clients is trying to simplify that process so that at the end, a trade decision can be guided with very binary sort of evidence that yes, it's moving in an upward direction. We want to be long this, or no, the trend is broken. We're heading to the downside. Might be looking for a short opportunity. So with that analysis paralysis that affects every trader, Alex and I wanted to share something that would bring all of that information together, but do the computation in the background. Remove all the squiggly lines from the chart and give you a clear picture of price action. So Alex, talk to us about GoNoGo Trend.
Yeah, and as you said, it's about working with people all over the industry, whether they're sell-side analysts talking to the buy-side, new traders, new technicians, new technical analysts, not overwhelming their charts and giving themselves an analysis paralysis, or even if they aren't confused, right? That's the other thing to hit on, is that you might have a great process, but by the time you try to explain that, or by the time you get through that process, you are having difficulty either making the decision yourself or explaining, like you said in that example of technicians working with the buy side, it becomes very difficult to explain what you've arrived at in terms of a decision. So in my role over the years, I've had to work with all different people within the industry, and the solution became blending the technical analysis in the background and color coding the price chart. And so that's what we have here with the GoNoGo Trend, is we go through that discipline checklist with the tools that I found to be the most powerful, working with clients in the institutional space for, like I said, about 15, 20 years, and blending them into something that just gives you a sense of trend without cluttering the price chart. So you can see here, there's nothing on here but price, but we know that the price is in a go trend when we see those blue and aqua colors. We know that we're in a no-go correction when we're seeing purple and pink bars. And then if you see some amber bars on there, those are our sort of uncertainty situations, our bars where there is not a lot of direction that we can ascertain from doing the computation in the background. If we don't get enough of our components to the GoNoGo Trend firing in any one direction, then we are going to paint the bars amber, and we call those the go fish bars. So we've got go trend, no-go trends, and go fish areas of uncertainty. And that, of course, comes from, if you've heard us ever on a presentation, you know that we've taken that from the quote of Jesse Livermore, who was just such a fantastic character to study in finance. But he said there's a time to go long, a time to go short, and a time to just go fishing. You're not getting what you need from the market to make a trade. And those are our go fish bars. So we hope with the GoNoGo Trend that you can get a sense of trend identification, but without confusing the chart that you're looking at.
Now, Alex and I are so proud of this work. We want to give it away. So for everybody who is on Metastock, you can install this template, the GoNoGo Trend template, right away, right after this presentation on your charts. All we ask in return is that you let us know how it's working. Send us an email, info@gonogocharts.com. Let us know what securities you're trading, what your time period is, and how that's helping you maybe avoid some of that analysis paralysis and being late to either entries or exits. All right, so we're talking process, right? What are we really looking to do? We want to participate in those trends. We don't want to anticipate. Alex and I talk a blue streak about not trying to predict markets, not trying to assume what the Fed might do next, or think we can have a crystal ball and predict the future. Instead, trend followers are all about reacting to the message of the market itself. So we want to remove that doubt and uncertainty. And the reason we have to remove doubt and uncertainty comes from some data that was collected by Berkeley Haas School of Business professor Terence Odian and several collaborators. And they went through 360,000 people's trading accounts over a 15-year period. That's a lot of data to crunch through. But this is not an easy game. As Alex and I said, it's very, very simple. But when you let emotions get in your way, the results can be truly terrible. So, question for you at the audience. You can shout this out at home. Don't worry, we can't hear you. What percentage of these 360,000 day traders do you think lost money over this 15-year period? Take a second. The answer is E. 87% of those 360,000 day traders lost money over the long term, meaning less than a third of 1% had a profitable trading system year after year. All right, one more question. Same researchers, and they took 43 million trades from Daily FX across 15 different currency pairs. And the question now is, what percentage of those trades were profitable? Did they have the directional bet correct? The answer is over 50% of the trades were profitable. Okay, so how is it that retail traders could still lose money even if they had an edge? More than 50% of their trades were profitable. Well, the answer comes down to position sizing. The average loss per trade far outweighed their average profit, meaning they had an edge to find winning trades in the market, but they didn't have a discipline to stick with those that were trending in their favor. They didn't have the discipline to cut their losers short. We love and hate that old adage that you have to let your winners run and cut your losers short, because it's so simple and self-evident, but it is so hard to execute, particularly when you have a responsible technical checklist with lots of studies on your chart that can overwhelm your decision point of when to buy and sell. All right, stick with me for just another minute. We're going to get mathematical here for a second. We're going to talk about the expectancy formula. And I just want everybody to raise their hand at home if you've ever had a trade that started to work against you and it became an investment, meaning you convinced yourself, that little conversation we have internally, I know this is going to come back. I can't cut this yet because I have such a high conviction that it's going to turn around. Well, the good news is we're not alone. Professional money managers do this all the time. They might have a long-dated fundamental thesis about why they're investing in this company, and it just continues to trade against them, hurting the P&L on the fund that they're running. But here's the good news. This little curve right here is where all break-even systems exist, meaning you can take any combination of profitable trade percentage and then the discipline that it takes to deliver that higher ratio of profitability. Wherever those meet, you can find a profitable trading system. So let's just take one as an example. 50-50, right? We flip a coin with any stock or security that we want to buy. It doesn't matter whether we're right or wrong, as long as our winners outpace our losers 2-1, right? And somebody like Paul Tudor Jones can live safely right over here and still be a very profitable hedge fund manager, even if he's wrong 4 out of 5 times. Because when there is a winning trade, when things are trending in their direction, these managers know how to press their bets, lean into that trade, even scaling up their position size, pyramiding into the position in order to get those outsized gains. So of the 4 outcomes, right, we can have a small win. That's great. We'll take that. A large win. Everybody's looking for that. A small loss. We can embrace that. We're happy to take the small loss as trend followers. The only thing we have to avoid is that 4th outcome, which is that large loss, the risk of ruin. And that's where GoNoGo charts can really help you, not only in finding profitable trade ideas, but also in managing your trading discipline. All right. Now, one of our favorites from Mark Abraham, he says that ultimately it's the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. That consensus is revealed by analyzing price. So we're talking about very simple supply and demand relationships for everything that we trade in the liquid markets. Now, Alex and I are firm believers in technical analysis. We know that all of the tools that we have studied over the years, everything that's in the CMT curriculum, those are highly valuable, very powerful tools. What we're talking about today is how you can come to your own trading discipline using some tools that simplify that process, allowing your trade decisions to be much more clear. So Alex, talk us through how we can consider the trend.
So with GoNoGo charts, it's as simple as looking at the color of the bars. Again, we've got strong bullish bars are the brightest blue. The weaker bullish bars are aqua. Amber, like we said, is that neutral go fish bars of uncertainty. Pink then are the first form of our no-go trend, weak bearish, and purple, the strongest bearish situation. So if you look at any chart, given that color scheme, we can get a sense of whether we are in a go trend or in a no-go trend. You know, if you're a go for launch in terms of an investment.
Absolutely. Let's do a few examples. And as Jeff hinted at, the name of our company and the name of these charts comes from a NASA or a military pass-fail system, right? And if you're going to put billions of dollars of technology up into space, you want all of the conditions to be ideal before you go for that launch. Same thing for investors and traders. Alex, let's walk through a couple of examples. Facebook.
Yeah. So this is just giving you, you know, a sense of, okay, this is a good process. This is a slightly different process from the one we walked through. This is something that I was working on with a client not that long ago, and this is what we came up with as his sort of checklist of technical tools. But here's the problem: is that now we are really sort of a little lost in terms of where to look. Where do our eyes go from this? Is it clear, you know, right off the screen when that trend changed with Facebook? You know, it's just kind of tough to see what's going on. And if you then move forward, if you take the GoNoGo chart, you see the trend coming out from underneath, and you see how the price rallied off those ultimate lows in November. We saw some uncertainty as the market sort of digested what was happening. We saw it consolidate sideways in the gap, which of course is another very strong technical concept, that gaps offer support and resistance. And then we can see very clearly as the go trend took shape, it went from the weaker form to the strong blue, stronger go bars as it broke through resistance. And now, you know, Facebook is in a strong go trend. So it just gives you all the information that you might have been trying to pull out of that problem screen, that screen before, and shows the trend in a little bit more clarity.
Now, what's really compelling to Alex and I is that the classical technical analysis that we all learned from Edwards and McGee and some of the greats in the 1930s, that simple price pattern offers a ton of information about investor behavior, right? So this price action that gapped down, as Alex was saying, that offers a clear area of support and resistance, clear risk and reward. And if we just jump back to that other process, it's very difficult to annotate a chart like this and to really pay attention to price action itself. So we want to keep this crystal clear. And what also stands out to me is that there's more technical information and indicators happening in the background. The heavy mathematics is taken off screen than even what we were seeing in that other checklist and process. Now, what we know about technical analysis is that it can move across multiple time frames. The original, the father of modern technical analysis here in North America, Charles H. Dow, over 130 years ago, was explaining the movements of the markets. Now, he was a very accomplished sailor. He used seafaring analogies to explain what he was seeing in terms of market moves. And what he talked about was that there could be multiple time periods of trend. The primary trend he compared to the tides of the ocean, meaning that it is unflappable based on fundamentals, the information that's coming out from corporate governance. It's unflappable based on the reaction of the crowd. This is our very long-term time frame, and it gives us a sense of what the underlying bias of the market is. He said, but around that primary trend, you're going to have price action that follows the secondary trend. He compared that to the waves of the oceans, and he said, no, that's more about the reaction to the underlying fundamentals, or the gross domestic product expansion or contraction, if we're talking macroeconomics. Now, the third period, which is where a lot of us see the day-to-day price action or intraday price action, he called the minor period, or that tertiary trend. And so it's going to move to extremes above and below the secondary period, which moves to extremes above and below the primary period. Now, this is enabling technical analysts to profit on those moves of investor irrationality. We know that prices can become way above or way below intrinsic value or anything based on macroeconomics or fundamentals. So GoNoGo Charts is going to work on any time period, no matter what security you're looking at. So let's take a look again at the S&P 500 on a weekly basis, so the longer term view. Talk to us about this chart, Alex.
Yeah, so this is an interesting one because it really shows the inflection point that we're at. We've got a lot of analysts looking at the markets and saying, okay, was this the ultimate low in October? Are we entering in a new go trend? The daily chart's looking a little stronger, and the weekly chart has started to show some constructive signs of change. And if you can imagine, as Tyler said, technical analysis, the traditional technical analysis of drawing lines and patterns on your chart is very powerful, because it's not only giving you areas of support and resistance, but it's really telling the story of supply and demand and the market dynamics that are at play underneath the price action. And if you could imagine following a line from the high down through those other highs as we move through the time period on a weekly chart, you're going to see that we are testing that trend line and threatening a break above it as these bars turn color from no-go colors to amber bars of that sort of uncertain, that inflection point in the market. So this is a crucial moment. We've got a higher low, also easy to see because there's nothing else on the chart. And now we're painting amber bars as we test an area of downward sloping resistance. And so this is a very important moment for the equity markets on a long-term basis, starting to come out perhaps of this relatively long no-go trend. The whole of 2022, we saw lower highs and lower lows.
Now, if you are a very long-term self-directed investor, seeing these August highs, this relief rally that was so seductive to so many traders and investors, know that we never left the no-go trend, meaning there wasn't enough evidence in all of that compiled technical checklist in the background. Again, this is on the weekly time frame. If you're very long-term, you didn't get back into that relief rally because it merely established a new lower high, and we continued further down. What we're seeing right now is actually that inflection point of trend change. Let's jump down a time period and we get into the daily chart. So if you're a shorter term trader participating in those relief rallies, which were highly volatile but very short-lived, you capture sensible entries based on a shorter time period. Right. So again, the tools work the exact same way no matter what periodicity we're looking at. And right now, in this daily trend, we can draw our same classical technical analysis trend lines, connecting these lows. We've got a series of higher lows and higher highs, and we're coming up to retest those prior highs from last month. And then if we drop down even further to an hourly look, let's say, to profit on those shorter term moves, we can see that strength of the go trend much more prevalent just over the last couple of weeks. And here we are right now, as of this morning, in a weak no-go trend, a weak go trend, as we've seen some consolidation of recent price action. Now, multiple time periods, it's going to be responsible technical analysis, but we also know that even for equity-only investors, paying attention to what's happening across the other asset classes can provide incredible insights into the nature and the attitude of a risk-on or risk-off market. A lot of this comes from John Murphy, a fellow CMT charter holder, as well as folks like Marcos Katsanos that help to quantify those correlations between asset classes and build off of the great John Murphy's work. So Alex, let's do a quick round robin through the asset classes, talking about what GoNoGo trend is showing across the board.
Absolutely, and it's fun to do this from time to time. If you zoom out just real quick, Tyler, for the whole image of the asset classes, we were in a situation not so long ago where there were no-goes everywhere, and we were talking about where the trend to be in was oil for much of the first half of 2022. And now you can just see from scanning your eyes around here that there's a lot more go trends taking shape. We've got goes in equities, we've got goes in treasury bond prices, we've got go in Bitcoin. Very exciting over the last couple of weeks. We've got a go in gold. And so the only really one here is the dollar that's dragging the asset classes down. So just from putting them in a patchwork like this, you can get a quick sense of what's happening. But as you said, equities, strong go, moving around the asset classes, treasuries as well. Oil, the one that's struggling a little bit, keeps trying to get out of the no-go, and we've gone back to a week ago today. Bitcoin really rallying strongly over the last couple of weeks or the last week or so, perhaps taking people by surprise how little talk there was about Bitcoin, which I think is healthy. When Bitcoin can rally on a lot less fanfare, I think that might be healthy. Gold has been a strong performer for several months now as we see that shift in asset management, and then the dollar, of course, continuing to move lower in a strong no-go trend.
Absolutely. So just even if you aren't going to be a currency trader or dabble in the commodities markets directly, we know through a lot of ETF vehicles you can express an opinion on alternatives asset classes. But even if we just think about how these intermarket forces affect equities, what we were looking at last year, the big bond sell-off, which created the rise in interest rates, a lot of headwinds for equities from the bond market, in particular sovereign bonds, as well as the strength in the US dollar that not only affected risk assets here in the US, but emerging markets as well. All right, so all of this study, the top-down technical analysis approach, going across the asset classes, working your way down to individual securities, looking at multiple time frames, and having that responsible checklist. This is how we were taught to use technical analysis responsibly, and we use it every week in our research notes that go out to our institutional subscribers. If you're interested, you can definitely find more information at our website, GoNoGoCharts.com. But every Monday morning, we send out a flight path that does this exact approach. What are we seeing from the intermarket relationships? What are we seeing in sector groups? Where is leadership and laggardship? And then all the way down to individual securities names. We also, as today's presentation is all about process and discipline, we send out a chart pack review on Saturday. So step away from the markets, look at things in a longer time frame perspective, and then really flip through a lot of charts to get an understanding of what's working across the global landscape. So we're going to use a few ideas today that come directly out of our research, including how we've spotted some of these changes, including the shift in the US dollar as well as treasuries. But with that, I want to congratulate you all. It's 12:30 p.m. You've made it to the 50-yard line. We're halfway through today's presentation, and you've got the free GoNoGo trend tool to use on your own Metastock account. So give yourselves a pat on the back for sticking with us. And take a deep breath, grab a little more coffee. This second section of today, we're going to dive into volatility and how we can use that information to our advantage rather than simply be scared of volatile markets. Now, we've spent most of the first half of this presentation focused in the top half of this GoNoGo chart, looking at the concept of trend. But GoNoGo charts offer a whole lot more for the sophisticated trader and investor that has to do with this bottom panel and the GoNoGo oscillator. What we're going to talk about next is blending ideas of momentum, volume, and volatility into a complete view that can guide any security trade through the life cycle of that trade. So, Alex, let's dive into some concepts on momentum.
Yeah, and we don't need to go on and on about this. This is the same idea. Basically, after trend identification, you're going to then turn your mind to momentum analysis, and it gives you a sense of price strength, the strength of movement that you're seeing from a trend chart. And it gives you an understanding of the enthusiasm of buying and selling, and when something has been pushed perhaps too far in one direction, or whether we're hitting new highs on enthusiastic buying. So powerful momentum concepts can be, but you can imagine now if we add 2 or 3 or 4 of these concepts to our original chart of trend identification, now you are just really unable to sort of see the forest for the trees, or really unable to get a clear sense of what your decision should be, because there's just too much going on. So what we wanted to do with the whole idea of momentum was apply the same concept of blending the foundational concepts and most used, most robust momentum ideas into one oscillator that can do the job of an oscillator, as of course it should, right? So we can still use this oscillator to identify extremes of overbought and oversold, just like you would with RSI or with stochastics or any number of oscillator. You can also still identify momentum divergence. Divergence is such a powerful concept throughout our industry. And you want to know that if price is making a higher high, but the oscillator is making a lower high, it's sort of telling us that there's less enthusiasm on this latest price movement than there was before, right? So you can still use GoNoGo oscillator in just the way that you might use any momentum oscillator in the traditional sense. And of course, also we wanted to incorporate volume because we're aiming for a complete technical overview with one simple chart. And that's what we've done here with Metastock. The implementation of that idea is to have a ribbon along the bottom that goes blue when volume is heavier than its average. So if you're seeing something happen in price and it's on heavy volume, what does that add to your conviction? If you're seeing a breakout above resistance, go trend identified and heavy volume, you can get a bigger sense using more information of what's happening.
Absolutely. When I first got to New York and joined the CMT Association over a decade ago, it was Ralph Acampura and John Bollinger and Phil Roth and Luis Yamada and others who really took me aside and taught me how markets worked. Fresh out of an MBA program, it was all managerial accounting and how companies worked. And I really thought that fundamentals were sort of the end-all, be-all. When Ralph explained momentum to me, he used a great analogy. Ralph's from the Bronx. Baseball is sort of the lifeblood of he and all of his peers up there. And he said, all right, Tyler, think about, price action as having a ball in your glove. And when you throw that ball in the air, the fastest speed it's going to have is right when it leaves your hand, right? That's momentum. That's a momentum surge. The ball is moving really fast. And as it reaches the apex, the top height that you've thrown it, it decelerates and then comes back down to your glove. So with any oscillator, whether you're talking RSI or stochastic, when you think about momentum, think about that surge that's driving price action. Now, in the GoNoGo chart, what's really powerful is this idea of having an objective neutral level. Alex and others have done a ton of work, namely Connie Brown and others who looked at momentum oscillators in trending securities, right? So remember, when Wells Wilder invented RSI, the US equities markets were locked in this range-bound territory. So they were looking for overbought and oversold. Ideas of mean reversion really were the play of the day. But if we're looking at a trending security and we want to use an oscillator, we have to establish this objective zero line. So come back to that baseball analogy. If you throw the ball in the air and it comes back down to your glove, what do you do next? You throw it again and it comes back down and you throw it again. And as long as you catch the ball in your glove, the game of catch can continue. So think about this zero line as the glove for that momentum. Every time it comes back down to test the zero line while we are in a go trend, we know that we are finding support, meaning there isn't any enthusiastic selling, which would be a threat to the trend. So when we find support, we can find these areas where the trend is likely to continue. That momentum resurgence in the direction of the trend, that's the secret sauce of all trend following investors. It's being able to stick with a trend through the bulk of its move. So you've probably heard the phrase buy the dip, which was very popular in 2020 and 2021, very unsuccessful for a lot of traders in 2022. But these buyable dips, we can be objective, not blindly buying everything that's rolling over, but objectively see that we found support and momentum's coming back in the direction of our trade. So with that zero line, we created some pretty powerful icons on the GoNoGo charts. Alex, why don't you talk to us a little bit about the two icons that we're going to see here?
Absolutely. So the first thing that we're going to talk about are trend continuation icons. And that's just the situation you described, where we know the importance now of the zero line. We know that that's catching the ball in the glove and not dropping it. So if we see a situation where the oscillator finds support at zero, we're going to highlight that on the chart, and that's a trend continuation icon. Data visualization is such a powerful piece of the puzzle for us, and if we can draw our eyes to the price panel and get the information we need, then we're going to keep ourselves focused on price. And so the trend continuation icons highlight a return of momentum in the direction of the trend. So it's that interplay between the oscillator, the zero line, and the trend. If we're in a go trend, in this case we're seeing aqua and blue bars. Every time we see support, every time momentum is resurgent in the positive direction, we're going to be able to say, yes, the trend is likely to continue. It's a low risk opportunity to participate. And then the second kind of icon that we put on the chart are counter trend corrections. And that's because there is a ton of value in using the oscillator in a traditional sense and getting that understanding of momentum in a sort of a mean reversion kind of way as well. And so when the oscillator comes out of an overbought or an oversold level, we're going to see counter trend correction icons. So in a go trend, they're going to be red, saying that price has moved very quickly in one direction, momentum is overbought and it's come back into neutral. We may struggle to go higher in the short term. We may see some consolidation against the trend or even some corrective action. Now, that is not saying there's a reversal at that point on that time frame that you're looking at, but that we may see some pullback. And then what do we do? Of course, then we turn our eye to the zero line and we see if we have a following go trend continuation icon right after that cooling off of momentum.
Now, I'm sure there are some questions from the audience. How does this work if I'm trading to the short side? And it's all exactly the same, but reversed in a no-go trend. You'll see the trend continuation icons to the downside, and you'll see these counter trend exhaustion arrows where we're at an oversold extreme and come back to neutral. Where all else being equal, right? The concept of polarity is that what has been support can become resistance. So we're going to use the zero line in that exact same way. If this chart rolls over and we are in negative momentum in a no-go trend, we come back up to the zero line expecting resistance. All right, we'll show some examples of that in just a little bit. But Alex, let's talk about volatility. Yeah. Let's talk about why it's not so scary.
Yeah, so this is the crux of this for us is that volatility in 2022 was either if you talk to people that love it, then they were loving it. If you talk to most people, though, it was a little bit frightening. All the people, like you said, that were enjoying the way the markets just went up in 2020 and 2021 were struggling a little bit with the volatility that we experienced in 2022. But what we want to get across here is that we can embrace volatility because that's really, as trend followers, excuse me, what we're looking for. We're looking for a real push in a direction, and that's what causes a new trend to happen. So what do we know about volatility? Well, we know that volatility compression occurs at important inflection points, and we'll show what we mean by that in a minute. We also know that periods of low volatility can often be followed by periods of high volatility. I was always taught as, squeezing a tube of toothpaste, as that compression happens and then boom, the pop might pop off and you might see a move in any direction after that. We also know that these periods of reduced volatility can happen either in a trend continuation type of environment or at a topping or bottoming reversal formation. So the question then becomes, we know we want to find these areas of compression because the trend might continue quickly, the trend might reverse quickly. We need to be ready for that. We know that the moves that follow these volatility compression areas can be quite significant. We want to participate. We want to find these moments when volatility increases. So how do we find these moments without subjectivity? That's really the question. And there's a lot of tools that have been created to help us do this. If you're familiar with technical analysis, you've probably heard of Bollinger Band squeezes, Keltner Band squeezes, and that's what we're looking for. We're looking for a squeeze, a narrowing of bands around price so that we can then trade in the direction of the break. So that's what we're looking for. And over the next couple of slides, we'll show a couple of examples how you might use a traditional tool such as the Bollinger Bands here, which are fantastic. So what we need to know when we're looking at Bollinger Bands is really the band width, because we need to know when the bands are narrow, relatively narrow. That's the volatility compression. So if we're taking a look at this example, this is INSW. Now, the bottom panel here is band width. So bear with me here. If we are looking at this chart and looking at band width, we can identify, hopefully, those lows in band width. And about 2/3, right, that one right there, in the middle of the chart, slightly to the right, that's a pretty low, pretty significant low in bandwidth. And you can see that on the chart. Those bands are narrow. And so then we might decide at that point to trade in the direction of the break. And you see price goes higher, continues in its uptrend after that volatility compression. Let's look at another one, maybe the one that everybody's been looking at or was looking at, the confounding dollar for so long, continuing to go higher. Well, when was that trend going to change? And we know when it did. We've been looking at this chart for a couple of months. But the problem we're getting now is there's some subjectivity. Where's the low in the band width? Is it low enough? Is that one right there where we know the trend changed? That band width wasn't perhaps as narrow as we might have liked. It might not have been so easy to pull out on that chart, like, okay, now we're in volatility compression. Let's see what happens when we trade outside of the bands. And so these are brilliant concepts, and they really help us understand continuations or trend reversals based on what follows a volatility compression. But we wanted to make it a little bit perhaps clearer, easier to automate, and that's what we came up with the GoNoGo squeeze. And then don't forget, if you add now Bollinger Band width to your chart, you've got another panel, and then this is the same dollar chart. It's just even, gets more and more difficult to see that price action in the middle.
So what we did instead, remember the importance of that zero line, right? It's going to offer support in a go trend. It's going to offer resistance in a no-go trend. What happens if we just sit on the zero line for many, 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 many periods? That's where the GoNoGo squeeze indicator comes in. So at each bar of this period, this orange grid is climbing in our oscillator panel, bringing us to a max GoNoGo squeeze. And if you just stick with me from the left to the right side of this chart, right? We're in a no-go trend. We've been moving steadily downwards, but the price action is narrowing, right? Look at the range of price moving ever tighter. And what we can see is the actual investor behavior shaping up right on our chart. The price range is narrowing. Our momentum oscillator, our GoNoGo oscillator is at zero. It's remaining in neutral. Even though we've got heavy volume, there's a lot of trading activity. But what it's telling us is there is a tug of war happening between buyers and sellers. Anybody ever watch Squid Game? I'll probably never forget this scene, but that scene of tug of war, when it ends, it's a high velocity move for the losing team, right? They are wiped off the game board, and you see that buyers have taken control in this example, right? We're in a no-go, we've had negative momentum, came up, rejected at the zero line, came up to test it again, and that's where we got into this squeeze. The volatility compression can be visualized right on our chart, and in this case, it's a trend reversal, right? As that GoNoGo squeeze builds to its max grid, then we see the break to the upside as a leading indicator. Ahead of the change in price trend condition, we see the break to the upside. We've got positive momentum, and that's followed by the trend change in our GoNoGo trend indicator. So that's an example of the trend reversal. We're going to go through some examples of trend continuation as well. Alex, let's go back to your example of INSW.
Yeah, so if you can sort of remember the middle right of that problem chart, that's where we saw the narrowing of the bands. And in that case, it was fairly clear where that bandwidth was particularly narrow. And now we can see that the squeeze was built, and we broke out of the squeeze in the direction of the trend. That gives us that green circle, the trend continuation icon, and then we moved higher. Now, if you just to turn your eye to the right of the chart where we are currently, we've come out of that go trend. You can see how the oscillator was broken to the downside. Then we entered a no-go trend. Now we've been finding resistance at that line. And now we are testing the zero again, and we're building a go-no-go squeeze. So something we're going to watch here, do we stay in a no-go trend, or does that squeeze get broken to the upside? That's the INSW chart. And if you think back to the chart with the Bollinger Bands, that's that section where we saw that compressed volatility.
Right. So everyone is trying to understand in a trending security, when it begins to correct, is that the end of the trend, or is this going to continue? And we have to be objective about that. And think back to that complex example Alex just showed us of the dollar chart. Once you start adding Bollinger Band squeezes and bandwidth panels, you really lose sight of what is a very simple momentum resurgence, a green trend continuation icon, and we're back up to the top. Here, we see the break below the zero line ahead of the trend change. So we've got signals to get out of this trade even before it starts the no-go, and we're into negative momentum. And where we're at right now is this inflection point in a no-go trend building a max squeeze. Let's do a couple more examples. Back to that dollar chart, Alex.
This is the dollar one, and this was that topping part of the dollar topping action. We were seeing lower highs. We saw the GoNoGo oscillator fall to the zero line. We saw GoNoGo trend start to paint weaker aqua bars, and then we saw some amber bars come in as the GoNoGo squeeze was broken to the downside. Now, if you just imagine that blip hadn't happened, that would have been a very long extended max squeeze. And instead, we got sort of two squeezes, the max squeeze then broken to the downside ahead of the no-go. And we've been in no-go since, and oscillator's been in negative territory. We retested the zero line a couple of times. We got rejected. And now we can say that we have no-go trend continuation. So that was what the volatility compression looked like on the dollar chart. using the GoNoGo squeeze.
And so I mentioned earlier, for those of you who trade to the short side, trend continuation icons work the exact same. We use red instead of green as our trend continuation. We came back up to test the 0 line. We've got a momentum resurgence in the direction of the trend. So this red circle icon is giving us a trend continuation to the no-go, to the downside. All right. As we said, start to add panel after panel, and we get even more analysis paralysis. And again, at this point, we're not even able to see price action on this chart. Certainly annotations get lost, and there's a lot of indecision, right? And that's what we want to avoid. And that's where we're at with the GoNoGo squeeze on the US dollar. Let's do another example, Alex. How about Netflix?
Yeah, so this is Netflix. We talked about Netflix all through 2022, how it was in a no-go, getting squeezes on the way down and no-go continuation. Thought we'd flip the script and have a look at Netflix now this year. And you can see that we are in a strong go trend, that we broke out of a max squeeze as price got above the resistance from the gap. You know, a bit like the Facebook chart, you can see how we were making higher lows. The oscillator was the first to tip us off that things were changing as it got above 0. Then we see all of the amber bars coming in, showing us that inflection point. Then the aqua of a go trend, followed by the strong blue of the go trend as we break above that resistance. And that comes out of that max go, no go squeeze as the oscillator rode the 0 line for an extended period of time. Remember, that oscillator riding 0 means that all of the inputs to the momentum oscillator are in their neutral territory. There's very little directional pull. Doesn't mean there's not heavy volume or heavy trading, but not much in the way of direction. And then when that really pops, that gives you a clue as to who won that tug of war. And in this case, it was certainly in the direction of the go trend.
Alex, we've got one question from Brian, and it's a fascinating one, right? So time frames. The way we think about them, Brian, is that whatever your trading style is, let's say you're working intraday, maybe trading a 5-minute bar. If that's your tradable time frame, then you need to jump out, let's say, to a 4-hour chart or a daily chart to get an understanding of what the primary direction of the market is in. So you can trade go trends on a very short period, even in a longer term no-go, but it's going to give you context that those could be very short-lived moves to the upside, that they are relief rallies in an otherwise downward sloping trend, or vice versa. And so for our clients, they range. Some of them are trading extremely quickly intraday, and some of them are rebalancing monthly. And they're looking at the weekly chart as their trading time frame, and looking at even longer term for a broader perspective on asset allocation. The best technical tools in the world are going to work the same way across every time frame, no matter what security you're trading. Anything that's liquid and is driven by supply and demand should work the exact same way. So hopefully that answers that question. Let's stick with this idea of just simplifying our process to make these trade decisions more accurate and more timely. There are only 3 things you have to consider when you're looking at a go-no-go trend. First, where are we at? Color of the bars. What's the trend condition overall? Where's our oscillator at? And is there anything important happening at the 0 line? Is there anything related to volatility that we need to be paying attention to? This one is actually taken from GoNoGo Premium Research. TIXT was in this max squeeze in September. Let's see how that worked out.
Yeah, this one was interesting because we ended up breaking out of that squeeze to the downside, and then finding resistance then repeatedly throughout that no-go trend, giving plenty of opportunities to take advantage of those no-go trend continuations. And then towards the right side of the chart, we have another max squeeze build as prices consolidate, which is then broken to the upside. And we're now moved into a go trend, and a strong go trend at that. And so what's interesting is that we've got 2 reversals here being sort of highlighted by max squeezes at either end. So it shows you how, the bulls lost in the first battle, and then they've won the second battle. And right now, where are we? We're in a strong go trend. The oscillator's overbought at 5. We're going to see what happens next, but a strong go trend with lots of positive momentum.
Absolutely. Now, there are some unique things to the implementation of GoNoGo charts on Metastock, things that aren't available anywhere else. Alex, talk to us a little bit about expert commentary.
Yeah, this one I was really, really passionate about building with the guys at Metastock. I think it's really fantastic to be able to get a quick understanding of what's happening on any bar, on any chart. And it's really what we try to preach, is that, you know, it should be simple. You just went through the slide. What are the 3 things we want to consider? Well, we can give you that when you're looking at the chart. Click on the bar, open up expert commentary, and it'll just give you our interpretation based on the components of the GoNoGo chart. So you never have to sort of never have to question what's happening, because if you click on a bar and it says, in this case, the bar is a strong go, that tells you the trend is strong with the blend of inputs combining to paint bright blue bars. Where's the oscillator? It's in positive territory, but not yet overbought. Volume is light. There are no icons and there's no squeeze currently present. And that is your complete technical overview of the security at that current bar. And I think it's such a great thing to be able to just have that quick, clear commentary when you're trying to get familiar with something like this. I think that really helps. And then, of course, the second thing that's so powerful are the explorations in Metastock. And so you can run through Metastock's database and all of the securities and on any time frame, and you can search for go-no-go situations. Find me all of the icons. Show me where there are trend continuations. Show me all the go trends on a certain index. You know, that's a time saver, and it's certainly how we filter through and sift through the vast number of securities that we have to sort of understand what's happening with every week.
You know, these things are really a test. We understand that trading is a passion for many, but it's not necessarily the only thing you have to do in life. Balancing family demands and other work-life balance can be really challenging. So we want to find ways that GoNoGo charts can simplify your trade decisions, where Alex and I can be there with you every step of the way. So those automated explanations. And then the explorations really just helping you screen the universe for what you're looking for that fits your trading system. Again, we're not telling you to trade any one different time frame or any individual group of securities. That's up to you and your risk tolerance. But hopefully this provides that complete technical analysis framework, a complete picture of what each security is doing. So let's dive through just a couple last examples before we let everybody go here in our last couple of minutes. We've got Garmin up on screen, Alex.
Yeah,
talk to us about what you're seeing on this chart.
Time to get running, get in shape. It's a sign after the holidays. Just because we wanted to finish with a couple of live examples of things that we're in a max squeeze right now. So we're in a go trend here. You can see that the bars are aqua colored. It's a weaker go trend. You can see that we've corrected against the highs. And as that's happened, the oscillator has fallen back to test the 0 line. And it's actually riding the 0 line now. And we've seen a max squeeze build up. So in critical moment, we will watch what happens at the 0 line. Should we break back into positive territory, then we will assume that momentum has come back in the direction of the go trend, and we'll look for an attack on those prior highs. And that could be a continuation situation for Garmin. Of course, if it breaks below the 0 line, that's a threat to the go trend that we want to be aware of.
Absolutely. Again, not trying to predict the future, but just to understand what's happening in real time. For those of you who were interested in adding GoNoGo charts complete to your Metastock toolkit, you can find that right at metastock.com/GoNoGoA. And here we are, similar example in a max squeeze for, which one was this? Bath and Body Works.
Yeah, this was Bath and Body Works, just one that came across the screening functionality that shows us that we're in a max squeeze in a go trend. So again, these are sort of opportunities to look for setups for those buying the dips, right? By those moments where we are, you can call them anything you want. You can call them a bull flag, you can call them pennants. But what we're looking for are go trends in place, corrections against the trend, and then a resurgent momentum in that direction. And so when you search for a max squeeze within a go trend, those are the setups that you're looking for. And once it breaks out of that squeeze, then you can be fairly confident that in a sort of a low risk way, we're seeing price continuation.
And that is if it breaks to the upside. For those of you who already hold Bath & Body Works and you've captured this, the meat of the move, we're at an inflection point where you need to clearly understand your risk. And if that breaks below 0, it's potentially time to close out of that trade. All right. last example here, Alex.
Yeah, the last one I put it up here because it's got multiple max squeezes in a relatively short period of time. So it was very interesting. Again, a go trend in place. So lots of go trends popping up more recently, many more than there were. So we're in a go trend for striker. We saw how the previous breaks out of max squeezes led to significant gains in this trend before pullbacks. And so we are going to be watching to see if this is one of those buy the dip opportunities. If we can get back into positive territory on the oscillator, we'll see a go trend continuation icon, and we'll look for a new high.
Absolutely. As we mentioned, for all of you who came to join us today, or if you're watching this on YouTube later, we really appreciate any feedback you've got on using that free GoNoGo trend indicator. And if you would like a copy of today's slides, send us an email to info@gonogocharts.com. Happy to share this deck with you and answer any questions you might have. And with that, Jeff, really want to thank you and the whole team at Metastock for the incredible implementation, the awesome explorations and explanations, but also for having us here on the summit today. This has been a lot of fun.
I'd like to thank you guys for coming in, showing how that works. Alex, this is a system that looks beautiful, and it's very well designed. And I've said it from the get-go. It's really, really good in terms of the way that it's designed. I just pulled up a chart of Tesla just randomly because I'm going to show it on the chart in just a second here. But good job, guys. I really appreciate you coming in and spending an hour with us. And everything you've done over the course of the couple of last years to kind of help us and work with us. And it's been I appreciate you guys. Thank you.
Hey, thank you, Jeff. It's great to see you, and we're looking forward to the next one.
All right. Thanks, guys.
Talk to you soon.
Okay, very cool. Go ahead and do this. Yes. I'm going to go ahead and also make myself the presenter real quick here. So, and here we go. And then we'll go ahead and share my screen as well, so that you can see it. Okay. All right. Now, just to kind of confirm a few things that they talked about, if you use Metastock 18, you can get a free copy of the GoNoGo. It's just a template they can apply. It's going to do all the color codings for the trend. And I'll show that in just a second. But I wanted to kind of just show you again, one of the things that I thought was interesting is they were showing how to find the max squeeze. So there are 3 explorations that come as part of the GoNoGo charts. And one of them is this GoNoGo squeeze. And basically, it's going to identify charts that are highly squeezed or in a high squeeze pattern. Or I don't know the best way to say that, but I'll probably think of it in a minute. You also have the icon scan, which is basically going to scan for the trends and the counter trends and any of those icons that show up on the chart. And then the trend, which just basically gives you a list of the stocks and what patterns that they're in for the chart. So I got all 3 of them. I'm only just going to really briefly talk about one. If you do set up with GoNoGo, you're going to get some training that's going to show you how all of this stuff works. But out of the scans that we did, there was again, this was the S&P 500. There's about 155 that were at some degree of squeeze. So if I'm just looking for stocks that are in that kind of congestion zone, hey, I think I found a congestion zone. This is going to give you a list. So you can see right here, in fact, Garmin's still on that list. I just showed the chart. A.O. Smith, Advanced Audio Parts. You can see those right here on the chart. And I've sorted it based on the ones that are congested for the longest amount of time. But if we come down through this list, you can also see the ones that are in 5s or 4s or 3s or just barely congested. So all of them will have it just at least one level of squeeze, but the 6s are kind of the ones that are going to be the most congested. So the other thing I promised to show you was kind of this Tesla chart. I think this is a really good example of kind of how it puts together. Here, if you're considering going long with Tesla, obviously they've kind of had a pretty bad year. But you can see that the no-go trend has been kind of in place. So far this year, they've actually kind of been on a rebound. Right here, you got a bit of a counter trend indication. You went into the kind of the magenta category here, got a go fish here, and just recently kind of showing that go. They also talked about the commentary. I love commentary from Metastock because what it allows you to do is helps you learn what's going on. So if I wanted to know exactly what's going on with Tesla, I can go ahead and click on View, Expert Commentary, and it's going to break it down for me. We have a week go right now. The price is overbought on heavy volume. There's no icon on the crescent bar, and there's no squeeze. And then it goes in and breaks everything down for you. I can, of course, move this around. I can move the commentary around. We'll talk more about commentary in just a minute here. So in any case, that's the GoNoGo product. It identifies trend, oscillator, the icon, and the squeeze. And does a really, really good job of identifying those for you. Been a very, very popular add-on of ours. So with it, normally what we do is a $14.95. It's the price that you pay for GoNoGo Complete. Here at the Summit, we're going to do a special of $9.95. That's going to include the bootcamp training, a trial to Metastock if you've never used. Our Metastock software just won Best Software in its price category for the 30th time in a row. It'll also, you get a 30-day money-back guarantee. You can sign up for this at 800-882-3040. You can go to metastock.com/saleschat, or you can go to metastock.com/GoNoGoA to take advantage of that. That GoNoGo is part of the Summit special that we're talking about today. With it, you'll get 3 months of the Trade Trend product, which was what Jeff Tompkins kicked us off with today. You get the GoNoGo Complete. You get some really, really good training that we recorded called the technical trend lines and positions. And I'll talk a little bit more about that. It was done by Oscar Carboni. He's coming right up. Did a really good job. He sat down and did some training that was a paid class that's available for you as part of the special. You'll get 3 months of Learn Metastock to help kind of put everything together. 2 years of stocks and commodities. If you bought all of this separately, the price would be $2,810. Here today, it'll be $1,235. So you can do that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can go to metastock.com/saleschat. So any case, definitely it's been a very, very popular product. These are a great selection of, you're going to hear from Oscar in just a second, but a great collection of just everything that we're kind of promoting here today. So metastock.com/summit deal, 800-882-3040, or metastock.com/saleschat. So there you go. I do want to quickly say thank you to CMT Association. The CMT Association has been sponsoring the Online Trader Summit for a number of years. They're a very well-respected organization that deals in accreditation for investors. So if that's something you're interested in, check them out at cmtassociation.org, or give them a call at 646-652-3300. So our next guest, I'm kind of running over my, there we go. A little technical issue, nothing a problem. Of course, we're Metastock. I'm going to talk about Metastock more in a second. Our next guest is a good friend of mine, Oscar Carboni. I've been talking to Oscar for a really, really long time. I really like the way he uses trend lines and the way he uses Metastock and the way he talks about markets and the way he shows charts. At one point, Greg, our marketing guy, calls Oscar, and I don't think I could say it better myself, but he calls him a force of nature. So he does a great job. Oscar, how are you doing today? I can see you over there.
I am well. Thank you, Jeff. Great presentation this morning. Love those two guys that you just had present for us. I like to see the inner usage of Metastock taking place. It's fantastic.
Cool. Well, let's see. We already have somebody saying, wow, Oscar the Great Carboni is here. Maybe that's what we should do, is just start calling you the Great. Oscar the Great Carboni.
Don't make me start singing. You'll take that time.
Ooh, I'm going to keep going if you're going to sing. No, I'm just kidding. I'm going to get out of the way. It's your turn. I know we're starting a little bit late. It's okay if you take as much time as extra time if you need to. I'm next. But in any case, it's all yours. I'm going to go ahead and get out of the way.
Rock and roll. All right, let me just move these pictures out of my way. And traders, good morning, good afternoon, and good evening from across the globe. Thank you for tuning in. Metastock, thank you so much for inviting me. You know, Metastock puts together some fantastic shows. They have these webinars every few months, sometimes every few weeks. I've been using Metastock since, I don't know, I'm 18 years old in 1982, and I've used everything out there on the street. And I will tell you, Metastock is my go-to program. Thank you guys for making my life so easy with Metastock over all these years. For you traders out there that are tuning in to see me, some of you know me, some of you may not. My name is Oscar Carboni. You can always find me in a live trading room on camera and microphone most of the time when I can do that. But I'm always there at livewithoscar.com. And I just want to go look at some charts. I'm not going to try to sell you any programs. I'm not going to try to show you anything that you don't know. What I would like to do is go over a series of charts with you that we actually went over in the last Metastock webinar, and they had a lot of action on the charts, each one of them. And those charts gave us little tips and tricks to use moving forward. So we looked at the charts in the shape they were a couple of months ago, and those very same charts I am going to bring back today, same charts we used in our last webinar, to see where we're going and if there are some new tips that we can use moving forward for the next few weeks or months ahead. So we started out with a Russell 2000 chart in our last webinar, and it was ugly looking like this one right now. But let me just remind you before we get started that this is a very risky game. There's a lot of risk in trading. You've got to know that. You've got to use protective stops anytime you're going to trade. You put those stops in before you even get into the live position, and then at least you have insurance against something going wrong. It's a very risky game, and you can lose more than you've got in your trading account in futures. Know that, and put your stops in first, okay? Now, how do we mitigate the risk? We use charts because I can tell you, 41 years doing this, there is no better roadmap on this planet than what you are looking at right there. The chart is a technical look. Well, it's really a visual look at all of the information that comes out, government reports, what people think about those reports, how traders react to those reports, what the funds are doing, the news that didn't come out yet, the news that already came out, insider trading. You know what all of that is? It's all built into this chart. And you know what the chart doesn't have? Human emotions. It doesn't have BMW payments. It does not have alimony payments, child support payments. It doesn't have a reputation. The chart is pure. And if you can read the chart correctly, you know where the markets are going next with a better degree of accuracy than anything else that you can come up with. A clean chart and a good pair of eyes with a good chart read can tell you everything you need to know. So what does that mean? When we were looking at the Russell 2000 several months ago, we had this nasty head and shoulders formation, which dropped down into what we call a bear flag, this purple bear flag looking formation, created a smaller bear flag inside of the big bear flag, and proceeded to crack. Now, interestingly enough, in front of your eyes, our last webinar, we gave a projection of 1698, and that was exactly where the market got down to. In fact, the low on that drop, thank you technical analysis, was, what's the low here? 1698.30 was the low of the drop. We called for 1698 using technical analysis. Where was the low? Well, we expected it to hit the low of the channel. When it did, that was the exact projection, and it bounced. So does analysis work? My goodness, these things work so well. So in the past, that's what we had. And what we talked about on the Russell 2000 was this. We need to get above the 200 bar moving average, which is this teal moving average right here, which, as you can see many times when it tries, gets up there and fails, gets to the average, drops, gets back to the average, has a little bit of trouble, then fails. So we thought from looking at the chart a few months ago, it needs to get above the 200 bar moving average and above the red resistance line to turn the tide. Well, let's see where we are now. Has that happened? Let's pull some of this stuff in and see what we've done. Now that we've advanced, yes, we have gotten above the resistance, the red line. We are above the 200 bar moving average. And we've had this is powerful. The street loves it. They think it's something that they should pay attention to. And that's why I do. I don't care if there's a real reason behind it. I don't care. The street watches it. I watch it. So there's something called the Golden Cross. That's when the 50 bar moving average gets above the 200 bar moving average. The 200 is teal. The 50 bar is blue. When you get a crossover, they call this the golden cross, and I assure you that Wall Street starts to pay attention to golden crosses. Since then, we have started to move higher, and if you'll note, let's go back a little. In this chart, we were in this nasty red channel, moving lower, below the 200 bar moving average, below resistance. Where are we now? Well, we are above the channel. There has been a golden cross. We're above the 200 bar moving average, and look at how the channels are now starting to point north. This is the new channel that's developing. No more ugly red channel pointing lower. You've got a new channel pointing north. You've got to love that, right? So it doesn't mean it's going to go up every day. But now we're starting to see that we're getting out of that insane downward movement channel, trend channel that we've had, and we're starting to build some positive things here. Golden cross above the 200, channels are working higher. So that's where we are now compared to where we were. And I believe on each one of my charts, I've got sort of a where we were and where we are now and what can help us moving forward. So we will look at a lot of charts today, and I think you will find many of these are going to help us. Next chart on the docket, the E-mini S&P. By the way, if you've got questions, please write them down. At the end of my chart segment, I'll be happy to answer any of your questions about any of these charts or others if we have time for it. Now we're looking at the SPX, or the S&P daily bar chart. When we looked at this last, we had our opinion. It needs to get above the 200 bar moving average. It needs to get above the red line resistance, sort of just like the Russell. Well, what have we had happen since? We are clearly above the 200 bar moving average now. Clearly, because it's here. And every time we've gotten to it in the past, we failed near the trend line or at the trend line or the 200 bar moving average. So that tells us we need to get above it and above resistance to change the tide, right? Well, time has passed, and here we are now. Let's move this little tool over here. Look at where we are now, above the 200 bar moving average, above channel resistance, and we are very close to seeing a second, which is a beautiful thing, golden cross. It hasn't crossed yet, so you can't say it's crossed, but look at this average. Look at how close. Let me blow that up for you a little bit. Look at how close we are to a golden cross taking place right there. So, Russell, golden cross. The street pays attention. I promise you they do. Even the S&P is above the 200, is above resistance, right? A possible golden cross, and now channels are working higher. So we've got upward channels, golden crosses, happier days ahead are what the charts are starting to tell us. There's a theme building here, and 2 weeks ago, the charts looked terrible. Suddenly, they are starting to look much better. So I want to look at a lot of charts and make sure that this technical picture that's developing is real and not just on a couple of charts. So we're going to look at a lot of charts today. One of the charts that we looked at in our last presentation, the NASDAQ. What you can see in the NASDAQ clearly is the 150 bar moving average, not the 200 in this case. The 150 bar moving average was the absolute end-all be-all for NASDAQ rallies. So what does that mean? We get under the average right here for the first time, and it stays under, tries to rally. Look where it fails, right at the average, right? Into a bear flag, down, down, down we go, bottom of a channel. Where's it go? Just gets above the average. Failure. Down we go. Where's it go again? Right back just above the average. Failure at the trend line. Down we go. What happens here? This turns green. That's no longer red. We make that ellipse green now. And look at how much more exciting it starts to become. Now we are above, finally. Finally, we get above that red, that purple resistance line. We are above the 150 bar moving average, and guess what? The street pays attention to this, I promise you. the 200 ball moving average. We are above that too now. That 200 is right here. So let me blow this little area up for you just a little bit. The 200 ball moving average is that teal average sitting right there. We're above that. We're above the 150. We're above resistance. That's different, kids. That's not the same picture that we've been seeing. It's getting more bullish out there. In fact, the market is changing complexion right before our eyes, slowly, luckily, because we don't want it to turn quickly. But the stock market itself, the street, Wall Street, is starting to change complexion. How would we know? We did not fail as usual in this area. Suddenly we get above instead of another failure. Well, finally above. And above the 200, I kid you not, that's different. The street will pay attention. So NQ is above the 150. Congratulations to the NQ on that move. It's also above channel resistance, this purple line. And now, here's the tip on this chart. Maybe the 200 ball moving average has hit the driver's seat. If the 200 ball moving average is in the driver's seat, that is what you'll be using to cue off whether you should buy or sell NASDAQ for the next few weeks. Keep your eyes posted on that. The first strong tip that showed up in my analysis session. But of course, we're not done there. Another chart that we looked at was same thing, NASDAQ, but like the Russell, back in the day when we first did these webinars a few months back, it had a nasty head and shoulders, massive head and shoulders building, right? You've got the left shoulder, the head, the right shoulder represents the next move is going to be lower, basically is what that tells you. What happens? The market does drop, comes rallying back up for a last gasp of air that we call the Oscarism known as a head test. It failed at the head test, and where else? More importantly, at the 200 ball moving average. Right there in that red circle, down you go. Smack. From that point forward, it never hits the average again, just cannot get out of the channel. What has happened in the last few days? We are out of the channel. Beautiful thing, right? Above the channel. Above the 200 ball moving average, and once again, channels are now starting to point north, not south. Look at the blue channel forming. So I'm starting to see a slightly more positive picture of our indices, a picture that may allow me to take off my whiteboard in my nightly videos the sentence, do not fall in love with the upside. That may be able to come off soon. So as we move up a little bit, we blow up this chart, some things here that we need to discuss. Hooray, above the 200 ball moving average. Wall Street loves it. We are above the red resistance channel. New channels, the blue ones, are working higher. So the tip here, holding above the 200 ball moving average will signal Wall Street funds to plow in. That's what will happen. We just need now to stay above and let the algorithm start to pick up on the fact that it didn't just get above once, it's above and staying above. That will help the markets move higher in the next few weeks. Just need to stay above that average. And what else is on the docket? Again, I'm only going over the same charts we used in our last webinar to show that these charts are congruent. You continue to use them and they give you fantastic signals along the way. So the Dow Jones Transportation Average, there's a lot on here, so let's start back here. Way back before Russell, S&P, NASDAQ, or Dow even recognized we were having an issue, two markets recognized it. Capitulation day took place in the Dow Jones Transportation Average and in T-bonds. The Transportation Average capitulation day is there. From the close of this big green spike bar, I literally put this sign there and I said, that's capitulation. There's no need to even ask. Look at the size of that bar compared to everything else that happened. Capitulation takes place. That starts the top of the red channel moving down. As you can see inside this red channel, you could not get out of it no matter what. I mean, no matter what this market tried to do, it was just held captive inside the channel. From top to bottom, just held captive. Right? Boom, down to the bottom, up to the top where the 200 ball moving average gets involved, down to the bottom, back to the top where the 200 ball moving average gets involved. Remember the golden cross? We've had two. This is the third one I'm about to show you, golden crosses. Well, the opposite of the golden cross is called the death cross. That's when the 50 ball moving average, the blue, gets below the 200 ball moving average. Or let me just say the death cross is when shorter term moving averages get below longer term moving averages. So here you have a death cross. And what happens? You spiral lower almost immediately. Start making lower lows and dropping. Death cross took place. The street pays attention. Now they see there's a golden cross that has taken place. That's the happy side of the death cross. Now you've got 50 ball moving average, the blue, above the 200, the teal. The street is watching. So what does this chart show us? The golden cross, smaller averages above larger averages, has taken place. Channels and averages are starting to point up now instead of down. And as you can see, red channel pointing down, death cross, averages pointing down. Well, what do we have now? Averages pointing up and channels pointing up. You see, kids, there's some light at the end of this tunnel. We're starting to have a better looking market. That doesn't mean we cannot go lower, but I'm reading you the tea leaves that take place today on January 30th, 2022. We are going to start to work higher if this continues. I have been buying dips. I am a buyer of dips. Today, I tried to buy the dip, and we were stopped out in NASDAQ. It didn't work today, this morning. Sorry to say on the X, but it's only Monday. However, buying deep dips in this environment, let's not speak day trading. Let's talk swing trading. Buying deep dips inside this blue channel above the golden cross and above the red resistance, which is now support line, is probably what we want to be doing with the transportation average. So the tip is the landscape or complexion is absolutely changing. Projections are now coming in higher instead of lower. All right, love it. Let's see what else is out there. Back to the Russell 2000. Reason? Because this is one of the charts we used on our last webinar. I can't not bring it up. All right, so Russell 2000, we had the left shoulder, head right shoulder, which absolutely worked, created the bear flag, which dropped down to the projection we spoke about earlier. But I guess why I had to bring this one back up was this. In the past, we talked about this chart and said, will the double bottom here hold? Well, triple bottom, I'm sorry. Will the triple bottom here hold? And it must get above the 200 ball moving average and resistance to become, to turn the tide, so to speak. Remember, traders, good chartists make projections, not predictions. None of these are predictions that we make on these charts. We're just projecting based on formations and such. The projections tell us that we're starting to project higher, so to speak. So people's predictions, if you will, that I don't make, should be projecting higher now that we're starting to show it on the charts. Okay, so it all began here with the Russell. I kid you not, the Russell was the first one to crack. It was the first one to put the head and shoulders in. Yes, transportation average had a capitulation day, but then it sort of mellowed out. The Russell immediately went into a big bearish formation, secondary bearish formation called the bear flag, cracked seriously. But when we looked at this chart last together, we were at the triple bottom. Will it hold? There's a question mark here. Well, absolutely. Let's get rid of the question mark now that we're back to this chart again. It did hold. Question mark gone. That's an exclamation point now. So it held. It rallied. And what did it do? It got above the red resistance. They're all getting above their resistance. I wanted to make sure you can see that. And we've got another golden cross. The street's watching, kids. So golden cross is in above the resistance. Market is working higher, and once again, you've got trend lines moving to the upside as opposed to the downside, which I love seeing. That's what we want to see. The trend now moving higher means slowly complexion is changing. And believe me, that's what we need from these markets. Everyone's got 401, not everyone, but a lot of people in this country, in this world, if you will, have retirement funds. Those retirement funds are being traded in the markets, and we want the markets to go higher for the general public, right? For the public at large. You always want the markets to go higher. It's not what we had in the last few months, but it is starting to shape up as a decent size rally thus far. And congratulations to people with 401ks, because believe me, they've gone down quite a bit recently. So what else did we look at in our last presentation? Here's a good tip for you. Crude oil. Look at this one. Simple, powerful. Crude oil daily. We know that crude oil below 77 helps buoy the stock market, but let's just talk about what we can glean from this chart right here. We had downside projections when we looked at this chart last. We made the projections right here, and we expected 83 and then 77. The market literally came down and hit 83 and then eventually hit 77. So the projections worked out. While those projections worked out, something else happened. A big red channel formed. The big red channel started to form here. So now we've got a huge red channel in crude. And what's the tip right before our eyes? Look at how it just fails miserably at the 100 ball moving average. That is your key for direction. If you want to trade long side of crude, do it above the 100 ball moving average, which it doesn't get. If you want to sell rallies, sell into that 100 ball moving average. The stop is not grand. That is the tip I would like to offer to you in crude oil using this chart, one of the tips that I found. And you can see it's having severe trouble ever since it got below the 100. Used to stay above, by the way. Used to stay above and stay above even when it tried to go below. It couldn't. But then one day it did, and it's been below ever since. That has been the trigger, and Wall Street's using it, I promise you. Algorithms basically programmed by this, everything that you see on these charts, what happened in the past. The market movement is what's programmed into algorithms, right? And of course, what to expect because of certain market movements. Well, that movement's right before your eyes. Algorithms don't know anything we don't know, I promise you. You'll see when we get done with this. What's next? 30-year T-bonds. Rates are dropping, pushing the stock market up. Isn't that interesting? Because when we looked at this chart last, we said, rates are rising. It's pushing the stock market down because that's what the chart was doing. So how do I know that? Well, look at this ugly channel. I'll just do the bottom of the channel line. You can see the top one. All right. So look at this ugly, ugly channel. All right. The top line would be here. I'll make it just a little thicker because I don't want it to get involved in our average. So you're in this nasty channel. And yes, while the bond market futures push down, it pushes rates up. How do we know? It's an inherent relationship. Up here in the corner, I've got what you call a little teeter-totter, a seesaw. Like, let's say we're out in the park together. The seesaw's got interest rates on one side and bonds on the other. Well, what happens with the seesaw is if one side goes down, the other side goes up. You can't not, it's not going to not happen, right? So in this particular situation, the bond futures were the big heavy kid in the park, and the interest rates was a little light kid, and they kept going up. That was during the big drop. What we're getting now is, look at this. We're starting to get channels, just like in the stock market, working towards the upside instead of the downside. That we haven't seen in a long time in bonds. What else is happening? Right now, use the 150 moving average. It's the simple MA, so it's the simple 150 simple moving average. Use that to decide bond direction. If you hit the average and can't get above, it is an absolute short. If somehow we end up above that average at some point in our lives, you can start buying. But right now, you're going to key off selling that average. So the opposite is the truth. When rates are going down, when futures are going down, it makes rates go up. When futures are going up, like you see in this blue channel, rates are literally starting to go down. We'd love to get above that 150 ball moving average and see rates start to drop a little bit. That's not quite what the Fed wants yet, so one step at a time. Now, here's what's interesting. The bond market, its movement is in direct relationship to what the Fed is doing. Everyone knows that, but here's the visual proof. See this little triangle right here, this little delta? Right there, the Fed shifted its policy from 75 basis point rate hikes to 50 to 25. right around this area, we started shifting from 50 to 25. And right there, bottom comes in bonds, and they start moving up. Why? Because the Fed shifted its policy from larger increases to smaller increases. Down to quarters now we're going to be, right? So now that we're down to quarters, you've got that whole blue channel building because we went from 75 basis interest rate hikes to 50, now 25. Sure, it's going to push the market higher, the bond market. But it did only push it up to the 150 ball moving average. That's the tip on this chart. Doesn't get above, you can be short bonds. Does get above, keep your eye on bonds for some upside. Let's see what else we have out there. That's not what we need yet. Hold on, let's go look at more windows. We'll come back to that. We're going to build into weeklies. Let's look at dailies for now. Okay. You roll out into a euro currency chart. We did this chart in the last time we did our webinar, and boy, it was really scary looking. If you're in Europe, just think about this. And this is exactly the note that was on the chart. This is a disaster of adding in inflation and the high price of crude. Use the 70 bar moving average to sell short euro, and look at how well that 70 did. Just look at all the great shorts that came off of that trade. That was then. We've got a new chart now. Window. Open window. Let's see, down here. Look at this. We have got, if I can spot it, another euro chart that we need to take a look at. It's probably this one. Let's look. All right, it's the one right under it. Sorry, kids, that's so little I can't read it. My bad on that. Window, more windows, and that is the euro currency. So, sorry about that. I just couldn't read the chart. Same chart, but now we're moving to today. What's happening right now? Yes, we were in that nasty, nasty 70 ball moving average. It's still sitting right here. That was horrible. We have broken above that. It was a bear channel. We are now in a bull channel. We have broken above this ugly red channel. We have gotten above that nasty 70 ball moving average that kept us in check the entire down move. We've got channels moving higher, and oddly enough, they went algorithm switched from the 70 bar moving average to an 11 bar moving average. So the 70 bar, here's the tip, the 70 bar moving average no longer in play. Channels are now projecting higher. The tip, use the 11 bar moving average to time the euro. Look at it. Boom, you hit it. It works perfectly. Look at that. And that's what they're using right now. Why would they go to something as small as 11? I don't know. I don't care. I have no need to reinvent the tire. It's already been invented. Put it on my car. I drive really fast with it. I don't care why they're using the 11. I'm never going to even try to figure it out. So they went to a small average. That's what we'll use to time the euro. Let's see what else we have out there. We did bonds, we did crude, we did euro. Let's go to Bitcoin. Okay. When we looked at Bitcoin last, it just looked terrible. This is the exact chart that we looked at with all the crap that we found together on it. Big head and shoulders, big resistance line, red, below the 200, a bear flag, another bear flag. Just terrible. You can't hide in Bitcoin or Ethereum was what our thoughts were when we looked at this chart last. Just looked terrible. But time has passed. And let's go take a look at what Bitcoin looks like today. Bitcoin is one of these bad boys. Okay, that's already open. Let's go grab the other one. Sorry about that, kids. I keep grabbing the wrong window. This is usually all set up for you, but last night my charts blew up and I had to rebuild this entire webinar. So it's happening live before your eyes, basically. Okay, Bitcoin. Dollar, I'm sorry. I did not pull our Bitcoin chart. Let me open it another way. There is another Bitcoin chart that you need to see. There it is. Okay. So all I've done with this Bitcoin chart was basically get away from all that ugly head and shoulders stuff that was over here. I just now took the chart and showed you what's going on since we got above a major trend line. So this is what Bitcoin looks like, just blowing up the right side of the chart. Bitcoin is looking much better. It has broken out of this pennant flag, right? Broke out into a channel moving higher, and this is the kicker. Right now, I don't know where it'll close tomorrow. Right now, at this moment in time, it is above the 200 bar moving average. We haven't seen that in so long, I can't tell you. I mean, look how far back you can go. The highs of Bitcoin is the only time we were at the 200 bar moving average. Since then, we haven't seen it again until now. We are back at that average, and I promise you, the street is looking at this. So, and that should say buyers here. Check this out. So here's what I think we need to do right now. Wall Street algorithms watch the 200 bar moving average in Bitcoin as aptly as they watch it in stocks. If Bitcoin stays above the 200 bar moving average, it will attract buyers, absolutely, positively. That's what's going on with this chart. And I'll tell you right now, that's a good looking chart. Yes, it can come back down, but from the chart that we looked at a second ago, compared to this one, and I believe it may be right in this list, a little easier to grab. Hold on. This one, no, I guess not, compared to the one above it. Look at this one, how bad that looked. But the important thing was we got above this red resistance line. The most important thing here, if you ask me, is this long red resistance line. So when I show you this new chart, the one that we were just looking at, oh boy, is that tricky. It doesn't just open up when I ask it to. All I've done was blow up the chart past that red line. See, it's the same red line. We got out of it, and I just blew it up so that you can see what's taken place since. And I'll tell you right now, not bad. Go Bitcoin. I like what I'm seeing in it. Could it turn around and drop? Of course it could, but it looks pretty good here. So what else did we look at in the past that we can glean together? We did euro, or the dollar index. Okay, so traders, when we were looking at the dollar index last, this is what we said. We see it, we hear about it, but we do not feel inflation barring at the gas pump as much as the rest of the world does. Why? Because the dollar was moving up and keeping pace in some ways with inflation. So while we had this inflationary environment that was building before the Fed started raising rates, and of course built after the Fed raised rates, the dollar went up at the same time. All right, so if prices of things at the store are going up and your buying power currency is going up, it's not as lethal as, let's say, the euro, what was happening in Europe, right? That's what we were talking about in the past. Time has passed. The bull channel has now cracked into a bear channel. The same 70 bar moving average, by the way, worked in the dollar. 70 bar. So it worked in the dollar really well, but it has cracked since. And look at channels now. Channels have changed from blue and happy on the way up, bull channel, to bear channels on the way down. And the algorithm switched. Here's your tip on dollars. Use the 13 bar moving average to time dollars. Why would I know that? Well, take a look at the 13 bar moving average. Look at how well it works on dollars. So currencies have switched to very small averages. All right, because they're moving quickly. That's why. That makes sense, to be honest. All right, what else are we getting? Another channel inside of this channel. So we are getting nothing now but bearish looking channels. where we used to have bullish looking channels. So the dollar is changing complexion, as is the stock market, right? So you've got this channel building. We'll make it blue just to make it different, or any other color just to make it different. And this way you can see the difference in the channels. So now we are no longer doing what we were doing, which was moving up in our dollar index. Now we are moving down, and that is clear as can be. But the trick is, you used to use the 70-bar moving average to time your dollars. Now you will be using the 13-bar moving average to time your dollars and sell rallies inside of this ugly-looking environment. What other windows do I have planned that I won't be able to see without my bifocals? Anyway, let me throw on some binoculars and see if I can actually see. Oh, I can read those now. Let's see what we should look at next. Okay, we can roll out to some stocks. Traders, NVIDIA. A lot was happening on this chart when we looked at it last. One of the things that was really important was the knock technique. And I was showing this to you at the time, and I said, you cannot knock on a stock door this many times without it opening. At the time, we only had 4 knocks. If anyone remembers the chart, I remember it clearly. Well, we knocked a 5th time here. So what do I mean by knocking on the door? Well, here's the door. Knock. It doesn't open. Knock. It doesn't open. And goes back up. Hits it again. Knock. It doesn't open. Knock. It doesn't open. This time it has a big rally. Boom, boom. And when it hits this time, the door finally opens, just as we suspected. And down the market went. At the same time, we talked about use the 90-bar moving average, simple moving average as your trigger. That was then. Let's move to today. What's happened today? We got above this crazy red channel, thank goodness. We used the 90-bar moving average to become a buyer instead of a seller. Look at what the market's done. Used to be when you hit the 90, you sold, right? Boom, gets up to 90, you sell. If it moves down, it gets back to the 90, you sell, all right? Well, look what happened as of here. It started to become a buyer. You hit the 90, you can start buying. The last dip below is here, and the rally takes place. So we are above the 90-bar moving average. Top day, what can we use now? Here's the old information. Let's go to the new information. We are above the 90-bar moving average on NVIDIA. It's above the red resistance channel. It's above the 252-bar moving average. Now, why is that one important? Because there are about 252 trading days in the year on average. That is an average of every trading day for the year. It's a smart average. It's not used often because it's not in the way of a market a lot of times. It happened to get involved in NVIDIA, so I thought I would show it to you. We are above the 252-bar moving average, the green teal average right here, and in a nice channel moving higher. All right, so we're in a channel. We're above the red resistance. We're above the 252 bar, which is the yearly moving average. The tip, buy dips at the bottom of the channel, blue channel, and the 200 bar moving average. So if you get near this stuff, you buy dips. You get near this, you buy the dip. That's how we would trade NVIDIA, unless the landscape suddenly changes from there. Let's see if there's anything else on our docket. All right, we did NVIDIA. Let's do Zoom. This is such a giveaway. In the past, when we looked at Zoom a few months ago, our technical analysis together as a team, as a class, you cats with me, we came up with use the 55-bar moving average as your trigger. That is your trigger. All right, so the 55-bar moving average worked really well here and here and here. Every time you get near it, it just works perfectly. Look at this. Boom, it drops. Gets here, gets above, holds, holds, has a little work, drops, boom, boom. Every time you get near it, it works. So the only thing I can say about Zoom right now, is the tip on this chart is you can continue using Zoom and the 55 bar moving average. So the 55 bar simple moving average is your trigger on Zoom. Keep using it. It was working months ago. It is still what Wall Street is using today. So if that helps you on Zoom, if you're a Zoom trader, that's what you should be using. And what else do we have? All right, I think we can go out to, let's try this one. The NASDAQ weekly. We looked at this chart in our last presentation. And you know what? Let's get back to this puppy. That's why I wrote that. I looked at that last night and said, we'll get back to this at the end of the presentation. Let's go look at a couple more. And we'll come back to NASDAQ. What else is in our windows here? If we don't do the NASI down here, we can do this guy. All right. So now we're out to weeklies. Those daily charts were for shorter term trading. These weekly charts are more for direction. Where is this direction going? What do we have going on here? Dow Jones Industrial Weekly. It has gotten above or held above the 200 bar moving average, is in a bull flag, is above this red channel line on the weekly. I'm telling you, that's complexion changing here, kids. Boom. We are above the red channel, above the 200 bar moving average, in a bull flag, and then there's this. You've got the 50 bar moving average in play. You see how up here, let me grab a little tool, up here, the 50 bar moving average kept us in check. Let me just make that a little thicker so you can see my little point out tool here. If you look, that 50 bar moving average started to keep us in check. Here again. And here again. But look at what's happened since. Now we are above that average. Here, look. Now we are above that average. In a bull flag. Above the red channel. Complexion changing weekly and daily, kids. The tip on here, buy dips down to the 50 bar moving average or the bottom of the flag. They're both in the same place. What else do we have to look at? Binoculars, telescopes. All right, we did the training, right? We've got the E-mini S&P. Oh, this one is powerful. Look at this one. So, E-mini S&P on the weekly bar with the 200 bar moving average running through it. During COVID, you broke through it. In every other chart I've shown you, by the way, you broke through during COVID. You broke through the 200 bar moving average several times on the weekly, going back to 2000, 2008. So you came down and smashed through the 200 bar moving average like it did during COVID right here, like it did in many instances going back to the year 2000. S&P did. The transportation average broke the 200 bar. The Russell broke the 200 bar. The S&P broke the 200 bar. All of them broke the 200 bar moving average, which is why it's so important they're back above. See here how we held the 200 bar moving average right here? And the important thing is this. Look at the horrid resistance that started here. Look at this drop to a rally, right? First thing you do is crack seriously hard. Back up, cracks seriously hard. Where to? The 200 bar moving average. That's what Wall Street watches, I promise. Back up, not the only thing, but they watch that like a hawk. Back down, but look at the difference today. We are above for the first time in who knows how long. Look, that is different. Different. Above the 200 bar moving average. Wonderful, we knew that. But getting above that weekly resistance on a weekly bar doesn't happen very easily. It is finally happening. So the tip here is if we could spend one more week above that red bar, that red resistance, away you will start to go. Wall Street is watching this. I promise you. Wall Street is watching. They see it getting above that resistance. They know And then there's this. Nope, there's one more. Another NASDAQ chart I want to get. Well, we can just use this one, but let me see if I have one more for you. If not, we'll use this one. There should be a different NASDAQ for you that has a little bit more on it. And if not, we'll just go with this one. All right, so we'll use this one. Works for me. If this one isn't it. All right, so we're getting back to this puppy now, and here's why. I'm going to show you something really interesting about this chart. Here's your 200 ball moving average. Okay? We never, ever, ever get below it. In fact, the NASDAQ is my entire thesis behind why I thought we were going to drop once we started to get below the 200 ball moving average. Actually, I do have that drawn up. Now that I'm remembering, I have that drawn up for us. Let me pull it. That's definitely in this stack somewhere. There we go. Okay. This is our indicator. After all the charts I looked at, and I looked at a lot more than the ones I showed you, and I spent a lot of time going back for years and years, and I am telling you, the NASDAQ, if you glean nothing else, if you get nothing else from today's presentation, this is our indicator. There's almost nothing else you need to use. It's rock solid. Why? See this dip during COVID? Well, this is the 200 ball moving average, right? Right here. This green, whatever color you want to call it. 200 ball moving average. Even during COVID, we could not get below the 200 ball moving average. Thank you. Well, let me grab that. Even during COVID, the COVID drop, you didn't get below. Here, you did not get below. Let's go back. Let's go back. You don't get below until 2008. That's the only time. And it was brief. Boom. Right back up. And that is it. The NASDAQ is never below the 200 ball moving average on the weekly. It just doesn't happen. Except for 2008. And then we had recent. Recently, we'll blow it up a little. Look at all the weeks that we were starting to spend below the average. These are weekly bars. That's 5 days at a time. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 days below the average, if not more. Started to get scary. But look, we're saved. Above the average, above the resistance. This is big. So, as we were starting to get below that average, I was starting to wonder, hey, wait a minute, you don't get below the average. Only the 2008 crash was able to do that. What is going on here? Well, thank goodness we got back above that average, and I'm happy to see that now we can start looking for upside. As long as we don't get back below the 200 ball moving average on the NASDAQ weekly, I promise you that this is the chart that you use for sense of direction. This is major. That's a wonderful thing that we're seeing right there. And this is what I wanted to present to you. I wanted you to see all the charts that I looked at. I wanted to make sure that if there were any tips that I found that will help me moving forward, that I shared them with you. So that's about it. I can go pull up 500 more charts and bore you to death, but I wanted to show you the important ones that are helping to mold the immediate future of our stock market, individual stocks, some crypto. It basically encompasses just about everything. Now, traders, if you'd like more of this, you could literally just come to livewithoscar.com. It's livewithoscar.com, just like that. You would simply come over here and register if you don't have a username. It takes no information, no credit cards. Once you registered, you would just log into my chat room. You'd end up here. You click daily chat, and you can chat with me live. You just got to fill your stuff out and be in a live chat room with me on camera and microphone, literally just like this. And if you'd like to join me while I go over these charts, there's usually a lot of people in the trading room and blah, blah, blah. Of course, it's closed at the moment while I'm doing my webinar, but it's that easy to get to. Just wanted to show that to you. You can also go to Omni Bootcamp, and you can fill out an application there if you want to hang out with me in one of my 5-day sessions I hold here in Las Vegas where I teach people in person. But barring that, kids, there's nothing here to sell you. I just want you to come hang out with me on my site and spend some time with me. So meet me at livewithoscar.com. Spend time with me in my live trading room. It won't cost you anything anyway, and we'll continue going over charts like this together. And hopefully we get something right and we make some money together this year. Thank you for tuning in. If there are any questions, I've got about 3 minutes. I can take them.
Okay, let's go quite fast then, because we have a ton of questions for you, Oscar.
Okay.
Amit says he sure is a force of nature. And let's see. B wanted to know, in your years of experience, does the Fed or exogenous events overrule the charts?
Does the Fed overrule the charts? Yeah. Absolutely, positively, 100%. If the Fed sneezes, wouldn't matter what the chart read was, it goes out the window. But there's not many entities bigger than that. It's one of the few things you need to worry about in the world. Barring that, the chart is stronger than almost anything else. But yes, the Fed's a little stronger than the chart.
There's a saying, don't fight the Fed.
No, not the Fed. If you would have asked me anything else, I would have said no. But when you said the Fed, stronger than the chart.
I thought you were going to say it'll be showing up in the charts.
If the Fed decides to sneeze, that's the end of that. New direction goes all the way, and that's that. They are bigger than any other entity that's ever come near the markets. They do control overall which way the markets go. They do not control the day-to-day movement. But if you're raising rates, the market's going to get pushed down a little. If you're lowering rates, it's going to get pushed up. In that way, they control the movement.
All right. Bar charts, better for trend lines than candlesticks?
So I don't like candlesticks. I mean, we can turn this into a candle, and I could show you why in a split second. Let me see if I can just make this a candle real fast. So right now, before I make it candles, we have a bar that's just a straight bar with a high-low close. That's all the information. When we apply this, what is this crazy nonsense? Where's the high? Where's the low? Why is it? It's got a wick. It doesn't have a wick. It's got a body. Is the body full? Is it not full? Why are we adding so much information into something and complicating something that should be this simple? A simple, I don't know if I can find it. A simple bar is so much easier. There's so much less information to overcomplicate an already complicated business. So I don't want to have to deal with drawing trend lines on the tops of bodies and or the bottoms of wicks. It's just confusing. In fact, if you have a moment, I actually wrote a program in the 80s into the 90s. It was the first program to ever take candlesticks and put them on a computer. I go back that far. And we were like, wow, candlesticks live on a screen. This is amazing. Oscar, what do they mean? So I went and spent a year and came up with 2 years, came up with every formation I can possibly come up with what a Japanese candlestick means. I put those formations in the book, in the program, so that when you pulled up a chart right on top of the bar, it would tell you what it was. And after the 2 years of research, I told the team that built the program, I will never use candlesticks again for the rest of my life. And I stopped using them from that day. So the program still exists, but I don't use it. It cured me from using candlesticks.
All right. Next question. Do you use fundamentals at all on stocks?
So fundamentals come out in the charts first. Yes, you must pay attention to them, but almost always the chart is giving you a good read before the fundamentals. For instance, CPI, PPI, and then consumer prices and end production for the first time all came out better. And look at what we've done already. The chart's already showing that now you're above resistance. You see, it does come out in the charts.
All right. B wants to know what is the secret sauce to the MAs and how do you pick them?
So there really isn't a secret sauce. As far as I'm concerned, a good moving average stays out of the market's way, like that one right there. So an average that I find doesn't work is, let's say, something like this. You see how it's just all over the chart? It's on it, it's through it, it's just all over it. For me, which one was right? Which one was wrong? Should we take the trade? Should we not? So I like to see averages that look like this, far away from anything, so that when you get to them, like this, you come smashing down, meaningful, right? Then it stays out of your hair. Comes down, meaningful. Those are about the only averages I like to use. Now, the only difference is I don't choose the averages. Wall Street does. I just follow what they're doing. In other words, no one calls me up to tell me. I see what average fits perfectly on the chart. I know that's their average, and that's how I find it.
All right. Let's see. Richard says, Oscar, thank you. I enjoyed your analysis. What's the best time to log into your room?
Either when the sun's up or the moon's up, or neither of those two are up and it's cloudy. All those times are good. Within 24 hours a day, when you're awake, come log in. So in other words, I work the evening markets, I work the day markets, I work the night markets, I work the afternoon markets. We start at 6 p.m. on Sunday evening, and we continue until 5 p.m. Friday evening at the end of the week. So we're always here. Just come join.
All right. Oscar, I want to say thank you for coming. In addition to all the great comments we have, I always think you do a wonderful job. It's always so good to have you.
Thank you so much. I enjoyed this, as I always do, and I hope I left a few tips out there for others that can, hopefully it'll help them moving forward for the next few weeks.
I think so. Thank you. Appreciate it.
Thank you, everybody. I appreciate you tuning in. I hope I was able to help. Please come join me at livewithoscar.com. Jeff, Metastock, thank you so much.
Thank you. All right. Let's go ahead and make me the presenter. Thanks again, Oscar. All right. He does do a really good job. So the website for that is livewithoscar.com. You should definitely check it out. Let me go ahead and kind of just make me the presenter. We'll go ahead and start a screen share. Okay. And this is a class I was telling you about. B says, Oscar's funny and a great trader. Thank you. Yeah, he does such a great job. Been a partner for as long as I can remember. These levels are just going to bug me. Let me go ahead. Let's see here. The sun's up. It's time to get a little darker here. Let's go ahead and adjust the contrast as well. We're doing this on the fly, but oh boy, that's way too much. Okay, let's go back up a little bit. Maybe right there. Perfect. Okay, let's do that. I'm looking at this really pale. I mean, it is winter, so, All right, let me go ahead and just make sure you guys, I hope you're enjoying yourself. I hope you're having a good time today. I hope you can also see my screen. It should say trend lines and technical formations. Let me know if you can't see that. I would appreciate that. But we did sit down and we did a masterclass with Oscar. And as you can tell, he uses a lot of trend lines. He uses a lot of technical formations. And that's primarily what he's been doing for decades. And in this class it was a premium class that we set up. He shows how to draw up a chart, how to do trend lines, how to find support and resistance, how to look for those technical formations. All in all, I sat through this class. It was a year or two ago. It was 3 hours of really, really good instruction, and I would recommend that you take it. It is a premium class. Normally, we sell it for $499. Here at the summit, we're going to do $349. So, and it's instant access. So if you sign up for it now, you'll be able to get access to it right away. And of course, you can start watching it right after the summit if you'd like. So to take advantage of that, give us a call at 800-882-3040. or metastock.com/saleschat. It's a great class, and you'll certainly like it. It is included in the Summit bundle. So, we were talking earlier about the trend, and that's $90 a month. GoNoGo Complete, it's $1,500 by itself. The Oscar Carboni live training, which is Oscar just talking about what Oscar does best, trend lines and those technical position managements. All of that, in addition to 3 months of Learn Metastock, 2 years of Stocks and Commodities magazine, and our Unleash the Power of Metastock. So normally the price on all of that separately would be $2,810. Here we're going to give it to you for $1,235. I'm looking at that price. I should have made it $1,234, but $1,235 is the price that you'll pay for it today. It's a great bundle of kind of like all of the stuff that we're talking about today. You can get it at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. So it's a great package. You should definitely take a look at it. So let's go ahead and say thank you to Stocks and Commodities, or actually CMT. We're going to do CMT again this time. CMT Association has been sponsoring the events for a couple of years now. Very, very well respected. One of the things that's interesting is when we have Tyler come in. Tyler was here earlier with Alex, but Tyler will come in as a representative for the CMT Association occasionally as well. And what's really interesting to me is how much a CMT designation can help you if you're looking to manage money on a regular basis. I just realized I didn't have to have the headphones on right now because I'm going to be talking for a minute. So if you are managing money for a living, or if that's something that you would like to do, get in touch with CMT Association. You can do that at cmtassociation.org. You can also call them at 646-652-3300. So there you go. All right, let's go ahead and do this. And what I want to do is I'm just going to resituate things just a little bit here so that I can keep track of the the YouTube comments as well as the chat questions. If you have questions as we go here, just let me know. I'm happy to cover them and kind of talk about them, all that kind of stuff. So we are, of course, Metastock for actually, I'm not sure it's quite official, but I have it on good authority for 30 years in a row. Metastock's actually been rated #1 in its price category by the readers of Stocks and Commodities magazine. And we're going to talk quite a bit about it today. In fact, we're going to talk about it for about an hour. So if you're interested in Metastock or some of the stuff that I've shown you is of interest to you, you can get a trial of Metastock where you pay for a month and you get the second or third month for free. And you can do that at metastock.com/traders-summit, traders-summit 3-for-1. So let's go ahead and talk a little bit right now. I'm the one that's speaking next, and I'm just going to tell you, I'm going to go ahead and kind of skip past this photo of me and just read our legal disclaimer and just kind of talk a little bit about what we're going to talk about today. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So hope you enjoy that. I've read that a few times. Just to kind of give you a little bit of background, you can read this, I'm not going to, but I started here at Metastock, and I think this year is going to be 26 years ago in March. And when I started, it's always been a really, really good company to work for, but 26 years ago, when I started, we were owned by Reuters. Then they became Thomson Reuters, and then they sold kind of the division to the Blackstone, and then it's Refinitiv now. Anyway, one of the things I've always liked about Metastock is it's been a great company to represent. I started in inside sales. Again, it was quite some time ago, but if you had questions about Metastock, you could call and we'd talk a little bit about how you're trading and what you were looking to accomplish with your trading, all that kind of stuff. And I'd be generally the person that you'd talk to. And I did inside sales for about 10 years. I loved it. It was really, really good. The next 10, I basically did a lot of business development. And so if you had questions around the software and I'm just kind of losing my train of thought. At that point, I'd help and talk to a lot of the people that we have had speak here today. Jeff Tompkins, Steve Bigelow, Alex Elger, Oscar Carboni. Oh, what a great job Oscar does. But work with them in terms of setting up a lot of the events that we do here and a lot of the online summits that we do. And I still do that to a great extent, and I'm also in charge of the sales team. So it's been a great company to work for. I've learned a lot. I didn't even know, when I started, I didn't even know what a stock was. And man, it's been a great 26 years. It's such a good company to work for. So in any case, the one thing I would like to say about Metastock is there's a couple of things before we kind of get to the extent of what we're talking about. We do get all of our data from Refinitiv, which is kind of Thomson Reuters or kind of the technology that they developed. And I'm not sure if you know who Thomson Reuters is or who Refinitiv is, but the thing about that is they're one of the most well-respected providers of data to institutions and hedge funds available. In fact, like some of the numbers that they talk about is they provide data from or news stories from a couple thousand journalists over a couple hundred different news bureaus. They're literally the data that we use and the data that we provide as part of our relationship with Refinitiv. We're not part of Refinitiv anymore. We bought ourselves back 10 years ago this year, 2013. But one of the things that we did, we've always kept a really good relationship for us. And that's been really good for us because if you're watching this from India and you want Indian data, we can provide that to you. If you're in Australia, another huge market for us, we can provide you Australian data, London, European markets, pretty much any place in the world. There's literally hundreds of thousands of instruments that Refinitiv offers. And when you get data from us, you're getting data from the same quality of data, the same caliber of data that you'd get if you were an institution or hedge fund. So it's great news, great information. I kind of went off on a bit of a tangent. I didn't mean to speak about that for very long. The other thing I've been really happy with is for longer than I've been here by quite a few years, Metastock's been rated #1 in this price category. If we win again this year, it'll be 30 years in a row, but it's 29 years straight. It's been rated #1 in this price category, and I love that. It's easy to kind of see software come and have a nice bulleted list of things that they do, but it's really hard to provide software that's really going to help people find better opportunities in the market and help them test ideas. And, my goal today is kind of to help you understand why Metastock's so helpful, why it's been around for so long, and why it still keeps winning year after year after year. It's a mature product. It's not like a web-based product. We're really serious about how well data gets delivered in there. So in any case, let me kind of get to the lesson, I guess. And then my goal here today, though, is to kind of, if you're not using Metastock, to give you enough information where you're interested enough to just do an extended trial. So let's go ahead and talk about what I'm going to talk about today, other than me and the software in the company. For those of you that have used Metastock for a number of years, let me know in the comments. I appreciate you. That's awesome. I love to talk to customers that have been Metastock customers for a long time. So today, what I'm going to talk about is the importance of using a trading plan. I'm going to actually teach you all about the MACD, how it's calculated, how you can use it to basically get buy and sell signals, to determine trend, to look for divergences, and then we're going to talk about how well it works. So, and then I'm going to give you a special offer for Metastock at the end. So, in any case, let's go ahead and kind of just get into it a little bit. So, as you guys probably can tell, the person right here is Richard Dennis. If you're not familiar with Richard Dennis, he is a famous trader back in the, I think the 70s or 80s. I have some notes here, actually. He was called, you can go through this with me, at the same time. Richard Dennis was called Prince of the Pit, okay? He borrowed $1,600, reportedly made that into about $350 million in about 6 years. Basically a famous trader in the 80s. And he believed that you could teach trading, okay? So he had a friend at the time, his name is Bill Eckhart. You can see that right here. And they basically, they had a bit of a disagreement. Richard said, we can teach people how to trade. What we're doing is not too complicated. And as long as they can kind of manage risk and kind of put in their stops and all that kind of stuff, we could duplicate what we're doing with other traders. Excuse me. I'm not talking about RMO today. No, Bob. I'm talking about system testing now. So, but thank you for the question. So he basically, Richard Dennis and Bill Eckhart basically had a bit of a disagreement. Bill didn't think you could teach traders how to trade. And as a result of that, they decided to try it. And so they brought in a group of traders. I think it's like 22 traders. And if I remember from the Investopedia article, which you can, not Investopedia, it's Wikipedia. You could go look it up and read more about it if you want. It was a pretty interesting little stub on there. But They brought in about 22 traders, and I believe if the numbers were right, 20 of them were men and 2 of them were women. And they basically taught them the rules how to trade. They gave them money. They funded them between like $250,000 to a couple million, and they basically set up traders. They taught them how to trade over the course of a couple weeks, and then they basically set them off, and they had this experiment that they called the Turtle Traders experiment. And even Alex Cole and Tyler Wood, they talked about the Turtle Traders and their breakout system and how they used Donchian channels. So it was a methodology that was successful. In fact, I do have the notes here. In aggregate profit, they basically made about $175 million in 5 years. So, and it was a group of 23 traders that are known as the traders. So there you go. One of the things that Bill Eckhart or Richard Dennis said afterwards is, I always could say you could publish my rules in a newspaper and nobody would follow them. The key to trading is trading with consistency and discipline. So, and then the other thing that he said was, I can't remember the other quote off my head, but I always thought that was interesting because we're talking about rules that are fairly simple. With Richard's system, if you understand what the Turtle trading system is, they were looking for breakouts. So basically, they were looking for stocks to hit, or actually they were doing futures, but they were looking for stocks to break out of highs, and they were basically trying them and buying them. So the whole point of that story, though, is to kind of talk about discipline. One of the questions that I ask when I go and talk to people in person is I ask them if they are currently trading or what they think. I'm sorry, I'm a little disjointed today. What do you think is the profession that's best suited for trading? So what do you think if you were doing a profession now and you decided to then go do trading, what do you think would be the best profession for that to set you up for success in trading? And I'm going to go ahead and let a few of you answer. Okay, because I'm going to come back to this after I talk about Gerald Appel for a second. What do you think is the best profession for trading? Okay, tell me in the comments. I'm waiting. Bob, you're first. So in any case, this is Gerald Appel. He developed the MACD system. I'm going to talk a lot about the MACD, a very, very popular indicator that has worked. I'm going to show you how it's calculated. I'm going to show you how to use it. I'm going to show you how to test it. So James says accounting. That's a good guess. I don't have much guesses here yet. So, but I'm waiting for some guesses. A lot of guesses that we get is like engineer. We also get teacher. We get a lot, and I'm giving you guesses that aren't true. So like I'm giving you the wrong guesses first. The other guess that we get a lot is psychologist, and I think physicist. Thank you, Sean. Physicist is a good guess. Psychologist is one we get a lot, which I think there is some truth to. It's not the exact answer that I'm looking for, but over the years, like I worked with, we've worked with Jake Bernstein. Jake Bernstein was a psychiatrist before he went into trading, and very, very much does a really, really good job. He does his seasonal stuff that he looks at. The technical stuff that he does is really, really good. Another person that comes to mind is like a good friend and mentor to me, Alexander Elder. He wrote Come Into My Trading Room and Enhanced Come Into My Trading Room. There's a second edition that he called The Enhanced Trading Room. Another book that I'm not thinking of right now, but he was also a psychiatrist, or not a, yeah, psychiatrist. Patrick says judge. I think that's an interesting answer. The actual answer that I'm looking for from this article is a pilot, an airline pilot. And I thought that was really, really interesting. And thinking about some of the people that we kind of have worked with over the years that are kind of professional traders and do a really good job. Greg Morris comes to mind. Greg Morris is somebody that was literally a Top Gun. He flew around. There's Chuck Hughes, who does a really, really good option strategy that we've built for Metastock, and he's another really good one. I mean, Greg Morris was a money manager for Stadium Money Management, and before he retired, he was doing billions of dollars. So, airline pilot. And I've thought about really why airline pilot and what do you think is special about an airline pilot, and I really think it does come down to discipline. The key is consistency and discipline, and the ability to follow the rules and to use discipline. So we're going to talk about rules today. Generally, what I'm going to do is I'm going to talk to you about how MACD works and how you can use it, how it's calculated, how you can use 3 different methods to identify the trend, signals to get in and out of a chart, and divergence. But what I want you to remember, if you just take anything else out of it, is discipline. When you're trading, I believe it's important to have discipline. And I think that extends to like knowing why you're getting into a stock, why you're getting out of a stock, know when you're going to get out of a stock, respecting your trading methodology and having stop losses in place. Those types of things that basically come with it. So there you go. Thank you for all the guesses, James and Sean and Patrick. I appreciate that. Let's go ahead and talk a little bit about Gerald Appel and the MACD. Today, what I'm really primarily going to do is just show you what the MACD is. I'm going to show you how it's integrated into Metastock. The idea here is when you think about discipline and the way that you trade with discipline, if you think about the MACD, it's a trading methodology. It's a trading plan. You can use it to kind of identify when to get in and out of a stock. And I just want you to understand with a trading plan how simple they can be, and then we'll see how well it works. So if you have stocks that you want to look at today, we're going to put them in the comments right away. So the MACD, when Gerald Appel divides the MACD, he used a 0.075 exponential moving average and a 0.15 exponential moving average. And I hope you guys don't want me to explain to you what that means, because I don't really understand. The fractional closest whole numbers would be like the 26-period exponential moving average and the 12-period exponential moving average. And what I want to do is I actually want to kind of go into the Metastock platform here. We're looking at a chart of Tesla. And what I'm going to do is we're just going to kind of clean up this chart a little bit. I'm going to go ahead and, for now, detach the expert advisor. I'm going to change the theme of this to a white background just because I like the white a little bit better. I think it's easier to see. And I'm going to kind of make this just a little bit easier for you to see. So I'm just going to reset this back to the defaults for you. And we'll go ahead and click on OK. We'll go ahead and close this inter window as well. And we'll go ahead. And for now, I'm going to close this expert commentary. So now what we're looking at is just a candlestick period calculation, a candlestick chart of Tesla. Okay. Now, what I'm going to do is I'm going to show you how they calculate a MACD. So if you're new to Metastock, one of the things that you're going to learn really quickly is right here. This is our indicator quick list. And there's basically several hundred indicators that you can apply on a chart. So regardless of what you're looking for, that's probably an indicator that's built into Metastock that you can use. Now, one of the things that we've added fairly recently is all of the most recently used indicators are stored up at the top. So if you're using moving average quite a bit, you'll notice that it's going to be right here up at the top. See, if there's indicators that you use quite frequently, you don't have to go find them on the list. You can just find them because they're here at the top. What I'm going to do is I'm going to actually put a 26-period exponential moving average. I'm going to go ahead and drop this on the chart and change it to 26. I'm going to make it a thick blue line. Okay. And we'll go ahead and drop that on the chart. Boom. It's that easy. It's just a drag and drop. One of the things Steve always talked about, Steve Michaelis was the founder of the company. What he always wanted to try and do is when we design software, we'd want to design it in such a way that you don't have to really think too much about what you're doing. What we wanted to do is make it so that you could kind of focus on the analytics that you're doing and what the chart's doing instead of trying to remember how to add an indicator or a chart or attach an expert advisor. And so as you're manipulating Metastock, I hope that you find it easy to use. What we've tried to do is we've tried to make it function like your Office program so that it's very, very straightforward, easy to use, and intuitive. Okay, let me go back here. I'm going to grab another moving average. I'm just going to drag and drop it here on the chart. Again, very, very easy to do. And we're going to make this one a 26-period exponential moving average. And go ahead and make it red. Okay. And we'll go ahead on it. Click OK. Oh, did I already do the 26? I already did the 26. Okay. So let's make one of these, and it doesn't matter which one, a 12. Okay. So now I've got a 12-period and a 26-period exponential moving average. Now, I'm going to plot the MACD on here so I can kind of just show you what this is. In MACD, I'm going to do the MACD histogram that's built into Metastock. Again, I just drag and drop it. The program will automatically determine that it needs to go in a different window because the scaling is quite different. We call that auto select. And it's another example of us trying to make things extra easy. So I didn't have to really worry about where I was dropping that on the chart, just that I dropped it on the chart, basically put it where I would kind of expect it to go. Now, I could overlay it. If you want to put MACD over the chart, you just drag it down to where you want it to be. But I don't have, like by default, if it's a different scale, it'll basically put itself in a new chart for you. Okay, I'm gonna go ahead and make this a little bit thicker. I just like to have everything a little bit thicker. And again, to make any changes, double click on the chart. I'm gonna come over here to the color style, and I'm just gonna make all of these, and I can do that all at the same time, a little bit heavier in their weight, just so you can see them a little bit better, okay? I missed the last one, but you see, it's very, very easy for me to kind of do this as we go on the fly. So, boom, boom, and we'll make this one a little thicker as well, okay? Now, if I wanted to calculate MACD, something's different here. Okay, let me just look at the settings real quick here. Okay, let me do this. Okay, something's not. Okay, no, I think that's me. I'm just getting a little bit into the head about stuff. Okay, so if I wanted to calculate right here, this right here, the red line here is the MACD. So if I go ahead and basically wanted to figure out the difference between the MACD, okay, yeah, this makes a little bit more sense. I was just kind of getting a little bit stuck in my head. If I wanted to figure out what the MACD was, what I would do is I would take this shorter term moving average, in this case the 12, and subtract it from the 26 period exponential moving average, okay? The value that I'm going to get at that case is going to be this red line, okay? That's basically it. That's the MACD. It's just what you're looking at is the difference between a shorter term moving average and a longer term moving average, okay? And that basically is going to give you that difference, okay? So you can kind of tell a lot about kind of the direction of things that are headed just by looking at the difference. Like, so for example, if we're in a big downtrend, and with Tesla, we've had this huge downtrend. In fact, I can draw it on the chart here. We've had this huge downtrend up until the end of last year, where it's dropped about 68% measured from here to here, okay? During that time period, if I'm looking at the MACD, if I'm looking at these two moving averages, since we're looking at the shorter term moving average, it's going to be closer to the price action compared to the long-term moving average. And since that price is going down, what you're going to get is the difference of these moving averages is going to start to go down, okay? And as long as you're kind of in that persistent downtrend, the moving average, this blue moving average, the shorter term moving average is going to be down below the longer term exponential moving average, okay? And as you can see right here, as if the faster it's moving down, right here we had the brunt of that move down. Here we had a much bigger move of the MACD, that there was enough momentum here between the shorter term and the longer term to kind of give you a nice little spike. And we kind of narrow down a little bit, and it kind of got a little bit more sideways as the price action wasn't going as fast, okay? So not only is MACD a measurement of trend, it's also a measurement of momentum as well, okay? Then we got a little bit sideways here, which you can see in the MACD price. We had another bit of a drop down. As you can see here, the MACD started to drop down again. And then just recently, we had a bit of an upward move. So by looking at kind of the difference between that longer term and shorter term moving averages, we get an idea of not only what the trend of the stock is. If it's down below zero, then it's definitely going to be kind of more in a bearish trend. That's not the way that Gerald measures it, but I'll talk more about that. If we're kind of in a sideways period, if stocks aren't moving as fast, you're kind of going to see a very flat MACD value. And then if you have a nice upward move, you'll see that upward MACD move, Okay, and all of that's reflected in the red line. This red line, again, is just the difference between the shorter period moving average and the longer term period moving average. And that's it. Okay. Now this blue line, this is basically what Gerald calls a signal line. So if this was the difference, the signal line is basically by default, and you can change this in Metastock, but by default, it's a 9-period exponential moving average of that red line. So with the red line, you get the difference between the shorter term and longer term moving average, which is the red line. The blue line is just a 9-period exponential moving average of that. And Gerald calls it a signal line. Okay. And so those are the two kind of indicators that we're going to talk about. The third indicator that you can see on the screen here is an indicator that was popularized by Linda Radke. And all this is, it's called the MACD histogram. It's just the difference between the MACD and its signal line. Okay. So right now, if the MACD is traveling above its signal line, it's going to be above 0. Okay. And the bigger that is, the more difference it's going to be. Okay, so that's it in a nutshell. That's how MACD is calculated. You take two moving averages, and basically that gives you the red line. The blue line, the signal line, is a 9-period exponential moving average of that. And then if you want, you can use the MACD histogram, which is just the difference between the MACD and its signal line. Does that make sense for everybody? Does anybody have any questions about that? Okay. Now, one of the things I want to talk a little bit about is the 3 ways that you can use Metastock, or I'm sorry, the MACD with Metastock to kind of get and identify trades. So the first one is obviously with trend identification. So the first thing that Gerald talks about is basically whether the MACD is bullish or bearish. And the way that he measures that is he looks at the MACD in comparison to its signal line. So if the MACD is trading above its signal line, the MACD is going to be in a bullish phase, which it has been. If we look at this chart here, right here is where it crossed up above its signal line. And if I wanted to kind of show you where that was in a chart, it'd be right about here. Okay, right here is when MACD went up above its signal line, okay, into a bullish phase. Okay, if I wanted to look at the last time that happened where it crossed down below, okay, right here you'll see that it went from positive to being down below its signal line. Right here it went into bearish territory. And likewise, we can kind of keep going back. Here it crossed up above, it was bullish, okay? And what I'm going to do is I'm actually going to use one of the power tools of Metastock called the Expert Advisor. And with the Expert Advisor, it's just going to help me draw all these lines on the chart, kind of understand where they actually happen. So I'm going to come in here. This is a power tool for Metastock. We call it a power tool. And I'm going to actually apply a very specific Expert Advisor to kind of just annotate the chart for me. And that's what the Expert Advisor does a really good job of. It kind of can help you identify things on a chart that you're looking at. So I'm going to go ahead and scroll through this. There's a couple hundred methods that are built in here, and they cover the gambit. Like one I like to show is one that identifies all the individual candlestick patterns and shows you what they are on a chart. And that's included with Metastock and has been for as long as I've been with Metastock. So, but what I'm going to come down here is the one I'm looking for is the one that's called MACD by Metastock. So I'm going to come down here to MACD by Metastock. I'm going to attach it. I'm going to go ahead and click on close. And you'll see right here where we had that convergence where it went from being below the signal line to above the signal line. At that point, that is when the MACD went bullish. You can see that on the chart right here. Okay, here it went from above the signal line to below the signal line, and then you can see that it went into a bearish phase, bullish, bearish, bullish, bearish, bullish, bearish. So very, very easily, I can kind of see where the trend of identification is coming in. Now, you'll notice when that change happens, you've got a MACD buy signal right here, okay? If your anticipation is like, if your MACD goes bullish, as you can see here, your anticipation is that the stock is then going to go up, the natural extension is, okay, well, let's go ahead and buy Tesla, okay? And with this MACD buy signal, that change in direction happened on 118, and that's why it's giving a buy signal. And this is the first way of the 3 ways I'm going to talk about how you can use MACD in your trade. So if you go bullish, you're going to get a buy signal, and that would be a signal that you could buy the stock. Now, obviously, with Tesla's gone up 69 points from being about 100 to about 169. So what I want to do is I'm going to actually kind of come in here, and we're going to talk about that commentary we've been talking about today. This is going to talk about it's going to explain these to you. So the first method, the buy and sell method that I'm talking about, is the crossover method. Let me go ahead and scroll in here. So when we start to look at this, it's going to talk about kind of the current bar. So right now, that crossover is currently bullish since it's trading above its signal line. The MACD crossed above its signal line 14 days ago. We're looking at a daily chart. Since the MACD crossed above its signal line, Tesla has gone up 41% and ranged from 180 to 114. Okay, so since this happened, it's gone up, basically is what it's saying. Okay. The next thing that it kind of looks at is it's going to look for overbought or oversold regions. Okay, and actually, this is showing up as overbought, oversold. But I want you to be able to see kind of annotations on the chart. So I'm going to change the candlesticks a little bit right now so we can kind of point out when that happens. Okay, so what I'm going to do here is I'm just basically going to go to just showing black and white candles. Oh, actually, I want to do black and white. Why should be a color on here? Okay. Let's see. And then we go black. And we'll go ahead and go black. Because what's going to happen is when that particularly happens on a chart, I just want to kind of turn this to more of a white color. And I'm getting a black color. That's okay. We can go black and black. Okay. There we go. Black. Okay. So now we have a bit of a black and gray. But what happens is if Metastock detects, based on the MACD readings, that a candlestick is overbought or oversold, you'll notice it's going to start to color the bars red. That's what I wanted to point out right now. Okay. So right now, because it's pointing that red, it's saying that the MACD is in an overbought range. Prices may continue to move higher for some time. Wait for prices to be moved lower before considering any short positions. Okay, so I like the way this is worded in the software, because if you were paying attention during that ridiculously bull market that we had before this bear market, stocks could continue to go into overbought or oversold territory over and over and over again. You with things that being overbought and oversold range, they can continue to go down. You'll see kind of this green started to fire off right here. And if I come back over here, this will basically update the commentary that MACD is in an oversold range. Okay, prices may continue to move lower for some time. So if we would have acted just because that was looking oversold, we would have been way early. It was oversold for 1, 2, 3, 4, 5, 6, 7, 8 bars in a row before it actually kind of started to reverse even a little bit. So what it's saying is, okay, we do measure momentum here. Right now, with Tesla, we're starting to see a bit of an oversold area. But since we've got momentum on the side, the bullish side, you use this as an early warning indication. But you want to wait for a confirmation that prices are going to continue to go down. So if you're in a long trade, the way you could read this is, okay, I'm in a long trade, maybe I want to move up my stop. But in no way do you want to go ahead and go short just because you're seeing overbought, oversold rating. You might want to wait until you get a bullish or a bearish signal to go ahead and take a short position. So there you go. Hey, Metastock, thanks for the neat charts. Okay, so that's the second way you can use MACD as an overbought, oversold indicator. The third way I want to kind of talk about is what Alexander Elder calls the most powerful signal in all of technical analysis, and that's a divergence indicator. And so I'm going to basically show you the way he measures MACD. You'll notice right here it says that there's not been any divergent signals within the last 5 bars, but I'm going to show you how Alexander Elder looks at MACD. He calls MACD divergence the most powerful signal in all of technical analysis. So what I'm going to do here is I'm going to look for a peak in MACD. Okay, so right here, I'm not sure this is peaking yet. So I'm going to look at these 2 peaks right here. Okay, if I look right here, over here we have a peak and a peak. Okay, that's a fairly flat peak. Okay, actually maybe I'll just pretend. We're going to pretend here that this is currently our highest peak. It is. Okay, so if I drew a line from this peak of MACD to this peak of MACD histogram, there's going to be a bit of an uptrend there. This peak is higher than this peak. Okay. Now, I don't think we necessarily have our high in on Tesla. That's kind of why I hesitate to draw it right there. But if I look at where those levels are coming in at, okay, if I draw a line from here to here, okay, right now this line is actually pointing up a little bit, and that line is pointing down a little bit right here. Okay. Now, I'm not necessarily sure that we're not going to have another peak, but if we did have a peak in price, let's say that it looked a little bit like this, okay? But MACD looked like this. I just want to kind of give you an idea of what Alex is looking at. If we had a high in price that was not supported by MACD, the MACD did not also set a high value, that's what Alexander Elder calls literally breaking the backs of the bulls. Or actually in this case, yeah, of the bulls, okay? And in that case, he'd call it a very, very bearish signal. It's not happening on this chart. It's not forming on this chart. But that's what he would be looking for divergence, okay? Now, that's it. Those are the three things I wanted to talk to you about the MACD and how they're popularly used. One is to get buy and sell signals from bullish and bearish crossovers. The second is to look for overbought, oversold conditions. And then the divergence is the third one, where it looks to look for those differences where MACD is not setting a new price, but price is. Those are kind of the three most powerful things. Now, one of the things I love about technical analysis is that it's objective. So if I did a fairly decent job of actually talking about how MACD works, you should understand why you're getting a buy signal here. You can see it on the chart. Since it's objective, you can see it on the chart. You could actually go in, and it doesn't matter if you use Metastock or not. You'd be able to say, okay, well, we got a buy signal here at about 118. So far, we're in the green on this one. We're up about 41 points. Now, we haven't gotten a signal to get out, but so far, we're making money on this Tesla trade. I could also go look at this one. Okay, here we got a sell signal. If we went short, we would have went short at roughly about $174, and we would have been short until it gave us a long position right at about 100 and let's see, let's call it 123. We'll call it at the high. Okay, and so if we would have taken that trade, would have made money. Yeah, absolutely. How about this one? Here we had a buy signal, okay, and then a sell signal. That's a fairly flat from that high to that, from that open to that close. So in that particular trade, we didn't make money, okay? Here we had a sell signal and a buy signal. On that trade, we didn't make money. Here, we definitely lost money. You got a buy signal, and then the price dropped to down here to give you a sell signal. The point is, not all of these trades are going to make money, okay? Some of them will. MACD will work better on different stocks than others, and in some cases it won't work. But I can get a visual idea if I'm looking at this as a trading methodology of how well this works. I can look at every single signal and I can say, okay, here we had a sell. That was great. I can go back and test that. Okay. Now, because all of technical analysis, that's one of the things I love about technical analysis. It's objective. It's not subjective. So at no point today have we talked about like interest rates and whether they increase by 0.5 or 0.25 or anything like that. What we're looking at is, in the case of MACD, we're looking at momentum and trend. We're making our decisions based on what the charts are doing, not kind of the current crisis of the day, not the current bailouts of the day, not the corona stimulus. Or, I've been doing this for a long time, not what the housing crisis is doing, or the economic stimulus, or the 15 economic stimuluses they had after that. Or, what we're looking at is we're looking at the direction of the chart. Are we headed up or are we headed down? And we're making decisions based on the trend of the chart. And you'll hear all the time, the trend is your friend, or befriend the trend. And technical analysis, that's really what it is. It's looking at identifying what trend you're in so that we can take nice chunks out of the trend. If you're using a trend following systems, obviously there's momentum indicators and overbought, oversold indicators. My point is it's objective. It's not subjective. You're trying to decide what's happening. And since it's objective, you can visually see what's happening. And because it's objective, we can actually test it. So I could say, okay, well, without me going in and saying, hey, this last trade, we're up 44 points or whatever it was, 41%, we can actually go in and say, okay, let's test it. Okay. And with that, I'm going to go into the next power tool for Metastock, the one that we call the system tester. So I'm going to come in here to system tester. Okay. I'm going to go ahead and click onto it. And what I'm going to do here is I'm just going to select a bunch of systems here. maybe I've already done this, I haven't. I'm going to basically select a bunch of systems that are built into Metastock. And I'm going to miss some, but I want to make sure I get that MACD one in there. Okay. And one of the things I'll say about Metastock is it's extremely flexible. So you can build your own systems if you want to test trading ideas. A lot of our add-ons will have their own trading methodologies. There's just we built this one in a class that I did a week ago called, it actually worked really well, but a little class on how to actually write stuff. So, but what I'm going to do, there's my MACD system. I'm going to make sure I get that one. These LCI systems are included. I'm going to, in Metastock, I'm going to go ahead and click those ones as well. And then what I'm going to do is basically, I'm trying to select all of them that don't include optimization. We can optimize systems in here. It's pretty easy to do, but I don't really want to. I'm going to actually come in and select all of these performance systems because they're actually included as well. So let me go ahead and just go to the top of this list. We'll highlight that one. And if I come to the bottom, oops, let me go ahead and click on OK. So I've selected right there about 102 different methodologies that I know are in Metastock. And we're just going to say, how well does this work on Tesla? Okay, so I'm going to go ahead and type in TSLA right here. One of the things I like about our system tester is I can do as many stocks as I want. In fact, I could do like all the S&P 500 right now if I wanted to, but we'll do Tesla because that's a chart we happen to be on today. TSLA.K. Okay, we'll throw in a couple more like Facebook. Actually, it's now Meta, but don't be confused about that. We are the original Metastock. Tesla.K. I think it's K. Actually, I should look it up real quick. If I'm only doing a couple, I should make sure I get the right symbols in there. Okay. .o. Okay. Thank you, control room. Let's do Meta. And I believe that is .02. We'll do IBM, Microsoft, Dow. Nobody asked for stocks. So we'll go ahead and kind of go with those. So right now what I'm going to do is I've got 1, 2, 3, 4, 5 stocks. I'm going to test those 100 methodologies that are all included. And what I want to actually answer the question is if I had traded these for the last 2 years. So I'm going to go ahead and move this down to 500 records. If I took all the long trades and all the short trades, how would that have worked? Okay. And for the trade options, I'm going to go ahead and set it to start with $10,000 when on its trading account. And every time it gets a signal, I'm going to have it take half of the position. So half for the longs, half for the shorts. Okay, you can go ahead and click on OK. I'm going to go ahead and start the system test right there. And it's going to go ahead and run through that test for me. Okay, and you can see it goes pretty fast. Now, the idea here is like, okay, if I want to trade Tesla, I don't necessarily care if I'm using MACD. I spent way too long talking about MACD. But what I want to do is I want to trade what makes sense on Tesla. And so with this, if I wanted to test like the S&P 500 and say, okay, you know, right now, I want to know what systems have worked or what methods or what indicator-based methods have worked best for the last couple of years. This is exactly the test that I'd run. I'd go in and actually kind of have it run through here to help me determine. Now, one of the things that I've always kind of talked about, we spent, like I said, a good amount of time talking about MACD. I would not recommend that you just take a system and start trading it because it's the most profitable system. We can very, very easily determine that. What I would recommend is you find a system that works well on a broad array of instruments, but you're also going to want to, not only you're going to want to understand how often it trades. Okay, it's done. You're going to want to understand what your drawdowns look like, but you're also going to want to understand the methodology. So just like we opened up MACD and looked at the expert advisor and it said, okay, this is what the crossover was. All of the experts that we're testing right now are going to have those expert advisors that can help you understand, okay? And what this is going to say to us right now is if I had taken all of the signals on just those stocks over the last couple of years, the 5 stocks that I actually kind of just randomly put in there, which ones would have made money, which ones would not have made money? Okay, and our best performing system is actually a system that comes up a lot. It's actually designed by Tushar Shandy and Stanley Kroll. It combines a stochastic with an RSI to give you the stochastic RSI. Okay, and just real quickly, right here, I can look at the average numbers. I'm going to go ahead and kind of zoom this up, and I'll just talk to you about what they are saying right here. So from an average net profit, our stochastic RSI system made about 14% on those 5 stocks. Its best profit was about 9,000, while its worst profit was minus 4,000. Okay. On average, it did 37 trades over that 2-year period. So that's about, let's call it 18 a year, 36 divided by 2. And about 1.5 per month, if my math is right. Okay. Of those 37 trades, 23 were winning, 14 were losing. So its win-loss ratio is pretty good. Okay. Our next best performing system was the division system, and it's going to give us numbers for that too, as well as a cycle progression. You can kind of get an understanding. One of the things I like to look at is this average trades here. 37 isn't too much for me, but 233 is. Okay. So I'm going to go ahead and stick with the stochastic RSI and just kind of show you kind of the reports and kind of how that looks. Okay. And I am moving a little bit quicker just because I want to make sure that Melissa has time, because she's coming right up in about 8 minutes. So out of these, actually on Tesla, it would have underperformed it. It didn't work well on Tesla last year at all. Would have lost its money. It would be the biggest loser. Okay. But if I was trading Facebook, it actually worked really, really well on Facebook. And so that's what I want to kind of do, like with system testing. What we're looking to do is match the systems that work with the stocks that work. So in this case, if we were looking at Meta last year, 2 years, sorry, we would have made about $9,000. Now, Meta hasn't been doing that great last year, but this returned us about 90%, okay? Of the win-loss ratio, we had about 35 and 12, okay? I'm going to go ahead and click on View here. And I'm just going to kind of go through, I'm just going to show you that it has a full report. It gives you the breakdown of the wins, the losses. It shows you what your drawdowns look like. It shows you how this compares to buy and hold. It's 522% better than buy and hold. There's a buy and hold index that goes from 100 to minus 100. This is 74. The risk reward is an open position measurement of 95%. So this is looking really, really good. I am going to look at the equity curve real quick. I do want to say the help system in Metastock is great. If you have questions about these values, click on help. It's going to tell you exactly what all of them are and how they're calculated. I'm obviously moving fast because I don't want to go into the next speaker's time. But this is going to show us how well this worked over time. So over the last 2 years or so, since February 4th of 2021, this is what our equity would have looked like, starting at $10,000. Going to about 19,000 and then pulling back a little bit. So I do get a lot of information if this is a system I want to implement here. If I want to learn more about it, let's go ahead and plot it on the chart. So I'm going to go ahead, if I click on plot it on chart, what's going to happen is it's going to go ahead and show me that equity chart on top of Facebook. You can see it right here. Now, I'm going to go ahead and really quickly just make a few changes here. I'm going to turn off the expert commentary. I'm going to detach that expert advisor real quick. And we'll just turn it to white. Okay. Okay. And here you can see every single trade that was made. Here you had a long position. Here you had a short. Here was that exit. So you can see every single trade that you were made. You kind of go in and evaluate this. If it's something that you still like, then the next step I would say is you want to learn about the system. So in that case, you're going to go back to that expert advisor. You're going to go to the PS stochastic RSI. Here, click on attach, click on close. And if I go to the expert advisor, we'll just go through this real quick. There's no trading signals on the very last day, but the two-chart Shandy and Stanley Cole developed the stochastic RSI. Here's what it was overcoming. One of the problems with using the RSI as an overbought, oversold is there's too much built-in smoothing, and it may take a long time. This forces it to miss out on many significant trading signals. Applying a stochastic process to the RSI makes it so the extreme will have been reached within a more limited amount of time. So you can read that, you can kind of get an idea of what it's doing. It does say here, as with all overbought, oversold systems, even though it can be very good at capturing profits on large number of trades, there's no real protection mechanism in place to help you if the trade moves against you immediately. So you should use a stop loss. One of the things I would show if I had a few more minutes is how easy it is actually to implement that stop loss. So if I wanted to say I wanted to use a stop loss, I could go in, literally check the stop losses that I wanted to use and retest it. And of course, the scanning. If this is a system that I really, really like, there isn't any real trading signals that exist on the chart for a while. if I wanted to actually kind of go and find something that had a signal with this, I could actually run a scan. There's going to be a matching exploration, matching expert advisor, matching system test. So it allows you, it's a really, really good toolbox to allow you to figure out what's working, what stocks it's working with, and find opportunities that exist in the marketplace. So hopefully that kind of gives, we got a little bit behind in our timing, but hopefully that kind of gives you an idea of exactly kind of what MetaStock is. And today we talked about just 3 of the power tools, the expert advisor, the system tester, and the scanner. And I absolutely love the scanning mechanism in MetaStock because it allows me to go in and scan for those stocks that meet my criteria. And I use it every day because there's so many different opportunities that exist in the markets. It's a good way for us to be able to find what works and implement it into the marketplace. So let's talk a little bit about pricing with MetaStock. We have 2 different versions of MetaStock. We have our real-time version, which is $265 per month is what price that starts at. That actually includes an institutional grade news platform that we call Zenith. And if you were an institution subscribing to a very similar service, it would cost you way more than that. It also includes MetaStock. It's $265 per month, and it's well worth it. We have an end-of-day version. It's $69 per month. And this is a version that's actually been rated #1 in its price category for 30 years straight. So $69 a month. The special that we're going to do for you today is we're going to do our 3-month trial. So if you buy 1 month of MetaStock, we're going to give you that second and that 3rd month for free. Okay. So if you do the end of day version, you can run MetaStock for 90 days for basically $23 a month. That's it. You can try what's been rated the #1 software program and find out why. If you do it for $265, it's going to be less than $100 a month, and you're going to get all of that news, all that additional product, the Zenith product. They spent over $1 billion designing it, and it's some of the best news in the industry available. We did a demo just on Zenith the other day, and somebody's like, this looks better than Bloomberg. I think it's better than Bloomberg. I might be biased. So if you buy 1 month, what we're going to do is we're going to give you the 2nd and the 3rd month for free. We're going to include MetaStock 18. We're going to include the data that you need for whatever region you're interested in. And not only that, one of the things I said this to our support team in an email, I think it was last week, because I always get really good feedback. I'm like, here's just another email on somebody saying how good you guys are. But you're going to get unlimited access to our support desk. They always get really, really good feedback. I think one of the biggest things we can offer is our support and our people. When was the last time you called a support desk and was really, really happy? Do you know that like with our support team, it's not uncommon for us to get 100% positive metrics for a whole week at a time? It happens all the time. I always get people commenting about how good of a job they do. They do a really, really good job, and we're proud of that fact. We're actually going to set you down with what we call a white glove installation, where they're going to sit down and talk to you for up to 2 hours, where they'll show you how to test or scan or whatever it is that you want. We started doing that a few years ago because MetaStock is a mature platform. And we understand that if it helps you make money right out of the gate, you're going to keep it. And so for us to help you kind of sit down and understand what the tools are and help you get to the next step, it's really, really helpful for the business, because if it helps, I mean, good software should pay for itself. This is going to pay for itself. All I need from you is to try it for $23 a month for the next 3 months. So in any case, we'll also include a home study tutorial called Unleash the Power of MetaStock, normally $99 value. You can sign up for this extended trial at 800-882-3040. You can also visit us at metastock.com/saleschat. It is also part of the Trader Summit Action Pack. With it, you'll get 3 months of Trade Trend, the GoNoGo Complete, that really, really popular add-on that Alex Cole was talking about. Oscar Carboni's training, he did such a good job with that training. It's available instantly. 3 months of Learn MetaStock, which is a website that all they do is training on MetaStock. You're going to get 3 months of that included. And then 2 years of Stocks and Commodities, Unleash the Power of MetaStock. Normally this would be about $3,000 as a total value. You're going to get it for $1,235 today. So you can sign up for that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can call us at metastock.com/sales chat. So hopefully that was helpful. I hope you learned a little bit. Maybe you learned a little bit about MACD. I hope it was helpful for you. I hope you're enjoying the class today. We put a lot of work into these summits, rounding up all these really, really good speakers like Melissa Armo, who's coming up next. But before we get to her, I do want to say thank you to Stocks and Commodities for helping us out with the event today, for helping us advertise it. They've been a partner and a supporter of the Online Trader Summit for 10 years now. They do a great job. So 17,000 articles, 17,000. Anyway, if you're watching this on YouTube, go to metastock.com/trader summit. You can subscribe to the event today and you can get a free magazine. If you do that summit special, you're going to get 2 years free. And if you just sign up for Metastock because you want to see why it was rated #1 for 30 years in a row as the best software in its price category, you'll get 5 months for free of Stocks and Commodities. So thank you for Stocks and Commodities for supporting us. Melissa is coming up right next, and I love her take on gaps. She's been at several of our events. We started bringing her in, I think it was during the spring of last year, and she did such a great job that we keep bringing her back in. Her name's Melissa Armo, and we're going to go ahead and hopefully she's here. I haven't even looked because I was talking, but of course she is. Melissa, how are you doing today?
Hi, how are you?
I'm good. Let me go ahead and make the presenter you. Sorry, I ran about 3 minutes over.
No, that's okay. I was listening to you.
Okay, good. All
okay,
right.
let me know if you see my screen.
I can see your screen. I'm going to go ahead and let you go. I'm going to get out of the way. It's your turn now.
Thank you so much. Thanks so much for having me, Jeff. As Jeff said, I'm so happy to be presenting here today. This is my first presentation for 2023. So happy New Year, everyone. It's hard to believe. Tomorrow is the last day of January. This year already, I feel, has gone so fast. And of course, it's been a really good year so far to trade the market. The market is falling today. It is earnings season right now. We have many companies that report quarterly earnings. And when they report earnings, they tend to gap. So the one thing it's interesting is that when stocks gap, I look to rate them, and I really prefer to short. So we're going to talk about gaps today. We're going to talk about shorting, and we're going to talk about the market. If you have questions, you can plop it in the room and ask me if you have any questions. Sean's asking about my new apartment. I'm in my new apartment right now. It's fabulous. That's all I have to say about that. So as I'm talking to you right now, I'm looking at Central Park. It really doesn't get any better than this, people. But I worked very hard to get to this point. And in fact, I said to some people a couple of days ago in the class, I said, if you could have everything you want in 5 years from now, or 8 years from now, or 7 years from now, or 3 years from now, if you can make all your dreams come true, would you do everything that you needed to do to make that happen? And the thing is, I think many traders are short-sighted in their goals. They want everything now. They want everything yesterday. We have to be committed to our goals and committed to our dreams to be able to make them happen. We can't have everything we want right now, right this second, right now, tomorrow. Everyone wants the big trade, the huge trade. It's going to make up all the losses they ever had from the market, and they're going to make millions of dollars in a month or a week. It's just not reality. That's not how life works. But I will tell you from my own personal experience how life works. If you are committed to your own goals, if you are committed to your trading, and if you are committed to your own success, you absolutely can be successful trading the market, and you can be successful as a trader. Again, sometimes things take longer than we think. But if we continue on the path, we go through the ups and downs, you can get there. And again, I think a lot of traders tend to jump around too much as well. They'll do a strategy for a week or a day or a month, and then they'll quit. You can't jump around from thing to thing to thing. If you want to be successful, you have to stay and stick on one thing and get really good at it. So again, about 15 years ago, when I started trading, I had no idea what I wanted to do. I learned basics of technical analysis, but I didn't learn how to make money in the market. So I ended up teaching myself with that basic foundation of technical analysis, my own method on gaps. And that is what I started to do. But it took me about 3 years to figure out my system. And now I've been teaching people how to trade my system for 10 years. So again, you know, if you're committed to your goals, if you're committed to your dreams, you can get there. So keep your eye on the ball. That's the best thing I can say to people. And since we're starting out 2023 and it's early in the year, you can set goals for yourself between now and the end of the year. So set the time frame for yourself. Say, by the end of this year, I want to make this much money trading. By the end of this year, I want to be trading full time, be able to quit my full-time job, or whatever the case may be. And again, start out with goals that are realistic, okay? And then you can get there. You can get there. So let's get right into it. We're going to talk to you about shorting for fast profits. And the reason I like to short is exactly the title, because you can make money shorting fast. Why? Because panic comes into a stock or the market very, very quickly. Today's a great example of that. The market gap down today. We're selling off. We're probably going to sell off here into the close. I'm not looking right now, but I know that we're red. And again, we very likely could be down tomorrow morning as well. We have some data out tomorrow morning. It's not till after the open, but we're probably going to be down tomorrow, gapping down tomorrow in the market since we're falling here into the close. If you have questions, you can email me at melissa@thestockswoosh.com. You can also call me at 929-3200-GAP. And you can follow me on Facebook, YouTube, or Skype. For those of you that don't know me, I appear on Fox News, CBS News, News Nation, and I talk about the market, and I talk about economics, and I talk about the things that are happening in the world, and that has given me a lot of great experience as well. So although a lot of people left New York City, I did not. Again, one of my dreams was to live in New York, and I do believe that New York City will come back. So I decided to stay in New York, and again, appearing on TV has been one of my dreams as well. So stay true, okay, to your dreams. If this is something that you want to do, no one said it was going to be easy, okay? It doesn't have to be crazy hard, but you may have some ups and downs, all right? So can you earn a living in the stock market as a professional trader? The answer is yes, but you have to know what to do. That's a big part of it. So it's a new year, and that can mean a new you. It can mean a brand new you for trading. You can make more money this year than you made last year trading. So it's time to go for it. Again, commitment is part of it. Learning is part of it. And keeping your eye on the ball. So I have in here last year's results for the day trade room. We run a live day trading room Monday through Friday that opens in the morning at 9 a.m. and we start trading at 9:30 a.m. This is what was the results for last year, $651,079. I did move last year. Sean mentioned he follows me. So I took a few weeks off. So I would have made more last year if I hadn't moved, but I did need to take some time off to move. Either way, it was a good year. Now, again, like I said, I focus on shorting. So most of these trades, the ticker symbols are all here, are shorts. Some of the trades we did were longs, but actually I prefer to short. One of the reasons I prefer to short is because I can get in and out quickly. When you're in and out of a trade fast, and you don't have to worry about market news or data, the Fed rate announcements, all of that stuff. You can book the money very, very quickly. So this is with an average day trade risk. These were trades on margin of $2,800 per trade. You can risk less. You can take 100 share lots if you want to. How much you risk has to do with the cap size of your account. Everyone says, well, I need a lot of money to trade, especially if I'm going to trade equities or trade on margin. You can trade with small size and still make a profit. You have to know what to do. Someone's going to have $1 million in the bank, but if you don't actually know what to do, guess what? You're going to lose that $1 million. So having a lot of money doesn't necessarily equate to you being successful.
Yeah, if you want to help me throw it over later and go and toss it.
Someone talk, Jeff?
I'm kind of busy for a few hours.
Yeah, me too.
Hello? Jeff, are you there? Can everybody hear me? Because I was hearing people talking. Hello? Can everybody hear me? I hear the talking stop now. I'm going to keep going.
Hello, Melissa. Sorry, we had a live mic over here.
I heard talking and I didn't know if you were popping on.
I'm sorry about that. I'll be quiet now.
Okay, let's get back into what I was saying. So empower yourself today to trade the market, and that's what we're going to talk about. So let's talk about confidence. Traders lack confidence in their ability to trade well. They lack confidence in their choices of what to trade. Lack of confidence is usually a result of lack of knowledge. In general, there's a lack of confidence in traders across the board. This is something that I think people can work on and can improve on. So it's time to get confident. Confidence in yourself, and not only that, confidence in your ability to trade, okay? So what gives you confidence? How are you going to get there? How are you going to do it? Information gives you confidence, and then that confidence helps you make money. And again, as a trader, what's the information that I have? What's the information that you have? We have charts. It's live price data. Again, how do I make trading decisions based on technical analysis, which is looking at past price data to make decisions on future price movements in the stocks and the market. I just told you earlier what I thought was going to happen today, that we would close near the lows, that we would close and drop off today into 4 o'clock, and that we're probably going to gap down tomorrow morning, okay? So how am I predicting all of that? Well, I'm reading it in the price action, okay? So you don't have access to research reports. You don't know what the Fed is going to say exactly on Wednesday. They're going to raise rates, but we don't know their statement. We don't know how the market's going to react to that because we don't know what they're going to say. We don't have access to that information until it comes out. But when it comes out, we can see the price reaction, and then we can make decisions based on that information, based on looking at criteria that I look at in the daily chart. And again, this is what I do in every given day, okay? So you can alleviate the anxiety of trading by learning what to do. And learning what to do is important, all right? So you can't expect to go into the market, trade blindly, make money without having a system or a strategy or having any idea what to do. So if you want to make your trading dreams happen, you have to learn a successful strategy first, and then the money will come. It's not the backwards way around, okay? And again, what happens with a lot of people, and they struggle with this, is that they start out with all these high hopes that they want to make all this money. They end up not knowing what to do, lose, and then it becomes very difficult for them to move forward, and they lose confidence, they lose conviction, and then they never really get on the right path. So I'm telling you that getting on the right path is possible, and I'm telling you that the sooner that you do it, the better off you're going to be, the better off you're going to make money, and then the more confidence you will have. So the fact is that, and this is very, very important, many stocks in any given day have no strategy to trade as a day trade, okay? So you have to know that. Remember, trading is not long-term investing where you trade the trend. Learning what to do saves you money in the long run, and on top of that, it saves you time. So even though there's an investment to opening up an account, you have to deposit money in an account to go through the process to actually risk money to trade. There's an investment if you want to sign up for my class. You must pay me for the information and the time to take the class. That's an investment too. But in the long run, it pays off because it saves you time. As I said earlier, it took me 3 years to figure out my system. So the idea is that you learn from me without it taking you 3 years, okay? And for me, there was a process where it was many ups and downs of trading and losing money within that 3 years. I didn't develop my system trading on a demo. I did it with live cash. And that was difficult, but it gave me a feel for really what worked and what didn't work. So that was important for me to really see, to get the system down pat and to get the system right. So one strategy is all you need from the market. And again, I said this earlier, people flip-flop back and forth from too many things. Back and forth. They want to do Bitcoin. They want to do futures. They want to do options. They want to do equities. They're doing all kinds of things all over the place. Just stay with one thing. Every day when I get up, I'm looking for a bullseye. I want to hit that bullseye in and out and done. Like we did IBM last week. We shorted it. It worked. We went in, we took the trade, we got out, we made money, we were done. Okay. That's literally how simple it should be for you each and every day. Again, this doesn't mean that every trade that I take wins. Some trades I take lose, but that is part of the mix that I assess in the risk. It's called calculated risk when I'm making a decision whether I want to take the trade or not. So of all the trades that I take, say I take 10 trades, 2 we're going to lose. I know that from assessing my system, and 8 should be your expectation will win. So I have about a 77, 78% win ratio of my system that you want to take the trade and you take the risk and you put in a stop. So looking for the bullseye is your goal and your aim. The faster, again, you can make money, the faster you can be done every day, the better off you're going to be. Let's go over here. A very basic definition, though, of gaps. I've been talking about gaps. I'm going to explain to you what a gap is. This is a chart of the QQQs. Now, what happened back in here? And again, let's just go over what a gap is. A gap is a difference between the close and the open. So this was the market. It closed here at one price at 4 o'clock and opened at a different price here at 9:30. So what happened on this particular day? The market gapped down and fell. okay? This red bar depicts selling. It also is a gap down. Now I'm going to show you another gap. Again, I prefer to short, okay? But this was a long where you could have gone long, where the market and the QQQs closed at one price at 4 and opened at a higher price. That is a gap up, okay? So this is a bullish gap, and this is a bearish gap. Can you short of a bearish gap? No. Can you go long of a bullish gap? No. Can you short of a bullish gap? No. Can you go long of a bearish gap? No. So I have a criteria that I utilize every single morning to determine if I look at the gap down, can I short it? Will it follow through? Will it go lower? Or is it going to flip? And again, many traders think that gap fills work. They don't. While sometimes something will do what you want to say, fill the gap, that does not work consistently, okay? So the success of myself and my traders and the people in my group comes from the consistency in the system. It's looking at the criteria and doing the same thing and looking for those same things. It's knowing what to look for, which many people don't, okay? I do all of my work in my pre-work in the pre-market in my analysis. So tomorrow morning, I'm going to get up in the morning. There's a bunch of earnings that are out. Stocks reporting. IBM is reporting. Not IBM. UPS is reporting tomorrow morning, okay? I'm going to get up. I don't know where UPS is going to gap. I'm not in that trade right now, but I'm going to analyze it. I'm going to see if it's gapping. I'm going to see if it's gapping down or up, okay? And then I'm going to analyze it to determine if, in fact, I want to trade it and if, in fact, I want to short it, okay? And any questions in here, let me know if you want to plop them in the room. So again, let's continue talking here about what is a gap. A stock gap for the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple, okay? But again, how do you know which gaps to do? How do you know what charts to do? How do you know what stock to do? Many on given days, anything goes with the market. So you can't always do Tesla every day or Apple every day or Microsoft every day because it's not going to work. And many days are going to go what with the market? And again, a lot of days the market has been shrinking, not just in the last month, but really in the last year. It's tripped people up. A lot of people did not expect the market to fall the way it did in 2022. And then by the end of the year, everyone was shorting everything. We had a very bearish month in December, and now everyone wants to go long. Now everyone's saying, oh, we're high. We made the low of the year. Again, it's about assessing the gap, even in the QQQs, even in the SPY, which I'm saying that's what I mean by the market. It's the market ETFs. It's about assessing what it's doing on that particular day in the gap, okay? So this was Tesla, just back here from December. We did this a lot. We did this a lot in the month of December. 1, it worked. 2, it got sold off, and it fell, okay? So institutional money was dumping Tesla during the month of December. You could even go back to say that was happening in September. Again, here was a gap. Again, this is back 2022, where Tesla closed here, gap down, fell. I don't remember when it came out that he was buying Twitter and all that scuttlebutt. You could say there's many reasons that this was happening, but at the end of the day, again, the fundamentals don't matter to me. It matters when I see the gap. So this was a good gap here. You can see it. Again, this is a daily chart. So my focus is on gaps, and specifically on bearish gaps. And my specialty is that. Right now, everyone wants to short everything since 2022. Is that the right thing to do? No. Again, like I said, because in reality, the market is still in an uptrend. So in my analysis, I'm telling you, despite the fact that we've been shorting, and sometimes we've shorted the market, the reality is that the market is actually still in an uptrend. It never went in a downtrend, not according to me, about how I determine trend analysis. So might we go in a downtrend this year? Maybe. I don't make trend decisions based on percentages like many people do on television. I do not. So I don't say, oh, it's 20% down, therefore it's in a downtrend. No. Okay. And so the market actually held the uptrend, even in 2022, even with the selling. I will go long in uptrends. I will go short in uptrends. I will short stocks in downtrends, and I will go long stocks in downtrends. It has nothing to do with that. When you're an active trader, which is exactly what I am, I'm trading the weekly options. I'm trading the day trades in and out between 9:30 and 4, and particularly just in the first few minutes of the day. So I'm not looking to long-term invest in any of these things. I'm looking to get in and out, chunk it out with money, with profit. So if you come and learn from me, you're going to be an active trader, which you're chunking it. You're chunking it out. $1,000 here, $2,000 there, $500 here. That is what you need to do, where you're trading on an active basis, not long-term investing, or really not even worried about what the long-term trend is, okay? Any questions here so far? So getting back to what I was saying, keep in mind, don't trade without a strategy. Don't take ideas from strangers. Get to know someone first. So some of you here obviously have been following me. You do know me already. Some of you did not. I always suggest that people go to my YouTube, subscribe to my YouTube, watch some of the videos, watch me on television, get to know me first. Part of hiring someone and deciding that you want to learn from them is actually seeing, okay, is what this person's saying making any sense? And then establishing the trust level to that person where you're understanding what you think that they're doing, that this is a concept that you can learn from them, that maybe you want to trade in. Again, don't short everything. It's very important to know that. You can't even do that even if the market turns. Even if the market would go bearish, you can't short everything. You can't short everything even if it's not in a downtrend. You can't short everything in Tesla. Look how Tesla flipped around as well, okay? How do I know what stocks are gapping? Well, finding gaps is easy, Brian. That's not the process I go through. It's not about finding them. You can find gaps in any scanner. That's something that Jeff can talk to you about. I'm sure he has some type of setup for a scanner to find gaps. Finding gaps is easy. All you have to do is get a scanner if you want that. It's qualifying them to find the good ones, because again, there could be thousands of things that gap every day. It doesn't mean they're all good, because they're not, okay? Finding them is easy. Qualifying them and determining which ones are going to work and which ones are going to work big and go in the direction of the gap and figure out the direction they're going to go. That's where the analysis comes in. That's where the learning process is. Finding them is easy. And Jeff can talk to you about that when we're done. So anyways, the question is, again, what do you do? When you've got the market in this sideways range, again, it's still in an uptrend, but we're basing out sideways. What are you going to do? You have to focus on specific stocks that do not need the market, so that if the market falls, you don't care. If the market rallies, you don't care either, okay? Because if you need the market for your trade, good luck, all right? While I'm very good at reading the market, and I get it right a lot, I don't get it right every day. I got it right today. But, this is one of these things that you have to look at what's really going on in the overall chart and say, I want to do something specific. I want to do something like, and again, I'm going to go back to IBM as an example. IBM didn't need the market. It fell, it went, boom, that's it, okay? You don't want to have to worry about the market or being able to read the market or the trend of the market in order to make money as an active trader every day, because it's going to be challenging to you. And for many people, that is exactly one of the reasons that trading is challenging for them. They need the market in their trades, and they can't read the market right. So let's get back to shorting. Short moves happen fast, quick, and less chance for hiccups as the day goes on. Again, many of the economic news comes out either in the pre-market, so we already see it, already got the information, already see it. I'm accounting for that in the gap when I do the rating. And then later, I'm already in and I'm already out by the time the Fed talks or anything else after 10 o'clock. So the idea of not having the hiccup of the data to mess up my trade is important as well. So why do I like to short? Well, one of the benefits of shorting is I have an edge. So for those of you, again, that have been following me, you know that I short. I've been doing this for 15 years. Again, I don't know why traders prefer to go long, but it will always be the case that more traders prefer to go long than ever short. Why? Because they understand the concept of buying low and selling high, because people like to trade their IRA. They can only go long in their IRA, but you can buy a put. You could buy a put, so you can do that. And again, you have to talk to your broker about it wherever you have your IRA, but you can't outright short equities in an IRA. As far as shorting, I have a niche to do this, so that gives me an edge for other retail traders that are out there because I know what I'm doing with this. Finding an edge will help you, put you and set you apart from other people that are trading. That will help you make money. It's capitalizing on the moves. And for me specifically, it's also capitalizing on the moves, getting in really quickly. So when I take a trade in the morning and I short, I'm getting in the 1 minute chart. I'm getting in very, 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 very fast. And I have to know what I'm looking at before the market opens in the pre-market. Now here's a chart of the QQQs. This was back on the 17th when we fell. Again, the pre-market, we were up, then we flipped, then we dropped. Okay, so this is a 15-minute of the market where you can see where we actually fell off a cliff here. What are the red bars here in the chart depicting selling? So again, fast moves can happen quick. Why panic? There's no panic. If I say, oh, this is a good buy, you're like, well, maybe I'll think about it buying that stock. Maybe I'll think about that one. Maybe I'll think about it. Maybe I'll think about it. If you are already long something and then all of a sudden you're down, you will panic. You absolutely will. And then you'll be forced to make a decision like everybody else is that's in the stock. So again, panic is very rare to the upside. Panic buying is something that's very, very rare. You do have panic selling that comes in stocks, and that comes in a lot on a regular basis, okay? So what am I looking for? I'm looking for institutional money. Are they selling? Are they buying? Are they buying the stock? Are they selling the stock? Are they shorting the stock? I'm looking to trade with institutional money, which is big footprints in the market or stocks, okay? Big positions. And again, we're trading big stocks with volume, no penny stocks, no cheapy things, okay? So this one here we did, it was a long, again, it was a bullish gap up. It was an earnings. Stock was here, gapped up, rallied. This was Morgan Stanley. We did it back in here. It was the middle of January, a couple of weeks ago. What happened? We did calls in this, and we also went long it, okay? And it worked. So again, this got bought with institutional money. You can see the price here where it closed the night before at 4 o'clock. It was around 91 and change. And then it gapped up here and opened over 96, okay? So this is a nice gap up. So my system allows me to develop all of the information that I have that I look at in the morning to see that this is not going to fall, that this is not going to drop, that this is not going to fill the gap, that it's going to get bought, and it's going to move up, and it did. And it ran all the way up and went all the way up to 99. So it was a nice trade. So we went long this, okay? So institutional money bought MS. Again, we talked about Tesla. Institutions were selling MS. Tesla. They've been selling Tesla. Again, stock closed here, gap down, fell off a cliff. Again, December, the month of December specifically, there were many gaps in Tesla. Many of them we did. Here was one even at the beginning of 2023 that we shorted, that red bar with Tesla closed here, gap down, fell, okay? So institutions were selling Tesla. Institutional money was selling Tesla or shorting it. What's institutional money? It's big hedge funds, big professional traders, banks, big money in the market. So when you can find that power, it's very easy to make money if you can trade with it. You don't want to trade against it. Again, if you trade against it, you're going to get hurt. You're going to lose. And you don't want to lose. You want to make money. That's the whole point, okay? So if you can learn to spot institutional money and trade with it, it's going to make your trading life so much easier. You're going to be able to make money on a regular basis. And then you're also going to get the big moves, okay? So if you have 1,000 shares of something and it drops $2 and you're short, how much are you going to make? $2,000, okay? So it's the same concept. Add the size, get the right entry, get the move. We want big moves, $1, $2, $3, $4. So we're capturing these moves in a very, very specific entry in the 1-minute chart, but I'm looking at the daily to make the decision, okay? On the 15-minute chart, which gapped up, well, I'm just showing you, I didn't do anything here. I'm showing you this. I did not short this because this gapped up. I'm just showing you here the panic that came in and stepped in here and how it reversed. I did not short this day, this trade. On the 17th, we gapped up. So I just said I don't short gap ups. Okay. I'm showing you the panic, the sell-off that happened there on the 17th and how fast it can come in because we were up and we were green. Okay. But no, I did not short the market on that day. So a big flow of money going in a certain direction is what moves the market. Stocks, creates momentum, and then sets the trend in charts. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be in the side of power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times. Even if you think it's not, it is. Okay. So this is what trips people up. And they say, oh my gosh. And again, you know, we don't know what the Fed's going to say on Wednesday. Whatever they say, I'm not going to be surprised. If the market goes gangbusters to the upside Wednesday, I won't be surprised. If the market falls off a cliff on Wednesday, I won't be surprised. So, I mean, you know, so many people say, oh, the market's rigged. If you think the market's rigged, you have no business trading it, because basically you're up against a system where you're going to lose all the time. So you have to know that there is a way that you can actually trade it successfully, consistently. Because if you don't believe that, you have to change your attitude about that right out of the jump, okay? So no one's rigged against you. The system is what it is. That's why you have to account for the fact that some trades will lose, okay? But the reality is that so many people get so upset because they say, oh, I thought this was going to go one way and then it went another way. No, you didn't read it right. You didn't read it right in the first place. That's why, okay? So it's about finding the footprints of power. It's very important to find this power, because the power has the ability to pay you. And then whether you have a large risk or a small risk or small account or a large account, if you get the momentum and you get the big move, you can make money. And that's how you grow a small account into a big account. And that's how you grow a big account into an even bigger account. So for me, it's about one strategy to trade that focuses on spotting institutional money, and one focus, which is on gaps. Now, we did do this. I have this in here, but this is a call. We went long Tesla last week. I said on Thursday, on Friday, to get out of this before the end of the day. I said that before the market even opened. Did I know it was going to go to 180? No, but I knew it was going to have the move on Friday. And then I also knew that going into the weekend was not a good idea to hold something like this. It ended up going way more than I thought. Sometimes that happens. But I called the 155 calls on Thursday. It took until Friday to make the move. So it popped on Friday. And again, this was a long. Technically, could you still be in this? Yes. Do I think anyone still should be in this? No. Okay. Again, when you take a trade, you take the trade, you get in, you get out. Sometimes an option to take 24 to 48 hours. Sometimes they go the same day. This could have gone on Thursday, the day that I called it. I sent the trade out at 8:27 in the morning. So I have an options newsletter. I sent this trade out in Tesla, and this was the result. $8, I didn't think that was crazy expensive for this. You could have done a higher strike. And again, one contract would have made you $1,700. You could have had a better exit than this. I didn't hold it all the way up to 180, just so you know. But the return on investment was 213% if you had a good exit on this in the afternoon, even before it ran all the way up into the close. And if you risked 10 contracts and risked 8,000, which is an advanced trader risk, you could have made 17 grand in one trade. This is what makes it valuable to trade and why it's important. And here's the bar. So here was Tesla. This closed here, gapped up. I called the trade in this day. Then it ran up on Friday. Boom. So how am I trading options? I'm not doing any tricky option strategies. I'm trading the momentum. I'm trading the gap. We're doing calls and puts on the options letter. For the day trades, I prefer to short. Okay. How did I know what would gap up the next day? What stock and what are you talking about, Sean? I don't know what chart that was about. What stock are you talking about? And any other questions here? So again, this was a nice option, and you could have gone long that on the day on Friday, okay? But that got bought on Friday, on Thursday, again, by institutional money. Will it follow through? Not if the market falls, but that remains to be seen. But everybody should be out of that trade anyways, okay? So it's about spotting power money, and then you get in, and then you get out. Tesla, I called Tesla on Thursday. I didn't know what Tesla would do on the earnings. I didn't call the trade until Thursday. But on Thursday, I did see it, and I rated it, and I saw it was going to run up. So we did it. And that's that. On this day, I didn't know what it was going to do. It could have tanked. You don't take a trade. You don't guess where it's going to gap. I'm not guessing the gap. I'm seeing the gap. Then I use my system to rate it in the pre-market or the post-market. Like I just got done talking about UPS. UPS is going to do something. I hope. Okay. I don't know where it's going to gap. I'm not in any trades in that. I'm not going to take any trades in that until I see it. Then I'm going to rate it. Then I'm going to determine if I'm going to short it and go long or do nothing in it. It may be a flop. Okay. Netflix was a flop. I didn't trade that. It was not a good gap up. It hardly went anywhere, and then it pittered off. So I don't predict the gap itself. I wait to see the gap. Then I rate it using my point system. Okay. Does that make sense, Sean? Anyways, gaps are created with large institutional money. That's what makes the gap in the first place. So gaps are an event. They create a sense of urgency. Hurry, hurry, hurry. Buy it, sell it, short it, dump it, get it. Tesla was a buy, okay? Thus, an action is being forced by participants of the stock. This is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power money, and that is important. So I developed this system where I find gaps and I rate them using a checklist. They have to be qualified. You can't just, again, do everything in the direction of the gap or vice versa. And this is what confuses people about gaps, and then they tend to shy away from them. But really, they're very profitable if you know how to trade them. Very profitable. Again, to be able to make a 200-some% return on investment in 24 hours is a great options trade. Many people are scalping options, making pennies. Nowhere near that type of ROI. So I have a checklist where I go over it and I evaluate it. Okay. Now, like I said, I do prefer to short. This was Goldman Sachs. Okay. This was a 2 weeks ago, whenever it was. This is a 1 minute chart. Again, why do I like to short? Because, boop, you see this here? Again, a stock at this price that fell off a cliff. This is one of the things in here when you look at this. Again, fast moves happen, quick, quick, quick. You could have got in, got out. You could have got in, got out. You could have got in, got out. There was a million plays in this particular day to the downside. And again, they went fast and big, 2, 4, 5, 6 hours in a day. To be able to have something that moves this big, you want to be able to get in it and again, get out. And again, whether you do it as an option or whether you do it as a day trade, that's up to you. If you don't have a margin account, you can't afford a margin account, then you do it as an option. Okay. Or you sign up for the options newsletter. Was the cost of the option on Friday higher for Tesla than Thursday? Yes, because it opened up on Friday. Yes. Look. This was higher the next day. So the answer is yes. So getting back to the benefits of shorting, okay? There's just so many. Again, I do go long. I do make money doing calls. I do make money going long sometimes like I did with the MS, but I prefer to short because of the fact that it gives me a niche. Many traders don't know how to short correctly. Again, we've had a lot of opportunities in the market in 2022 to short. We will have more this year. Today was another example of one. And it's something that if you just go to the long side, you are not going to benefit from all the sell-offs that stocks have and the market has and the fast moves you can get to the downside. So again, even if you like to go long, if you don't know how to short, you're really missing out on a lot of opportunity that the market has to give in stocks as well. I think I answered the question. Somebody asked me about the cost of the option Friday. Yes, it was more expensive, but that's why you take the trade on the day that I call it. I called the trade at 8:30 in the a.m. That means you take it into the open in Tesla. You don't take it the next day. Whoever asked that, Hernandez. I don't know why you'd wait till Friday. You want to get the best price you can if you can. All right, so I'm calling the trades early. So if you didn't make money in 2022, you didn't know how to short. I mean, this is a chart of the market here from last year. So we started out the market in 2022. We made brand new all-time highs in the SPY. We didn't in the Qs, but we did at the beginning of the year in January, first day of the year. Then we gapped down, then we fell off a cliff. And again, there were many times that the market tried to recover last year and failed to do it. And it was a difficult for people that went long last year because they kept thinking the market was going to make moves up to the high, and it failed to do it. July was a rough month for people. Really, people just thought for sure the market was going to make a recovery. And even at this point, I mean, again, we're looking at SPY, can look at 1,000 charts here. We weren't. I mean, it wasn't impossible to think we could have recovered last year by the summer to the end of the year, but we didn't do it. We just didn't do it. Okay. Again, this year remains to be seen, but we play it as we see it. I'm not worried about predicting 6 months from now, 6 years from now. Who cares? You've got to make money right now. That's the name of the game as a trader. If you don't make money today, this week, this month, you're not going to be in this game for long. All right. So what happens 6 months from now? It's like trying to predict, okay, who's going to win the presidential election in 2024? You don't even know who's running. How can you? It's like you don't even know who wins a nomination on either side, let alone who's going to win the race. So don't just think about things that are out of your control that have no relevance at all, and you don't even need that information. Just do what you know today to make money today, to be successful right now, to improve the quality of your life and your trading today. That's what you need to live in your own little bubble, okay? Just like me. So I teach a system. It's called the Golden Gap. The Golden Gap 26-point rating system pinpoints the direction of power money by rating price. Okay, so I'm looking at price. I'm reading price. That's what I do in the pre-market. And as I've been talking about all day, many traders go long. Many traders don't know how to trade gaps, so they shy away from them. And shorting, if you want to go with the crowd of traders, you're not going to be successful because more people are not than are. And it's just the way that trading is set up. That's why you have a lot of people that are very wealthy in reference to trading and investments in the market. And then you have a lot of people that lose. It's a zero-sum game. When you make money, you're taking it away from somebody else. Could be your next door neighbor. This isn't Mr. Nice Guy, okay? You're not knitting sweaters and selling them in street quarter for $19.99, and then you get something, they get something. This is, you go into the market, it's the smartest person that wins. It's the most aggressive, the most intelligent, the richest people that get it. And you got to understand that if you're with institutional money, if you're with that big money, those are the people that have the insider information. Those are the people that are paying $500 for a research report, which you're never going to do. That they know X, Y, Z that the Fed's going to say, and this, that thing, and the other thing. And you darn well know that they probably know what the Fed's going to say. So, you know, look for what's going to happen in the next 24 to 48 hours of the market. I will say that. Somebody is saying about ES and NQ. I don't look at those. I don't trade those at all. No. So I trade the market. Sometimes I trade the Dow, which is the Diamonds ETF. And we've been talking about this. You must have an edge. Okay, this is you. You will be a lot happier if you have an edge. And you're going to be a lot happier if you're making money. Okay? So success requires a plan of action to get there. So my plan of action is my 26-point rating system. I think Sean mentioned this earlier. Hopefully Sean one day will learn it. So I go through, I rate the gap. I'm looking for 20 points or more. That's the cutoff. If I get it, I take it in the direction of the gap. And again, checklists work. If you fly a plane, if you perform surgery, if you're a surgeon, if you're a nurse, I mean, everyone has checklists that have professional jobs. If you have an accountant, a CPA, and they're doing your tax return, they go through the checklist. Boom, boom, boom. The checklist helps you keep on track to get the job done right. Okay. So it is a plan of action. It's not, let's trade on the fly. That's not going to get you what you need. You shouldn't be risking money on the fly. You shouldn't be trading anything on the fly. You should be taking blind ideas from strangers at webinars like this. You're listening to what I have to say here now to see if anything I say resonates with you. You can't just take blind trading ideas from people that you don't even know that are strangers. You don't know why they're taking them. You don't know if it's a strategy. You don't know if it's no strategy. You have to have some thought process in the decisions that you're making, okay? Don't risk money for risk's sake. Everyone that puts money into the market should have a plan of action and a checklist. On a professional level, all high-income career field specialists have checklists. And again, that is a good idea. That's where you want to be. So I'm just going to go through 1 week of trades here. I could have put last week's in. I just didn't have time. This is 1 week of golden gaps we did in December, the last week of the year. And again, I closed the room for Christmas and New Year's, but we made $23,445. This was day trades. And again, we had a winning week last week as well. But this was Tesla in December. I talked to you about the fact that we were doing this a lot. This was a really nice gap. We shorted it at 175.20, got out, boom, 171.65. Here was the gap. Stock closed your gap down, fell. Again, the red bar depicts the selling, and we shorted this. With a $2,900 risk, you could have made $35.50. You could have taken 500 shares. The idea is to get the momentum. The idea is to get Tesla. The idea is to know this is going to fall before it falls. Again, I'm not predicting the gap, but I might get up in the morning and I see the gap and I rate the gap and I know it's going to work, and then we do it. And we do it into the open. We did go long this one here. I'm showing you we went long CVS for a little tiny bit. This was on the 13th. Again, looking at this, it's kind of funny because it really didn't go up that much in here, but we pulled money out of it. It closed here, gapped up, and that doesn't look like much of anything at all, but it was not much to do that day, and we went long. So you could have risked 3,000, I made 1675. We went in and went out really quick. Sometimes I made them out of trades in 5 minutes, 6 minutes, 10 minutes. As fast as I can get in and get out, I can. But this was one that we went long. And then on 12-14, no gaps met my criteria. We didn't do anything. That's another important thing. Follow the rules. Don't trade when somebody doesn't meet your criteria. On the 15th, we did the QQQs. They had a beautiful gap here. Again, December was a nice month to short the market. And again, when I said the market, it could be the Qs, it could be the SPY, it could have been the diamonds. Again, we did the Qs. We shorted it at 280.210, got out at 280.45, boom. If you risked 2,800, you could have made $3,300. If you had risked 1,000, if you had risked 500, whatever you want to risk. Again, while you say, well, this is pricing, fine. You could have bought a put. Could have bought the 280 puts. Okay. Do what works for you. So this closed here, gap down, fell, boom. This was on the 15th. Again, how do you make money? Short it. We shorted that. Then we also did the Qs on the 16th. We did the Qs here. Entry was 276, exit was 273.10, almost pulled $3 out of it. It kept going. This day kept going. So I didn't get a low of the day exit in this, and I didn't get a low of the day exit in this. I can then get out quick. I can then get out quick. Okay, that's my mojo. But if you want to hold things, I think it's a lot easier to do them as an option. But this was a nice train because we almost got $3 out of it. With 2,300 shares, you could have made $6,600. And again, or $6,670. If you don't want to take this trade on margin because of the cost, okay, you could have bought a put. You could have bought, like, for example, the 275 put. So if I'm calling this entry in the room, you could buy the 275 puts, okay? And I'm just giving you ideas here. And then you can get in and out of the put as a day trade, all right? We also did the SPY, again, closed here, gap down, fell. Another nice one here, pulled just a beautiful move. 385.25, shorted it, exited at 381.50, in and out. We did the market quite a bit, actually, in the month of December. Profit was $8,250. Again, this is pricey if you're in margin. If you don't have the cash size account, take less size or buy a put. You could have bought the 385 puts. Easy, okay? Again, it's the idea of getting the direction right, of getting the pick, of picking the right stock or tickle symbol. Again, this is an ETF of the market of the S&P, but it's the idea of knowing that it's going to go down, getting in it aggressively, getting out of it with profit, and then getting the momentum and the move, okay, which is what I really focus on doing every single solitary day. But for me, it's about the time that I spend trading versus the analysis. So in the pre-market, I'm working hard, and I'm spending all this time figuring out when I get up and very little time trading. So the more time I spend figuring out what to do, the more money I usually make, and I don't have to spend that much time trading. Whereas many people, the opposite. They spend very little time preparing in the morning what to trade and a long day trading and stressing themselves out on what to trade. I'm the opposite, okay? The more time you spend preparing and figuring out what you want to do, focusing on the chart, focusing on the gap, making the pre-market decisions, the more money you're going to make in the day, the easier it's going to be for you to trade in the day, and the best chance you're going to have for success, because you're not going to be all over the place, stressing yourself out, trying to make last-minute decisions, chopping at the bit. Again, not being prepared with what you're doing. So when you go to trade, you really should have a high winning strategy, number one, good money management, number two, and a good mentor to follow. If you have these things, then you're going to make it. Again, how long it takes you to make it is up to you. I do my best to help people, teach them, review stuff with them. But again, this is an individual thing. You have to be an independent-minded person if you want to trade. Because again, this isn't giving money to somebody and investing it for you. This is you want to do it. But it's fun. It's fun to trade. The room is fun. I try to make it as fun and enjoyable as I can. Making money is fun, okay? And the faster we can make it, the better. So for me, it's all about the fast trades and really chunking it out, which is about income generation, which a lot of people need. We're in a situation right now, some people think we're going to go into recession. Some people think inflation is curbing off. Whatever you think, things cost more now than they did 12 months ago or 24 months ago. Times have changed, okay? So you have to think about yourself. You have to make do. Either you're going to spend less or you're going to make more money. So you can make more money by getting a second job, or you can curb your whole life situation and spend less. I don't like that idea. So the idea is to earn more. How are you going to do it? You can trade the market. And the nice thing about trading is you can do it part-time while you're working and delve into it to transition to doing it full-time if you want to. So empower yourself to trade the market. And that is my best advice to you. Empower yourself. Think positive. It's the beginning of a new year. If there's any time to do it, it's now. So I teach a class once a month. It's called the Golden Gap Course. It's a 26-point rating system to find the best stock to trade each day. I focus to the short side. The course also teaches you how to enter and exit the stock on the day. The course teaches price analysis and technical analysis on an advanced level. So it's a 2-day class. I just did the January class this weekend. The next class is at the end of February, and I do it once a month. Class is online. It teaches you how to find, pick, and place stocks that are professional bearish gaps. So if you're interested in the next class, it's February 25th and 26th, 9 to 5, starting Sunday. Class tuition is $69.99. Class is online. You can be anywhere in the world and take it. And I'm doing a special till February 1st. If you want to sign up for the February class, okay, you can receive the trading room free to the end of 2023. This expires Wednesday, February 1st. So you have today, tomorrow to decide. And if you have questions, you can email me. If you're interested, you can email me, and I'd be happy to answer any questions for you. Anyone have any questions I want to go over with right now before Jeff pops on here? I think I answered Brian's. Sean, do you have any other questions? Where are we going to close here today? Are we going to close down, like I said, an hour ago? Listen, if anyone has any questions, you can email me at melissa@thestockswoosh.com. Thank you so much for having me. Thank you so much, Jeff, for having me. Happy New Year. Have a wonderful, wonderful, wonderful week.
All right. Thank you very much for coming, Melissa. It was good to have you.
Thank you.
All right. And the email address for that, again, is melissa@thestockswoosh.com. So, all right. Very good. Hold on just a second. Let's go ahead and kind of get things kind of moved over here. Okay. And here, let's do this as well. Okay. All right. Let's go ahead and kind of get back over here. Let's do a little bit of looking at some markets. So I do want to remind you, again, thanks for coming today. I hope you're doing great. I hope you're enjoying it. I do want to remind you of the special Traders Action Summit Pack that we're giving away today. And with it, you're going to get 3 months of Trade Trend, the GoNoGo Complete, Oscar Carboni's live training, 3 months of Learn Metastock, 2 years of Stocks and Commodities magazine, the Unleash the Power of Metastock workbook and videos. All that is going to be $1,235. You can take advantage of that by going to metastock.com/summit deal. You can give us a call at 800-882-3040, or you can also visit us online or you can do that online at metastock.com/saleschat. So we have a couple minutes extra right now. What I'm going to do is I'm going to play a little video for you. So hold on just a second while this comes up. Dan's.
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Actually worked really good in terms of timing. So again, if you would like, you can take advantage of our Summit Action Pack, 3 months of tape gen, GoNoGo Complete, Oscar Carboni's training, 3 months of Learn Metastock.com, and 2 years of Stocks and Commodities magazine. So plus Unleash the Power of Metastock. Normally that would cost $2,810. Here today at the event, it's $1,235. So metastock.com/summit deal, 800-882-3040 or metastock.com/sales-chat. So before we get to the next presenter, we will say thank you to CMT again for sponsoring today's event. We really do appreciate it. Looks like I need to do some level balancing again on my camera, but I'll do that after this. With CMT, they've been a great sponsor of the event. They're a hugely well-respected company, and they work on accreditation of investors. If you have assets under management, it's kind of eye-opening. Tyler comes in and he'll talk about how having assets, how a CMT accreditation or CMT designation can help you grow your assets under management or your responsibilities and that kind of stuff. And it's quite eye-opening. So if you fall into that category, or if you're interested in learning more about becoming a CMT, go to cmtassociation.org, or you can also call them at 646-652-3300. Want to say thank you for CMT for sponsoring the event. And of course, we did just talk about Metastock. Metastock's been rated number 9. That video is a few years old now. It's 30 years in a row. So it can help you scan. It can help you test ideas. It can help you find those gaps that Melissa was talking about. You get the expert advisor with the real-time comments, alerts. All that starts at on our 3-for-1. It all starts at $29 a month for the extended trial for 3 months. So you can take advantage of that by going to metastock.com/traders-summit 3-for-1. You can call us 800-882-3040, or you can visit us online at metastock.com/sales-chat. So there you go. Our next presenter is Dan Passarelli. Dan has been is somebody I've known for a number of years, like a long time. He does a really, really good job. Today is going to be talking about his red knockout system and how it works. And so let's go ahead and bring you on here, Dan, and get you started. Dan, how are you?
Hey, what's up, man? How are you? I am doing just gosh darn fantastic. How are you these days, Jeff?
I'm really good. It's good to have you back. I think like the last time you were here was like maybe November, right?
Yeah, it sounds about right. Sounds about right.
Yeah, well, it's good to have you back. Let's go ahead and get you in charge of everything. Let me go ahead and turn the presentation over to you. It should ask if you want to present.
Okay. Let's see here. I think I can do that. I always wonder what screen's going to pop up when I show this.
It's always a question.
It's always the question. Yeah, of course, it's not that one. What about that one? There we go.
All right. Yeah, I can see it. Everything looks good on this end.
All right. So how I have until the end of the hour, I think, right?
For sure. Yeah.
All right. Cool, man.
It's all yours. I'll get out of the way.
All right. Well, hi, folks. How are you doing today? I'm Dan Passarelli, and I'm really glad to be with you right here and right now in this very moment. Now, today I'm going to share with you how to get outsized profits by trading momentum. Now, before we get started, I need to point out options are not for everyone. You should read characteristics and risks of standardized options before trading, and you can get a copy of that by emailing investor services at theocc.com. Momentum trades are a totally classic trade. Thousands of traders have collectively made billions of dollars trading momentum trades over the years. And the beauty of it is, the concept behind it's easy. All you have to do is identify the setup, see when the trade triggers, get a confirmation, set a target, and boom, you're off to the races. At the end of this presentation, you will be able to easily identify the specific momentum system. I was listening to a podcast not too long ago, and they were talking about the difference between mindset and skill set. And both are important. Henry Ford once said, whether you think you can or you think you can't, you're right. And there's something to that, isn't there? So I thought, how can I make one of those things, mindset or skill set, really simple? How can I do a lot of the work for our traders so you don't have to focus on both of these things at the same time? So I put my time into the only one of those that I can pretty much entirely do for you, the skill set. I put it into a system that if you follow along, you don't really need much skill at all. The skill part's built in. So now all you have to do to move forward in reaching your trading goals is to think you can. And this is my promise to you. I'm going to share with you how to easily spot high profit momentum trade opportunities using stocks, ETFs, options, futures, or Forex. So your trading is completely simplified using this tested, evolved trading system we've created for our traders that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And at the end of this presentation, I'll share how you can take the next step so you can start getting immediate results. Now, what do you say? Is that a fair deal here, huh? Is that a fair deal? Hit that questions box and let me know what you think here. You like what you're hearing? And don't be afraid to participate here. Let's make this pretty darn fun over here. Josh says yes. And Anthony says yes. And Tina says yes. All right. And Steven says yes. And Gina says yes. All right, good. I like this participation here. I like the way things are going over here. Now, also, in order for you to get the most out of this, I ask that throughout this presentation and afterwards, make this about you. Consider turning off your cell phone, closing Facebook, all your other open tabs, and let yourself get immersed in what I'm about to share. Let it become part of you. Let it in. And be sure to stay till the end of this training. The most important things I'll share come later. And to keep the focus, I'm going to hold all questions till the end. If you have a question, write it down. I will get to it. So let's keep it positive and let's have some fun. So this gives you an idea of who I am, what I do, some of the organizations I've worked with. I wrote 2 of the most popular books on option trading, worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world. And I get to be on TV a lot as well, which is kind of fun. I got my start down on the floor of the Chicago Board Options Exchange. I traded for years. These pictures literally span 25 years of being involved with the trading floor. I traded some huge stocks like the Ford Motor Company, AT&T, Carnival Cruise Lines, and I traded some little ones that no one's ever heard of. And a little secret here, the little stocks no one ever heard of is where you can make the big money, when you know about opportunities that no one else does. Now I want to jump into a new discovery I made. Does anyone know what this formula is? Anybody? No? Good. Because we're not going to talk about it again during this presentation. We don't need to, and here's why. Now, I have an extensive background in trading, but the fact is I am no mathematical genius. So you mind if I share a quick story with you about when I was in high school? This is a story I've only shared to a couple of, just maybe like once or twice. I think you're going to like it. When I was a kid, I was a bit of a troublemaker sometimes. I mean, seriously, I got good grades. I didn't really have to study usually, but this is a story about a time that maybe I should have studied. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few other kids would play poker. And that's all we did, all hour long, the whole class. And man, I made a lot of money in that class. But the problem is with math builds. If you miss something this week, you're lost next week. And you're hopeless the week after. So needless to say, I didn't learn a lot in advanced algebra concepts that year. I crammed, I passed, I didn't learn that much. So fast forward to freshman year of college, I had to take an algebra refresher. Kind of embarrassing. I always prided myself on being smart, and algebra is not that tough, but I had to take the refresher course. Now, one thing you may not know about me is that I was the first Passarelli to graduate college, and I almost wasn't. Here's where the story gets interesting. Now, I'm a competitive kind of guy, mind you. So sophomore year of college, my cousin, Michael, who is 1 year younger than me, was in my calculus class. And I was very intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin Michael would be a credit ahead of me and maybe, just maybe, would end up graduating before me. And there was absolutely no chance I was going to let this happen. So I put on my A game. I was ready to work hard, as hard as I could to win. And I'm going to guess there's some of you who can relate to that, right? You'll do whatever you need to win, right? Put in the effort anyway. So me too. But there was one factor that came into play that was a saving grace. I had a great teacher, one that I could relate to. He made it easy for me to learn, and I did, and I ended up acing calculus and had the honor of being the first in my extended family to graduate college. Thank you very much. Now, like I said, I'm not necessarily a mathematical genius by nature, but I've spent a lot of time in option trading, 30 years, and I do whatever it takes to create great trading systems for myself and for you. So I studied the math of things like relative strength to see how they tick, and I realized there's some hidden keys within these equations that can predict when momentum might continue. And now I'm going to share the hack with you. The concept of RSI, the relative strength index, is it's up strength versus down strength. Now, too much up strength can lead to being overbought, which can lead to a reversal, but there's a hack here. Certain patterns can prevent momentum from burning out and lead to continuation. Now, discovering this specific pattern wasn't a fast process, and it wasn't easy. It took years until I evolved the system, and my results proved that I had a winning strategy. And we continue to improve upon it to this day. I put in the investment for myself and for you, because now it's finally time to share it with you. So this system is called the red knockout. And this is where you want to start taking some notes. Write this down, red knockout. It's a simple trading strategy that can lead to outsized profits, simple 4-part chart pattern, easy to identify, and the profit targets are easily set. And we can use this with options, stocks, ETF, indexes, futures, Forex, pretty much anything you can make a chart of. So let me start by listing the steps in the red knockout system, and then we'll zoom in and go through some examples. So write this down too. This is important. Step 1 is the setup candles. It's 3 or more green candles that make up the green run. Step 2 is the red knockout, or the RKO candle, which is a red candle with a smaller body than the previous 3 green candles. Step 3 is the trigger candle, which is a green candle that takes out the red candle's high on higher volume. And part 4 is the confirmation candle that opens above the high of the RKO candle and signals the trade entry. So let's break this strategy down step by step and go through how it works. So these are the setup candles, which we might also call the green run. Now that's 3 or more consecutive green up day candles, which you see here circled in yellow. Now, I want you to visualize step 2, the red knockout candle, again, also just called the RKO. That's a red candle immediately following the green run with a smaller body than each of the previous green candles. Okay. And then step 3, I want you to visualize this. This is the trigger candle. It's a green candle that takes out the high, meaning it trades above the high of the RKO candle. And then finally, the confirmation candle, which is a candle that opens above the high of the RKO. And when we get this one, it signals the trade entry. What do you say? You think you got this down? Let's go through some examples. So this is Bloom Energy Corp, BE. If we have a red knockout setup, what's the first thing we look for? Let's go for it. Let's say this is going to be a quiz. What is the first thing we look for? The setup candles. The setup candles are 3 or more green update candles in a row. Do you see that on the chart anywhere? Click right here. See that arrow that just popped up? Here's the first of 3 green setups. See that? We've got this one and then the next one that is higher. And then here, finally, we have the third one that is still higher. So we might also call this the green run. That establishes that the trade is setting up. All right, are you getting this? Good. Now, what is step 2? You remember what that is? That is the red knockout candle, or RKO. If a red knockout candle shows up on the chart, if it does, it's very easy to identify. And it means that the setup might actually be materializing. The RKO is a small-bodied candle, again, smaller body than each of the 3 green setup candles that could open higher or lower. It doesn't really matter, but the key is that it's down from the open, thus it's red. That's what a red candle means. It doesn't necessarily, in fact, look, this one is actually an up day because it closed higher than the previous day's close, but it opened higher than that and then fell down throughout the day. That's why it's red. Now, step 3 here in yellow is the trigger candle, shown by this yellow arrow. That triggers the trade is indeed setting up, so you're getting ready to time your entry. We call this the trigger candle, and it's sort of like when a marksman is all set to fire upon the target, gets his finger on the trigger, ready to take the shot. And then, finally, step 4 is the confirmation candle. That means that the trade setup is confirmed. It's got a green arrow. Green means go. Fire away. So now let's slow this whole thing down a bit. Let's go over the roles of each of the 4 components of this setup. So here are the green setup candles that make up the green run. So what this really does is it sets up like a mini trend, okay? A green candle means that the closing price is higher than it was when it opened. So just the opposite of what I was saying about a red candle. Opened here, closed here. It is up from the open. Open here, closed here. It's up from the open. But they also need to be up days. So here's where yesterday closed. Here's where today closed. It's higher than yesterday's close. This close is higher than yesterday's close. So it's kind of two things going on. Now, it's not like crazy uncommon to see 3 green candles in a row, right? Or 3 green up days in a row. So this is not necessarily the be-all, end-all yet. It's just sort of a mini trend. But what we want to see is the next step here is this red knockout, a little bit of a pullback, sort of like the opportunity for the stock to take just a bit of a breather to let the folks who missed the run before, to give them a chance to get in, which in turn creates more momentum. And so that's where we get the trigger candle. This is like, yeah, game on. This trend just had a small pullback, but it's continuing. And then if we see that momentum still continuing, then it's 1, 2, 3, go. So now let's run through several examples to see how this might play out in real life. So this is Thomson Reuters. First of all, is there an RKO set up here on this chart anywhere? Do you see one? Boom, right there is the first candle, and boom, right there is the second candle. Nice work if you got that. All right. And if we follow our profit target rules, which I want to go over in a second, well, I'll show you in a couple of minutes how that works. So next, after that, ends up coming the red knockout candle. So this ends up being like a little bit of a hammer candle, and that's fine too. It can be a doji, it can be a hammer. It just, you want it to have a smaller body because you don't want it to be a big pullback down. You don't want it to be a reversal. You want it to be a breather, something that gives the RSI a chance to catch up and not burn out the strategy and turn it into overbought mode and have other traders start selling. Okay, like momentum is being created here in such a way where it doesn't burn itself out, so it gives you the opportunity to ride it up. And then if the stock trades higher the next day than the high of the RKO candle, now we've got something we can work with. Now we've got a move that we might want to jump on, but we want to wait until we get confirmation of that, and here we do. So now if we follow our profit target rules that, again, I'll go over in a second, we would take it off up here, right about here. Actually, we would hit that point sooner now that I'm looking at it. I guess that would probably be about here, quite honestly. So I guess we wouldn't have to hold the trade quite even that long. That's awesome. We'll probably end up taking it off about here. Okay, how about here in HUM, that is Humana. Is there an RKO setup here anywhere? Look closely, look closely, look closely. Good job. This is one that has 6 setup candles. Again, we can have 3 or more setup candles. We start with the green run here. And then we got 1, 2, 3, 4, 5, 6. Holy cow, this is a 6 setup. Next comes our red knockout here. This is like total doji, isn't it? And by the way, so why is it called a red knockout? It's like I said, in any trend, there's a little bit of a pullback. And in this case, this mini pullback is just enough to enable traders who missed the green run move to get in and provide some follow through. So the red candle just gets knocked out of the pattern and we look for continuation. That's just what we get. We get the trigger candle right here. And we wait one more day to confirmation, and then we get in on the open. I like to get in about 15 minutes from the open. Now let's see here. Now we don't have to necessarily get in on the open. I usually prefer to, because I haven't necessarily done a study on this particular aspect of it, but it's my observation. I think usually we get follow through to the upside throughout this day. So if we get in on the open, we can take advantage of that and sort of get an early head start. So here on the confirmation day, you could have bought the 44 strike calls at $1.19 and sold them 5 days later at $1, like right when the stock was right there at $1.55 for a 30% profit on the options in literally just 5 days. And that's why this works nicely for option traders. You can get more leverage and more protection than with just trading the stock. So on a one lot, you'd have made $155 in 5 days. On a 10 lot, if you're a 10 lot trader, that's $1,550. If you're a 20 lot trader, that's $3,010. And like I said, it's not necessary to use options. The system works well if you're a stock trader, ETF trader, or even a futures trader, or even a Forex trader. All right. So now let's look at this example in TSWI. So if we look here, we have a 4-candle green run. That's followed by a classic RKO. Why is it classic? It's got a smaller range than each of the green setup candles. And then it's just a mini pullback. And it's actually engulfed by the previous green candle, which means it's an inside day, a smaller range, and didn't trade lower, which is good. It's not a reversal. And then we have the trigger candle with the yellow arrow underneath it. And then 1, 2, 3, go, confirmation. Now, our traders that use the more aggressive technique of getting in on the trigger candle could possibly have made this work even better by getting in at a lower price on this previous day. Some active traders might take advantage of scenarios like that. The RKO indicator works on all time frames. So it's highly versatile if you're a day trader, if you're a swing trader, if you're what I call a short-term trader, which I would define anywhere between like maybe 3 days to 3 weeks. It even works well for long-term investors. Now, when I worked on improving what criteria to use for the setup candles, the red knockout candles, the trigger candles, and the confirmation candles, man, I spent a lot of time on it. And it was a really great and humbling experience. And it reminded me of my old boss, Steve Fawcett. So, okay, you see two people here. This one, of course, who is this one? Can anybody tell me who this person on the left-hand side is? Who is it? Who is it? There you go. Anthony says Richard Branson. That's Sir Richard Branson to you, Anthony. Thank you very much. Now, this other gentleman is Steve Fawcett. Now, for those of you who don't know Steve Fawcett, I should say the late Steve Fawcett, he was not only a famous trader, but also a famous adventurer. He held many world records. He attempted to set one flying around the world in a hot air balloon with Richard Branson, and that was when this picture was taken. Now, I remember one day, Steve took all of his traders out to dinner. There were probably about 45 of us. I want to say spouses and or girlfriends or whatever, boyfriends were invited too. But there were 45 of us traders. And after dinner, he asked us, why do you trade? And, you know, it's not about the money or whatever. The real reason, why do you trade? Because as floor traders, standing all day long on your feet, your back hurt. There are people yelling in your ear, getting their spit on you when they yell. Why do you trade? What is your real reason? Is it to have more freedom to take time off and play golf, or to secure your retirement, or to put your kids through college? And that stuck with me. So I want to ask you, hit that questions box or chat box for me right now. What is your reason for trading? Please share. Take a minute here. This will help us kind of get to know each other a little better. Hit that question or chat box. What is your reason for trading? Why do you do it? Is it, so you can buy fun things? Is it for your retirement? What is your real reason for trading? Tina says to save for retirement. Steven says, I don't golf, I buy guitars. Okay, hey, that's, you know what? Those things can be expensive. I completely understand that. Josh says more financial freedom. James says for freedom of time. Right. Now, Steve was a great mentor. Without having him in my life coaching me, I could not have become the trader I am today. But there was one thing that Steve was known for saying. You want to know what that is? I'm still learning. When I met Steve, he was a gazillionaire, super successful trader, but he was always tweaking his process. He was always learning. He was always moving forward, always making his trading better for himself and for his traders. And I am super thankful for that, because I was one of his traders, but he kept improving. So I also started the process of improving on, in this case, the exit point. In fact, I try and improve everything about my trading habitually. So here's how the exit point works. Setting these prices, the target prices to get out of the trade, is pretty easy. Here's how we calculate it. Basically, what we want to do is we want to see a repeat of the green run, okay? We want to see a repeat of the green run. So, if the green run is like a $5 move, we expect that to repeat itself after the mini pullback, after the RKO candle. So what we do is we take the low of the first green run setup candle and subtract that from the high of the last green setup candle. But here's the thing. Have you ever gotten into a trade and it was going well, and you waited and you waited and you waited, and then the trade turned around and that winner became a loser? It happens. So what we do sometimes here is we use what's called a haircut, which means if that range from the first green setup candle, the low of the first green setup candle, to the high of the last green setup candle, if that's $5, we might not wait for $5. We might wait for like 80% of that $5. If it runs another $4, we'll take a haircut. So we multiply whatever that green run sum is by a haircut, a percentage, so that we take our profit just a little quicker to increase our chances of having a winner trade. And so basically we take that sum and we add that to the high of the RKO candle. So this is really easy, really straightforward. And if it doesn't make 100% sense just yet, I'm going to show you how you can just get all this calculated for you really, really easily. So hold on. This is really simple risk management. Immediately after we buy the stock or trade the option, we set a profit-taking good till cancel order and possibly a stop loss good till cancel order. And we put those in OCC. One cancels the other, so we don't get filled on both. So the next thing is, we do this over and over again. It's rinse, wash, repeat. Work the system works. All right? Like I said, if you're not familiar with some of these terms or exactly how to do some of these things, later I'll share how you can learn how to easily do all this and make your exit super simple. I want you to leave here today with all the tools you need to be massively successful with this. And I bet you do too, right? Would you like me to share with you what we've discovered makes RKO trades even better? Yes? Yes, I'm nodding my head here. I don't have the video on, but I'm nodding my head, yes. All right, well, I bet you're nodding your head too. So, in summary, there are a few important takeaways. Momentum trades can yield outsized profits. This is a time-tested, evolved system. So we have the setup candles, the red knockout candle, the trigger candle, the confirmation candle, and the profit target. These are pretty easy, right? Like, give me a yes if you think that you can identify at least the first four parts of these on a chart. If you see this on a chart, like you've learned enough here today to be able to identify these. Give me a yes in the questions box right now. Josh says yes. James says yes. Gina says yes. Steven says yes. Anthony says yes. Tina says yes. Good. I say yes. I know you're going to say yes because I made this really easy. I drew it all out for you. It's easy. When you see these on a chart, it's very easy to recognize them. But there's a problem. So there are 6,366 stocks to trade. If it takes you, say, 45 seconds to spot an RKO setup on a chart, it would take you 80 hours a day to go through all the opportunities that are out there. And that's only looking on one time frame. If you trade multiple time frames, it becomes a little more impossible. You don't like missing opportunities, do you? There's got to be a better way, right? And I bet you know that. You wouldn't be here right now if there wasn't a better way. So are you ready for it? The RKO system is officially here. Over the past 2 years, we created both a scanner that would easily identify RKO trades, as well as an indicator that displays the pattern right on the chart along with the price target. We wanted to make it so simple, it's impossible to mess up. So first, let me start off by talking about who this system is not for. So just to be clear, it's not a get-rich-quick scheme. It's just not that kind of strategy. This is about having more consistency in your trading. And this is not for people who like spending hours going through thousands of charts to hopefully find a halfway decent trade. If you have 80 hours in a day, again, that's what it would take to identify all the opportunities just on one time frame, good for you. But some people like to spend their time more efficiently and more enjoyably. This is also not for wishy-washy procrastinators, for overthinkers. Wishy-washy people who see a good investment but can't make a decision to save their lives don't make good traders anyway. But I know that's not you because you have invested your time in being here today. Because let me tell you who this is for. This is for you. If you want your trading to be easier and less time consuming, this is for you. If either you're new to options and you want a simple, easy to follow system, or you're experienced and you want to increase your number of trade candidates without spending more time, this is for you. If you can follow a few simple steps, this is for you if you're willing to invest in yourself, because right now you have a new opportunity to easily scan for top momentum trades you wouldn't be able to find without this screener. To easily visualize when an RKO trade is set up, when to enter the trade, and where the price target is. With over 6,000 stocks out there, it's almost impossible to just happen to come across one of these great setups. But with this easy-to-use three-step scanner, it makes it possible because I've made the investment for you. You see, I know what it's like to struggle as a trader in the market. I've had the pleasure of training thousands of traders, and I wanted to develop a scanner that made it very easy and simple to find profitable trades with great potential. And even for myself, before creating the RKO system, I'd come across one of these setups maybe once every 6 months. I would miss so many opportunities, but finally, I've invested both time and money to develop this simple, easy to use system that you can harness in just 3 simple steps. Imagine what your trading account would look like if you could consistently sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on the trades that have been identified for you. What would that mean to your trading business? Well, this is exactly what the RKO scanner does for you. These are some examples of the trades, both entries and exits, identified by the RKO scanner and displayed by the RKO indicator. On the left side are stock trades, on the right are options. On August 30th in YPF, a stock trader could have bought the stock at $5.89 and 10 days later sold it at up to $7.37. That's a 25.1% profit in just 10 days. On May 5th in WTI, a stock trader could have bought the stock at $6.80 and sold it at up to $9.10, locking in a 32.5% profit in just 6 days. Most hedge funds don't make 32.5% in a year. In the options, on October 1st in IBM, a trader could have bought the November 138 calls at $2.18 and sold them 11 days later at $6.15, locking in 182.1% profit. To make that more tangible, if you bought, say, 4 of those calls, you'd have invested $872 and made $1,588 in profit. Look, even if you make, say, 3 of these trades a week and your results are half as good, how much impact can this have on you and your family's financial future? Start getting the results that you deserve. This is Nick. Our head coach, John, who's a brilliant guy, ex-Goldman guy. John and I started with Nick, or shared with Nick, rather, what we were thinking about the RKO. Nick was one of the first humans ever to see the RKO. And in fact, he was actually extremely instrumental in helping us. Nick said, using scanners, in particular the RKO Daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner and do the checks and decide to take the trade or move on. And it only takes a few minutes and helps me find the best trades consistently. I want to invite you to join us and start using the RKO system right away. So first, you're going to get the red knockout scanner. So every day you'll be able to have a list of all the RKO trades available in the market. This simple scanner searches the universe of over 6,000 stocks for the setup and makes it possible to find trades you would never have access to without it. For you to profit with the RKO system, I need you to know how it works. So I created a video training course that shows you step by step exactly how to install this on your platform, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course, targets and trade management. So what this means is first you're going to get the red knockout system. You're going to get the RKO accelerator video course to get you up and running super fast. And then, look, I can put the tools in your hands. I can tell you how to use them, but I know for me, I learn faster when someone shows me exactly how to do it. So the best thing I can do for you is give you hands-on training every Friday for the next year. The one full year, you're going to attend our online live group coaching class and watch head coach John Kamisic set up RKO and other trades right there while you watch. John is formerly with Goldman Sachs, First Options of Chicago, Lind Waldock. He traded for a hedge fund and is the expert on the red knockout. In fact, he helped me develop it. He's just the kind of person you want to listen to. This is the first time we're making this class available as a weekly option. But I wanted to make sure you hit the ground running and get the hands-on training to start getting immediate results. I want you to meet Dennis Meixel from East Peoria, Illinois. He says, thanks, great class, exactly what I was looking for. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. I mean, look, how would it feel to have top picks selected by an ex-Goldman guy every single day? So look, what this means is first you're going to get the red knockout system. Then you're going to get the RKO Accelerator video course, and then you're going to get hands-on training every Friday with our weekly group coaching. This is a $5,247 valued package. Do you mind if I over-deliver? What I really want is for you to make as much money as possible trading the RKO, and I imagine you do too. So every day we're going to rank the day's RKO trades and list them out and give you our top RKO picks so you can see what we think are the best of the best. This is the RKO watch list, and it's a $1,297 value. Plus, John will add a bonus trade every day from his daily group coaching class so you can diversify your trading and get all the top trades of the day by simply clicking one link to access your curated watch list. So this means you're going to get the red knockout system, the RKO Accelerator video course, the weekly group coaching hands-on training, and also the RKO watch list. And finally, this completes everything you need to make the RKO simple to trade. With the RKO indicator, we put the arrows right on your chart to show you the trigger candle, confirmation candle, and even the exit price target. So all the information is laid out for you. This could not be easier. So this means you're going to get the red knockout, the accelerator video course, the group coaching, the watch list, and you're going to get the arrows right there on your chart, all the math done for you. Plus, you're going to get updates every time we optimize the strategy to make it better for one full year. This is a $7,541 value. RKO works on the following platforms: Metastock, Thinkorswim, NinjaTrader, TradeStation, TradingView, others too. Now, you may have noticed that the red knockout trades are all for when the stock is rising. And for that reason, they tend to work better in bullish markets, but the market doesn't always go up. Not all stocks always go up. In fact, some can have some pretty big bearish moves. So I've created the green knockout to double your chances of success. So today you will get both the red knockout and the green knockout. So you will have all the tools you need to trade any market up or down. So what this means, you're going to get the red knockout system, the accelerator video course, the weekly group coaching, the watch list, the RKO indicator, and an extra bonus, the green knockout as well. And again, you get updates to both the red knockout and the green knockouts when we improve it for a full year. Buy now. You can see why the RKO trading system is a steal even at $10,000 or $10,041. If all this did for you was identify trades that had a profit of 182.1% or 83.7% or even 25.1%, the question you need to ask yourself is, would it be worth it? Yes. But you're not going to pay $10,041 today. Because you've made the investment of being here live on this training and for being one of my action takers, you're the elite. You're better than millions of other traders out there, millions. and I want you to have the results that you deserve. Get started today for a one-time small, easy investment of only $997 by going to markettaker.com/RKO, or excuse me, markettaker.com/meta. 1, 2, 3, go. So that's market, like stock market, taker, as in take what is rightfully yours, 2 T's in a row, markettaker.com/meta right now. But to get all these bonuses, including the green knockout to maximize your success in any market, you have to be one of the first 25 new members today. And you have to take massive action by going to markettaker.com/meta. So just to recap one more time, when you open your browser window and go to markettaker.com/RKO.meta and sign up today, you are going to get access to the red knockout scanner that's going to identify trades with the entry and exit points. On top of that, when you are one of the first 25, you're going to get instant access to the RKO Accelerator course to get you up and running right away. You're also going to get access to weekly group coaching where we will go live in the market together, and you can see exactly how me and my team use the RKO to generate profits in the market. You will also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. This way, you have the best opportunity to generate profits from the scanner by following the exact trades that I'm looking to place. Further, when you open up your browser and type in markettaker.com/meta and lock in your RKO traders package, you will also get access to the RKO indicator itself. This way, while we're coaching you live in the market each week, giving you access to my top watch list, you will also have access to this powerful indicator 24/7 across multiple markets to take full advantage of this great and easy to use scanner. Also, as we run more tests and do more tweaks, as the RKO continues to evolve and we get it performing even better, you will get automatic updates for a full year to both the scanner and the RKO indicator. Lastly, when you join us right now, you will be one of the first to trade the green knockout. You'll have the confidence of knowing you can trade any market up or down, but you have to take massive action today and be one of the first 25 members. Now, I've been talking for about 50 minutes. So I'm going to take a quick 15-second break, get a quick drink of water, and I'm going to check with my team to see how many of those bonus spots are still available. And then I will be right back to answer all your questions before we end my section of this training. So if you're in the process of completing the online order form, and I can see several of you have joined us already, I'm going to welcome you in just a second. But if you are in the process of completing the online order form, please finish it up at markettaker.com/meta. And I will be, and if you finish it up, I can get your enrollment in the count, and we can have an accurate count of how many bonus spots, how many of those 25 bonus spots are left. So give me literally 15 seconds. I need a quick drink of water, and I'm going to come back and tell you how many of those 25 spots are left. 1 second. All right, folks, we have literally 9 of those 25 spots left. So I want to welcome some of our new RKO members. Welcome and congratulations to Josh. Josh, great job joining and making RKO work for you. Welcome and congratulations to Anthony. Nice work. Welcome and congratulations to Tina. Welcome and congratulations to Stephen. Nice work, folks. Welcome and congratulations to Gina. Welcome and congratulations to Rachel. Welcome and congratulations to Robert. Welcome and congratulations. Oh, before I go any farther, I have to look in 2 spots to find the folks who joined us because of there's a common question that I get, and that is, hey Dan, look, I've got a small account and I can see that this is an amazing way to take a small account and grow it into a bigger one. But here's the thing, I don't have the $997 right now. Is there a way to finance it? And that answer is yes. You can use PayPal and PayPal credit. We have a deal with PayPal to offer you both PayPal as a payment option and also PayPal credit. So you can lock in the red knockout today when you check out using PayPal and just choose PayPal credit. All you have to do is the same thing you've already done. Just go to markettaker.com/meta, short for Metastock, and click the PayPal button on that screen and get started right now. Now, before I welcome the rest of the new folks, I want to answer a couple other frequently asked questions. What if I can't install it properly? It's really easy. In fact, I actually send out a video with step-by-step instructions on how to install it and how to use it. Is it time-consuming? No, that's the whole idea. Many traders have a busy schedule. I've designed RKO so you can literally trade the system in about 60 seconds a trade. What if I can't figure it out? You get a video tutorial plus hands-on training live every Friday morning to show you exactly how to do it in the real market. And what time is that weekly group coaching? So it's live every Friday from 9 to 10 Central, which is 10 to 11 Eastern, or 7 to 8 Pacific. Half hour after the market opens, boom, you're going to go watch an ex-Goldman guy setting up trades using RKO and other things. And by the way, that class is recorded. If that time isn't convenient for you, you can watch it whenever is convenient for you. What other questions can I answer to help you make the decision to do what Josh and Anthony and Tina and Steven and Gina and Rachel and Robert and all those other folks did? What questions can I answer to help you make the decision to come and join us? Richard says, I'm not sure what that question says, Richard. I'm sorry about that. So Peter says, how long do I get access? So good question. This is for 1 full year. All right. You get to use this for 1 full year. I mean, look, you saw what some of these results can be, right? If you can make money on 2 trades, can this class pay for itself in just 2 trades? 3 trades? How many of these will you see in a year? Sometimes there can be 10 of these a day. And considering you also get the green knockout for times when the market is lower. Good question. Ashley asks, what happens after the first year? Great question also. So look, this, to get all of this a la carte, it's a little over a $10,000 value. And so think of it as like a trial for 1 year, right? And you know how these trials go. Like, just like you, I invest in myself as well with online education. And when I see a trial like this, I know what's up. The people want me to try it out to see that it's great and that it's valuable so that I'll stick with it. And then it goes up to full price, right? Isn't that how it usually works? Well, that is how it usually works, but I don't believe in that. I don't believe in that for me, and I don't believe in that for you. So after the first year, if you choose to keep using the red knockout and the green knockout, and you want to do it again for another year, we will send you an email and you can renew at $997 again. Now, there's no long-term contracts, no commitments. You can cancel anytime. You don't have to renew. But, you know, over a full year, and you're getting, on average, several of these RKO trades a day, imagine if you really get this working well, right? You get the signals, you get it down really well. Maybe you make 20 grand a year trading this, or 25 grand a year. Depends on how big your account is. You know, some people who have a $100,000 account, I mean, how much can you make trading this, right? So if you made it work like that, you'll want to renew it. But I don't want you to have to renew at full value. So after the first year, you get to renew at $997. Do we have any other questions? Welcome, Francesco. Welcome, Rodrigo. Welcome, Marina. Welcome, John. Welcome, Jason. Welcome, Catherine. Welcome, Jared. Welcome, Tim. Welcome, Valerie. How many spots do we have? We have 3 more spots, and I would love to see you grab one of those last spots. Take control of your own financial future and really, really make it happen. Do you have any other questions before I turn it back over to Jeff? I'm pretty sure that we've got some more really great speakers. I wasn't aware of what time people were speaking, but man, I saw the list and holy moly, there are a lot of great speakers today. So definitely, I want you to stick around and check out who is next. I think there's somebody next, right, Jeff?
Yes, there is. Steve Primo's coming right up.
Oh, okay, awesome. That's going to be great. Okay, do we have any other questions before I hand the mic back to Jeff?
I didn't see any.
All right, then we are all good. Hey, thank you. And again, welcome to all the new RKO folks. Congratulations, great job moving forward with it. And everyone else, thanks for spending your time with me. And I was glad to be able to share this setup with you. Have a great rest of your day. Trade smart.
All right. Thank you, Dan. Appreciate it. And thanks for coming in and spending time with us.
Oh, thank you so much, Jeff. Nice to see you.
All right. All right, very good. Okay, let's do this. And this. And this. I did adjust the color, so hopefully, it looks a little better. It's interesting. All right. Very, very good shot. Thank you, Dan. Thanks for everybody for coming today. I hope you're enjoying the session. I hope everything's going well. If you have any comments or feedbacks, let us know. I do want to say thank you to Stocks and Commodities for sponsoring today's event. Did you know they've been doing magazines around stocks and around technical analysis monthly since 1982? If you registered for today's event, you'll get a free copy. If you take advantage of any of the offers that we're doing today, you're going to get at least a 5-month subscription, 2 years if you spend more than $300. So if you are watching this on YouTube and you've already liked and subscribed, head on over to register, metastock.com/tradersummit, and that way you can sign up for not only this magazine, but all of the speakers today are offering some really, really good bonuses just for coming. So make sure you register. In addition to that, of course, we're Metastock. We've talked a lot about Metastock, what it does. It is my totally unbiased favorite software available. It's been rated 29 years in a row. Pretty soon, that's going to be 30 years in a row. In Stocks and Commodities magazine by the readers for allowing you to do scanning of the markets, testing of trading ideas. Our patented forecaster is pretty cool, and we didn't even talk about it today. Pricing starts at $69 a month if you're here in the US, $59 if you're interested in non-US markets. You can get an extended trial, which means if you pay for a month at $69, you'll get the second and third month for free, bringing your effective cost down to $23 per month to try the #1 rated software of all time. Metastock.com/traders-summit 3-for-1. If you have questions or you have specific things that you want to find out about our software, you can also give us a call. Our phone number is on this side, 800-882-3040. You can also sign up or chat online with us at metastock.com/summit. Sales chat. So YNRED says, great presentation. Eric says, is there a lifetime option? How much? I do not think there is a lifetime option for Dan Passarelli, but you can reach out to him and find out for sure. I think he just does the annual option. We are offering some pretty good prices though on our Trader Summit Action Pack. It includes 3 months of Trade Trend, GoNoGo Complete, Oscar Carboni's training, 3 months of Learn Metastock, 2 years of Stocks and Commodities, and Alicia Power Metastock. It's a great package, some very, very popular add-ons, and some really good training as well. $1,235. You can do that at metastock.com/summit deal. You can also call us 800-882-3040 or metastock.com/sales chat. So there you go. Our next and final speaker is Steve Primo. Steve has been a partner of Metastock for a number of years. He does a lot of what I like to say about Steve is he's very, very understandable. He talks in a way that I very much understand. I love presenters that can kind of talk to you and teach you something that you didn't know. And he's very, very specific, very thorough, and does such a great job. I mean, I don't even know how many are available. I'm not sure on that question why. You'd want to reach out to him for that answer. Thank you for the question, though. All right. So, Steve, how are you doing today?
Hey, Jeff. Great. Can you see and hear me clearly?
I can hear you, and I'm going to make you the presenter. I'm not sure I can see you yet. But
okay.
Sometimes I get it.
How about now?
I can see your screen.
Great. That's
what
I meant. Yeah.
Okay, cool. How many times do you think how many times do you think you've presented in a Metastock?
Dozens of times. And
it's been quite a few.
Oh yeah.
We always invite you back because you always do such a great job. So
great. Well, I have a great presentation today for all the listeners, so it's going to be a great educational one.
All right, I'm going to get out of the way. It's your turn.
Okay. Thank you, and thanks to everyone for attending today's Online Traders Summit. Today, I want to talk to you about 2 edges that you're absolutely going to need in 2023. And we just started out the new year, and I'm sure many of you had all these hopes and dreams about going in the right direction and making that extra money, and probably you're struggling already, right? Well, that's okay. It happens to many people. It happened to me when I first started trading, and it happens to people even that have been trading for a while. But what I want to do is present these 2 edges that you can actually start applying as early as tomorrow, and I really think will make you a more consistent trader. For example, let's take a look at this older chart here in PLRX, okay? Most traders looking at this would say, well, really not much happening here. We're kind of in a trendless market. Sure, it's kind of drifting up, but really not much happening in inexpensive stock here. But with the 2 edges I'm going to share with you today, the first edge actually told you that the overall trend is up. And that's a tremendous edge to have. But the second edge took it up a notch even more and told you that the short-term trend was up. So when you have these 2 things in sync together, the overall and the short-term, you have the great possibility for some really nice moves as long as you know what the direction is. And as you can see, the stock shot up 15 points days later. Now this works to the downside as well. Let's look at this older chart of CHTR. All right. Once again, most people would say, well, Steve, why would I want to trade this? It's in a range, right? Every time I buy, it goes straight down. Every time I sell, it goes straight up. Well, it may appear in a range, but the first edge would have told you that the overall trend is down. So even though you're going sideways, that trend is actually down for the overall time period. Now, for the short-term trend, the second edge told you that the trend was also down. So now you have the overall and the short-term in sync together, and look what happens. See, this is the great edge you can have when you're in sync with the market, not only in the overall, but in the short-term trend. So this is what we're going to be discussing today, 2 edges that you'll absolutely need in 2023. And you can apply them to any market, any time frame. Makes no difference what you're trading, makes no difference if you're a buyer-only trader or a seller-only trader, or if you do options. Makes absolutely no difference. And as I stated, you'll learn everything in their entirety today, and you can start applying them as early as tomorrow. So welcome once again. My name is Stephen Primo, president and founder of Specialist Trading. As Jeff said, I've been speaking at Metastock presentations for a number of years now. I started my career actually on the floor of the Pacific Stock Exchange. I was on the floor some 16 years, and 9 of those years I was a specialist for a DLJ. So I've been trading actually now for 46 years. While I was on the floor, I made markets in roughly about 50 or 60 stocks. Stocks like IBM, Waste Management, US Air. I traded through the crash of '87 and the bull market that followed. So in my brief history of trading, I've seen and traded just about every market environment you can think of. And I've also traded just about every system or technique you can think of. So in my 46 years, I know what works in terms of consistency, and I know what doesn't work. So that's why I formulated Specialist Trading. I teamed up with Pro Trader Strategies about 15 years ago. And we dedicated this website just simply to teaching traders how to trade. All right. We don't give out any signals. We're not a signal service. We don't have a systematic type of teaching where all you have to do is, pick the numbers and you can, all enter at the same place and sell at the same place. We believe that everyone has to make their own decision. This is the only way you can become a consistent trader. That's one thing I've learned in roughly 50 years of trading, is that the only traders that are still around are the ones that make their own trading decisions. They don't go to chat rooms, they don't listen to TV gurus, or they don't worry about interest rates or earnings. They don't even listen to guys in webinars. They'll learn from them and apply their knowledge, but they ultimately have to make their own trading decisions. So this is our goal, to provide you with consistent techniques and tips that have stood the test of time so that you can make your own trading decision. You'll see that in today's educational presentation. Now, before we begin, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 2 edges, but please remember that we can in no way guarantee that any of the edges and performance results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get free education on a daily basis is to follow us on Twitter. There's our handle right there if you want to copy that down. I post different information on a daily basis, anywhere from snapshots of current trades that our strategies have generated, and also little bits of financial wisdom. So there's lots of great free educational information on a daily basis. Please feel free to follow us on Twitter. Now, as I said, we are first and foremost an educational company. So my goal as an educator is not to force feed you signals. It's not to tell you what I think the market's going to do, or what I think the best stock is to trade, or what I think the best time frame is to trade. Those are all things, once again, that you ultimately have to decide. But my goal as an educator is simply to teach you what I've learned. And let me share with you what I learned trading on the floor of the exchange. This was one of the first things I learned. I was struggling tremendously my first year or two on the floor. And here's what my mentors taught me. They said, Steve, it's the easiest thing in the world to overcomplicate your trading. Anyone can do that. Now think of it. It doesn't matter if you've been trading 30 years or 30 minutes. Anyone can overcomplicate your trading plan, your trading method. You can pile on more and more indicators, more and more techniques, more and more things to watch. It doesn't take a lot of character to do that. And for some reason, we've always been taught that the more complicated something is, the more valid it is. But in actuality, it's actually the opposite. So anyone can do that. But it's the most difficult thing in the world to simplify your trading. The reason it's difficult is because you have to strip away conventional wisdom, things that we've been taught that are supposed to work and supposed to have high levels of consistency, but in actuality, they really don't. They're kind of like urban myths that, well, this is the way you're supposed to trade. But if you study them for a while, you see that they really don't have a high level of consistency. It's almost like the slot machines in Vegas. You know, they lure you in thinking that, wow, I hear all these bells and whistles, but they're meant to keep you there for a long time, because they know ultimately if you stay there at the slot machine, you're going to give all your money away, all right? And so they'll give you an occasional win every once in a while to keep you there. It's the same way with a lot of conventional wisdom. Sure, you'll get an occasional win every once in a while, and you'll have this great sense of accomplishment and thinking like, okay, I'm back on track. It looks like I really know what I'm doing now as a trader. And then ultimately, you most likely give it away in the next week or month or so, right? I'm sure we've all been there. I'm sure you know exactly what I'm talking about. So what we want to do is simplify things. We want to keep things at their most basic approach, because in my nearly 50 years of trading, The one thing I've learned is that it's the simple things that actually work, not the convoluted logic, not the real complicated systems. It's the simple things that actually will get you to that road to consistency. So let's begin today's educational presentation, and let me share with you the first edge, and you'll really see how simple these things are. Edge number 1 states that if price is above the 50-period simple moving average, the overall trend is up. And conversely, if price is below the 50-period simple moving average, the overall trend is down. So let me show you what I mean here. Someone looking at this chart would say, Steve, there's absolutely no trend. Look at, we're going down, back up, back down again. I don't want to trade this. I'll get whipsawed. But the first thing we want to do, the first thing I teach my students around the world is to apply a 50-period moving average. And then we ask ourselves, where is price in relation to that 50-period moving average? Okay. In fact, I would even recommend writing that down on a Post-it and placing it on your computer screen. Where is price in relation to the 50-period moving average? Because if price is above the way it is right here, well, then the market, not me, not some guy in a chat room, not some guy on TV, the market, the source of what you're trading, is telling you the overall trend is up. Now, why is this so important? Because over time, we want to make you a consistent trader, right? Well, trading is a numbers game. Not everything is going to work 100% of the time. It's just not like that. And every athlete hits a home run every time he steps up to play or makes a basket. Not every entertainer has a hit movie or a hit album every time they come and perform. But it's the consistency that promotes the longevity. So that's what we're trying to instill in all of our traders. And if you are in sync with the overall trend, you will have increased your level of consistency. So we tell our traders, if price is above the way it is right here, you will only have a buyer's mindset or a buyer's bias. This doesn't mean you're going to buy at the market, because this isn't a strategy. This is just a directional tool, okay? It just means that you know automatically what side of the fence to be on, all right? Now let's look at the other side of the coin. Here's another generic chart. Once again, most traders would say, there's absolutely no trend here. We're going sideways. It's a whipsaw market. But that's why most traders fail, because they fail to see that price is below the 50-period moving average. Remember, before you pull the trigger, I don't care what strategy you trade, could be one of mine, could be one of yours, could be someone else's. It makes no difference. But ask yourself, once again, where is price in relation to the 50-period moving average? It doesn't matter if it's a 5-minute time frame, an hourly, a monthly, makes no difference. If it's Bitcoin, if it's cryptos, if it's Eurodollar, if it's a 5-minute chart of the E-mini futures. It makes absolutely no difference. Ask yourself, where is price in relation to the 50-period moving average? And if it's below the way you see right here, well, then the market, once again, the source of what you're trading, is telling you the overall trend is down. Therefore, you don't want to have a buyer's mindset. You don't want to be a buyer. I don't care if someone tells you this is the most oversold it's ever been in the history of mankind. Trust me, they said that during the crash of '87. They said that during the crash of 2000, during the crash of 2008, and during the pandemic crash. Remember, you don't want to be one of the buyers while it continues to go straight down. It's much better to be in sync with the market. That's how you get consistency. So that's the first edge, being in sync with the overall trend. In fact, I would dare you now to go back and look at your last 5 or 10 trades, maybe even more. I can almost guarantee you that the reason why you had losses was because you were out of sync with this simple rule. You were buying below the 50 and you were selling above the 50. And I can almost guarantee you that the winners you had were because you were in sync with this rule, whether you knew it or not. You were selling or going short when price was below the 50, and you were buying when price was above. Okay, now let's take us now to the second edge in our educational presentation. This is edge number 2. When a bar closes in the top 25% of its range, the market is saying, I want to go higher on the short term. Now, when a bar closes in the bottom 25% of its range, the market, not me, not interest rates, not some guy on TV, the market is saying, I want to go lower on the short term. Remember, we teach our students only to listen to one thing. That's the chart or the market in front of us, wherever we're trading, because that's what we're trading, right? I mean, that's what you should be listening to, okay? So let me show you what that means if it's a little complicated. Let's say this price bar makes no difference what time frame or market. Let's say it's above the 50-period moving average. So what we want to do is divide it by 4 separate but equal parts. And if we close the way we did right here in the top quarter, in the top 25%, what is the market telling us? It's telling us it wants to go higher on the short term. Okay? So as we look at our chart again, the overall trend is up because price is above the 50. And we look for a bar that closes in the top 25% right here. And look what happened. All right? Now I want you to pay attention to what happens next. Look what happens. The market falls out of bed. This is where students say, hey, Steve, this doesn't work because, look, the market went down. Well, sure, if you had, tried to pick up a point to sell and to go short, you would have had one good day and you had to be quick because look what followed. Another bar closing in the top 25%. And look what happened just days later, making new highs. So would you rather be in sync with the overall and the short term as opposed to trying to pick one day where it went down? And that's not a very good risk-reward ratio. It's better when you have the odds in your favor and you have, you're swimming with the current at your back. Now, let's look at this bar chart. Let's say we are below the 50-period moving average, and we see this bar here, okay? Makes no difference what market or what time frame. All right, what you want to do is divide this by 4 separate but equal parts. And if you close in that bottom quarter, that bottom 25%, once again, the market is telling you it wants to go lower on the short term. So we look at that chart once again where price was below the 50. So the overall trend is down. Now we want to find a bar that closes in the bottom 25%. Here's one right here. And look what happened. Now, this is not a system. This is not a strategy. A strategy comes with full-fledged rules of where to buy, where to enter, where to place your stop, where to exit, where to have some money management controls and limitations. Those are all full-fledged rules and requirements required to have a strategy. This is just a directional tool, but what a tremendous edge to have. Now, once again, you can go back and look at your setups and see why you may have failed because you were out of sync with these two very, very important edges. Now, here's what I'm going to teach you today. There is a technique that you can use by applying these two edges, a little structure. Once again, it's not a strategy, but you can form a strategy off these two edges. We have a number of strategies that use these two edges, and I'm going to share with you a technique which applies these two edges. Once again, you can start applying as early as tomorrow, but I would first suggest paper trading so that you fully understand the process, okay? So let's look at some of these technique examples, and I'll explain them to you, and let's start off with buys, all right? All right, here's a chart here in TSM, all right? This was just last month. Most traders looking at this would say, well, Steve, we have lower highs, lower lows. That means we're in a downtrend. So I'm in sync with the market. I know that, we should be a seller, right? Well, maybe, but what's the first rule we teach our students? Apply the 50-period moving average. Now you ask yourself, where is price in relation to the 50-period moving average? Price is above. Sure, we had one close here, just barely below, but you need 3 to 5 consecutive closes either above or below to tell you what the overall trend is. And so far, we only had one close below. So that's not enough to tell us the trend is down. The majority of the bars are closing above, so the overall trend is up. This is why traders fail. They're out of sync with the market. Okay? So the overall trend is up. Now we want to find the short-term trend. Here's where the technique comes into play. You want to find a bar or a series of bars that close in the top 25% that are either touching or extremely close to the 50-period moving average. That is a signal that you're most likely going to have a nice move in the direction of the overall trend. Okay? So if we look for some bars, we see we have a number right here. We have 3 altogether. We have one that's almost touching. We have 2 very close. So this is a very big sign, once again, coming from the market that you're trading and nothing else, telling you, I may want to go higher. Now, this was just at the end of December, and look what happened in the days to follow. Shot up 15 points. Okay? You see how simple that is? All we're looking for is the overall trend, and then we're looking for the short-term trend that is very close to or touching the 50-period moving average. Let's look at another example here in SHC, okay? Most traders looking at this would say, wow, okay, this is an $8 stock, but man, it's in a sideways market. I don't want to get involved until it breaks out or it shows me what it really wants to do. Well, in all actuality, it is showing you what it wants to do, because if you add the 50-period moving average, it's telling you the overall trend is up and you should have a buyer's mindset. It's not saying buy at the market. It's just telling you that you shouldn't in no ways be ignoring this because it wants to go up. Let's apply the short-term trend. And we see that we have a number of bars closing in the top 25% that are very close to the 50. And look what happened in the days that followed. Shot up 10 points, over 100% in just about a week. Okay. This obviously it gapped up based on some fundamental news or some announcement, right? It gapped up from roughly 8.5 all the way up to I can't see here. Let me see, up to 18, right? The point is, how did we know this a full week in advance? It's because the market tells you just about everything you need to know. The only trouble is we're never taught to listen to the market. We're always taught to listen to some guy on TV or wait for the earnings or wait for the announcement. Well, how good would that have helped you if you waited? And would you want to buy 10 points higher? The market is always giving you clues. It's always giving you messages. Learn how to listen to the market and you become a much more consistent trader. All right, let's look at another stock, SPRB. Here's an inexpensive stock. It's a $1 stock, right? This is coming into December last year. Now, most traders will say, well, yeah, Steve, I want to buy this because, you know, what's the risk? It's only 1 point. But remember, we don't want to listen to what the market's telling us. And even though this is not telling us to go short, it's telling us not to get involved because it may be below the 50 for a long time. We don't want to get involved yet. And if we apply the top bottom 25% bars, we see that it's really telling us that the overall and the short term are in sync to the downside. So we're not going to short a $1 stock. Let's just watch and see what happens if we're interested. Now, in the following week, we see here that price started to close above the 50-period moving average, and we have bars that are touching or intersecting the 50. So this is a very clear-cut sign that it wants to go higher. So if you're considering buying this, doing your research or watching it, maybe your strategy finally generated a buy signal, now's the time to really be interested because remember, this was a $1.25 stock. It gained 2.5 points in a matter of days. That's 100% price gain. I know that may not seem a lot because we're only looking at an inexpensive stock, but imagine you were long Tesla. Imagine you were long Apple and it gained 100% price value in a matter of days. I think you'd be happy, right? It's all relative. And the market was telling you everything you needed to know in advance. All right, let's look at this example now in SIVB, okay? SVB Financial. Once again, most traders will say, wow, we're going up, down, back up. This is once again a whipsaw market. I'm not going to buy because I'll probably buy up here and it'll go straight down. I'll sell and it'll go straight up. I'm not going to get back in. This is the way most traders fail because they're out of sync and they don't know how to see what the market is telling you. When you apply the 50-period moving average, it was telling us that originally the overall trend was down because price was below the 50-period moving average. And then it's starting to firm up. Now, while we were below the 50, we see if there were any signs telling us to go short, but not really. I mean, we had two bars here that closed near the bottom 25%, but they were a fair distance away. They weren't even touching the 50. So there was really not a clear-cut sign here. And now look what happened in the middle of December. 1, 2, 3, 4 closes above the 50-period moving average. This is more than enough to tell us that the overall trend is up. So we now know that this wants to go higher, okay? This is not a whipsaw market. This is not a crazy straight up, straight down market. It wants to go higher. But that's on the overall trend. What about the short-term trend? Are there any bars closing in the top 25% that are intersecting the 50-period moving average? Well, sure. There's one right here, and then here's one that's very close. So this is a very strong sign that this is probably going to have a nice move to the upside. And price was roughly trading about 230, 240. It shot up 70 points. Once again, some announcement or something happened where it gapped up a couple of weeks later right here. Okay, this was just this last week. Isn't it funny how we knew in advance way back here just based off of what the market was telling us? You see, you're overcomplicating your trading. Take it from someone who did the same thing some 46 years ago. I used to, if you saw the way I traded, I had, I was in charge of making markets in roughly about 50 stocks. So I had to have estimates on all the earnings of all the stocks I was trading. I had to know all about the earnings estimates when they were coming out. On top of that, we didn't have the internet then and chat rooms, but we had newsletters. I subscribed to about 10 or so newsletters from all these trading gurus that were supposed to know what the market was going to do, and I followed them. On top of that, I would watch TV and listen to the guys after the market closed, see what they said. And guess what? I couldn't make a dime. At best, I was just treading water. Nothing worked because I was overcomplicating my trading. And my mentors saw this. These were specialists themselves on the floor. And they said, Steve, that's where I started off the presentation. It's the easiest thing in the world to overcomplicate your trading. Anyone can do that. It's the most difficult thing to simplify. So I said, well, how do I simplify? And they said, by just releasing or letting go of all these things you're relying on that really have no high levels of consistency, like interest rates, like earnings reports, like support and resistance, like all these things that we've been taught are supposed to work, they really don't have a high level of consistency. Learn to simplify it, and you can take advantage of setups like this. All right, now let's look at the other side of the coin, because you can also apply this to going short or for exiting a position if you want to. Let's look at an example here in ADSK, all right? Most traders would look at this and say, hey, Steve, you know, I bought that $10,000 program, and they're saying there's major resistance here. This is where all the big money is selling, so I don't want to do anything until it breaks out. I'm just going to kind of wait and see. And so you wait, and then guess what? It breaks out, gaps up the next day, and comes down. But you think all it's doing is filling this gap. It's retracing. And so you want to be a buyer. That guy in the chat room says, you got to buy here because we broke out of that resistance. Now that's what was the ceiling is now the floor. So we got to be long, right? Once again, how many times have you done things like that and lost money? I know I have. When I was first trading, this is the way I used to trade. So what is the market telling us? Well, we apply the 50-period moving average. And are there any closes above the 50 period? Absolutely no. We opened here above, but remember, it depends on where we close, and we have not closed above. So the overall trend is still down. These are all selling opportunities. So now we want to look for bars on the short term that close in the bottom 25% and are close to or intersecting, and we have two right here. So where everyone was saying, hey, this is a buy opportunity, it's retracing. That guy in that trading room was saying you got to buy on the retracement. You know that the market is telling you, I want to go lower. Remember, our job as traders is not to predict how high or how low something's going to go. We're not supposed to predict the interest rates or the earnings. We're not supposed to predict what the CEO of the company is going to say. Our job as a trader is really simple: to listen to the market, find out which direction it wants to go, and then just to jump on board. That's it. Trading is no more difficult than that. So it's telling us it wants to go lower, so we can jump on board and sell. And look what happened. What happened to the support there, okay? 20 points in the next few weeks coming into this month. Here's an example in ILMN, okay? Once again, kind of trendless, right? Down, then back up. We wouldn't want to touch this thing. Well, not really, because once again, all the closes are below the 50-period moving average. So the market is telling us the overall trend is down, right? So we don't want to be a buyer at all. We know now that we're only going to view this from a seller's point of view. Doesn't mean we have to sell. We just know that that's the point of view we'll have when we look at this chart. Now, when we add the bottom 25% bars, we see we have one here. It was a little bit too far for our liking, but this one intersected. So this was all we needed in order to go short or to say, hey, maybe this is a good selling point. And the stock fell 25 points. See how simple that is? How about right here? Short-term downtrend looks like it may have been broken, right? But if we apply the 50-period moving average, 1, 2, 3, 4 closes below the 50, more than enough consecutive closes to tell us that the trend is down. There's no breakout to the upside. We didn't break that downtrend. And we have, once again, a bar closing in the bottom 25%, but it's a little bit too far from the 50, so it really doesn't meet the requirements. But this one did. It intersected the 50. That's enough to tell us that it wants to go lower on the short term as well as the overall trend. 30 points coming into this month, okay? Now let's look at this example in Lulu, okay? This was in November coming into December. Price was trading okay. It was just kind of right here, just holding. And then all of a sudden, bad news, bad earnings, something happens that it's really bad and that it gapped down. But let's say you go to that chat room and that guy says, he has that convoluted indicator that says, we have never been this oversold before. This is tremendously oversold. You've got to buy it, if not for just a bounce, it's going to go back and fill this gap, retrace and fill this gap, right? You're going to pick up some really inexpensive stock in Lulu here. And on top of that, that $10,000 program you bought says that there's major support here. This is a double bottom. This is where all the institutions are buying. And after all, they're never wrong, right? So you've got to be a buyer. Well, what is the market telling us? You see how everything I justified was based off what someone or something else was telling me? What is the chart in front of me telling me? In fact, that's the only thing you should really be listening to, right? Well, we apply the 50-period moving average, and it's saying that the majority of bars are closing below the 50-period moving average now. We had one close just barely above, not enough to change our mind. We need 3 to 5 consecutive, but we have consecutive bars closing below. So I don't care if somebody says it's the most oversold it's ever been. You don't want to view this from a buyer's point of view. The odds are not in your favor. Now, if we identify the bars that close in the bottom 25%, we see that we have one here intersecting. We have one here that's very close to the 50. This one is not so close, but these two are well enough to tell us that most likely Lulu wants to go lower. So I'm not going to be a buyer of this at all. And that would have been a good idea because, whoops, you could have avoided 40 points to the downside coming in to this month in mid-January. Now, lastly, I want to look at an entirely different time frame, a monthly chart of the spiders. That's the ETF that represents the S&P 500, okay? This is going back to December of 2019, or actually October 2019. As we see, we kind of had this nice upward move here, but then it was followed by a sharp downward move. That's when the pandemic hit. And that's when everyone thought the market was going straight down, terrible news, and everyone was getting killed in their their long-term accounts, and everyone was thinking that the world was coming to an end. Let's see what the market was telling us. Apply the 50-period moving average, and that entire time, these are all months now. So for 1, 2, 3, 4, 5, 6, 7, 8 months, we only had one close just barely below. Not enough to tell us that the overall trend is down. So the overall trend was still up, okay, even during the pandemic when we had this tremendous sharp move. So there's no reason to panic, no reason to sell. The overall trend was still up. Now, let's see what the short-term trend is telling us. You can apply these two edges. It makes no difference on what time frame. We want to see bars that close in the top 25% that are either touching or very close to the 50-period moving average. If we see these, that's a very strong sign that the market wants to go higher. And what did we see in April and May? The two very things that conclude the requirements for this edge I just taught you. So we knew in 2020 that the market wanted to go higher. So there's no reason to worry about economics, to worry about what was going on, because the market was telling you, I want to go higher until I change my mind. And look what happened. Spiders on a monthly time frame went up 180 points. Now that transferred over onto nearly 13,000 Dow points that you could have taken advantage of. Now, this is coming into roughly 2022. Let's see what happened this past year, okay? It's slowly fizzled out. The market has gone lower and lower. Remember, this is on a long-term time frame. But what is the edge we're talking about? When we see that overall a trend is still up, it still is, price is still above. This is coming into January. And we want to find a short-term time frame where the bars close either touching or very close to the 50 period. So what do we have here? Is that telling you a clue as to what the market wants to do based on what I just taught you? The overall trend is up, and we have a bar, and this happened in October of last year, closing in the top 25%. In November, it did it again, even though we had a bad month here in December. Look what we're doing again in January and February, or January, I should say. So until the market changes its mind, it looks like on the long term, it may want to go higher. Remember, going back to recap what my mentors taught me, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. But it's the most difficult thing in the world to simplify your trading, because it takes a lot of character, it takes a lot of discipline to let go and to release all this conventional wisdom that we've been taught that's supposed to work, right? But we know that it doesn't, because 85% of all traders fail. And 85% of all traders, I'd say, are taught the exact same thing. You know, we got to look at interest rates. We got to look at moving average crossover, support and resistance, Fibonacci lines. This is why we say You must focus on things that have high levels of consistency if you want to be a consistent trader, and then make your own trading decisions. Okay, let's recap. Once again, let's go over the technique. First thing you want to do, makes no difference what market or time frame you trade, apply the 50-period moving average. So as you look at that first chart we shared with you on the opening of today's presentation, looked like nothing was happening in PLRX. In fact, it looked like a trendless market, right? But once we apply the 50-period moving average, we know, one, the overall trend is up. So we don't want to be out of sync with the overall trend. We're only going to have a buyer's bias. Second edge, after we apply the 50-period moving average, apply the top bottom 25%. So we want to find bars that close in the top 25% of their range that are either touching or very close to that 50-period moving average. So we apply those, and look at all these bars that are close to or touching. Now, it took a while for this to kick in, but ultimately, the stock took off, okay? This works to the downside. Once again, in charter, looks like nothing is happening here. In fact, it looks like a range whipsaw market. You buy, it goes down. You sell, it goes back up. First thing we do is apply the 50-period moving average. Ask yourself, where is price in relation to that? Price is below, so that means the overall trend is down. Why is that important? Because we will never be a buyer if the overall trend is down. The odds are against us, okay? Sure, every once in a while, like the slot machines, remember, you may get a winner, but they are designed to give you a winner to keep you there, because ultimately you're going to give it back. Same way with buying below the 50. Every once in a while, you'll have a very nice winner. They'll give you this false sense of security that you're on your way. But if you do that long enough, just like the slot machines, you're going to give it all back. The second edge, look for bars that close now in the bottom 25% of their range, that are close to or touching the 50-period moving average, and watch how the market goes in sync with the overall and the short-term trend. These are two edges that you'll absolutely need in 2023. That's my opinion. But I want to ask you, do you think these two edges can help your trading going forward? Remember, we're already finishing the first month of the year. Do you think these two edges could help you? How would you like to have many, many more edges similar to these, but entirely different, based off entirely different parameters, based off entirely different techniques? Well, we have a great offer for all of you attending today. I think you're going to really like it. This is our Secrets of a Stock Exchange Specialist Training Sessions. This is 3 hours of trading techniques plus a full strategy. It's a video seminar. Years ago, I was asked to be the head speaker at a conference in Colorado where I spoke for roughly 3 hours, and they recorded it, and this is the recording of that presentation. In the presentation, I'll talk about many more high probability trading edges, similar but entirely different from the ones you saw today. I tell you which indicators I believe you should not be using. I go into the difference between a system versus a strategy, talk about the #1 chart pattern, and how to be on the right side of the markets. But here's the best thing about this 3-hour video seminar. I give you the complete rules to strategy #1. This is one of our most consistent pullback methods that incorporates a few of the rules of the edges that I just shared with you today. Okay, so you'll get the full rules, where to enter, where to exit, where to place your stop, money management included with this special offer. But we're not going to just stop there. We actually have some extra bonuses, because usually this costs $9.97. Here's the extra special offer we have. We're slashing that tremendously down to only $37. I mean, that's a tremendous discount. On my sister site, Pro Trader Strategies, this video seminar is offered for close to $1,000, but for a limited time only, we're going to discount the price down to $37. I'm sure that many of you spent more than that in today, maybe some minor losses, more than $37, okay? This is a great way to get your trading back on track, but we're not going to stop there as well. We have an extra bonus, and here's what it is. Along with your purchase of the $37 Secrets course, we will include a 50% discount on any other product we sell. Now, my sister site, Pro Trader Strategies, is in charge of marketing and all the info and the discounting of all my methods and strategies. And so you can pick any one you like, and you'll get a 50% discount. These are a number of different strategies we have, a number of different techniques and methods for really elevating your trading. But here's the one thing you have to remember. This extra bonus is limited to the first 100 traders who respond to this offer today. So last time we spoke at the Trader Summit, we had a number of people taking advantage of our offers. But remember, this is only to the first 100 traders who contact Pro Trader Strategies, and they'll also get this 50% discount on virtually any other product we have. And there's a number of other methods and things that I've taken that you won't find anywhere else, because most of the things I've taken and I've learned from are from my years on the trading floor on the Pacific Stock Exchange, and they're not on a lot of other platforms. So these are great methods and techniques for any market, any time frame. You owe it to yourself to take your trading to the next level. Remember, we just started out the year, and I'm sure a lot of you are already frustrated seeing that things aren't going your way. Take advantage of this great offer. I think most of us can actually, afford $37. It's cheaper than going out to lunch in some places today. Okay, take advantage of this and invest in yourself. Only $37, and you can learn things that I've accumulated in my last 46 years. Here's how to take advantage of that. Contact my sister site, Pro Trader Strategies. They're in charge of all the discounts and all the tech support. You can reach them at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy to take your order over the phone and answer any question about that bonus we have of the 50% discount on any of the other products we sell and teach. And so there are a number of different things for trading for the markets. If you're an investor, if you're a short-term trader, and if you thought today's information was simple and easy to understand, as Jeff said, that's the way we teach all of our students. So we have students that some of them are hedge fund traders. We also have students that have never even traded before. They just start getting into the markets the last 2 weeks. Everyone gets the same information. We don't teach up to someone or teach down to someone. Everyone gets the same information in the same course. And then we work with you to help you fine tune. So ultimately, our goal is met in that you are making your own decisions. You see, remember, our philosophy is you're the one who's supposed to decide how you want to trade. What we do is give you high probability spotlights on edges, on places on where to enter or exit. And we give you different variables, but ultimately, you have to decide how you want to apply them. So that's what we work with you with, and we find out if you're an aggressive trader, a conservative trader, if you like to take a lot of risk, if you don't like to take a lot of risk, and then we provide you with different entries, exits, and stop placements so that you can decide what makes you feel the most comfortable. See, we don't feel that two traders should trade alike. We think that that's the great myth in trading. No two traders should ever trade alike. You should only trade according to your own means, because everyone comes in with different parameters. Some traders have a $250,000 account. Other traders have a $5,000 account. So they're not going to take on the same risk. Some traders like to trade 20 times a day. Others like to trade once a month. So you have to be able to make decisions based off your persona. And that's the goal. And that's what we provide. So this is a great offer. Once again, contact Pro Trader Strategies and they can steer you in the right direction. They can also take your order over the phone. Okay. I think we still have some time left. So if there are any questions, let me open up the question and answer box. And I'll see here. Let's see. Is this available for Thinkorswim? That's probably a question. I believe so, but since Pro Trader Strategies handles all the data and the tech support and things of that nature, I would ask them. But remember, this is just a video course. If you're asking about if you want to take advantage of the actual strategies or methods, I would contact Pro Trader Strategies and they can probably fill you in a little bit more. Okay. Another question, is the 50-day simple moving average based on closes? Yes, that's a good question. A lot of traders always ask me that. They say, is it based on the opening? Is it based on the the highs or the lows? No, it's like we say, it's very simple. It's just based on the 50. And one other thing I want to mention, a lot of traders think that, well, they may be trading a 10-minute time frame. And so when I say apply the 50-period moving average, they think I apply the 50-period moving average of the daily chart onto the 10-minute time frame. No, once again, that's overcomplicating things. We're only looking at the 10-minute time frame. That's it. There's no reason to look at another time frame. So if you are looking at a 10-minute or a 15-minute or a 30 or a weekly, it makes no difference. Whatever time frame, apply the 50-period moving average to that time frame. That's it. Remember, it's simple. You don't have to look at the overall trend and the shorter time frame trend in order to find out what's going on. In my opinion, once again, that's an urban myth. I used that years ago, and I was taught that some 40 years ago, and it's never really helped me. I've seen no consistency in that. This is much simpler. If you apply the 50-period moving average, and then you look for bars in the top 25 or bottom 25, that already takes care of it. That tells you the overall and the short-term trend. So there's no reason to look at multiple time frames, multiple charts. Really, remember, don't overcomplicate things. So that's a good question. The 50-day is simply based on the closes. Okay, now if you want to experiment, we always encourage our students to experiment with other. Trust me, I've gone through the full gamut, but just because I have doesn't mean that you can't. So remember, you're in charge of your trading, not us. So if you feel that you maybe want to use an exponential moving average, maybe a weighted one, it gives you better results, then feel free to do that. The main concept we just want to instill in all of you is that if price is below, you have a seller's mindset. If price is above, you have a buyer's mindset. So whatever moving average works best for you, that's fine. Some of our students use Fibonacci. They say, Steve, it works better for me with a 34 exponential, but that's fine. But you're still using the same concept of knowing where the overall and the uptrend and the overall downtrend is, and that's fine, okay? But through my 46 years of trading, the 50 period seems to work the best out of anything I've ever seen, okay? Any other questions? I guess that's about it. Remember, take advantage. If there are no further questions, take advantage of this great offer with our association with Jeff Gibby and the Online Traders Summit. We really want to give you a nice offer to get you to know us, and I think it can't get better than $37. Remember, you're getting over 46 years of experience of things I've accumulated, and right there, and it's yours to keep. And you're also getting a special bonus of 50% off of any strategy or technique or method that we have in the future, if you'd like. So this is a great offer. Take advantage of it. And I guess I'll give it back to Jeff. Just want to say thank you all, and I hope you learned something, and I wish you all the best of luck.
Thank you, Steve. Yeah, $37. You should have already signed up for it, but if you haven't, I typed the chat in this thing. You can give them a call, 310-598-6677 or protraderstrategies.com/secrets offer. Steve, thank you again for such a great class. I appreciate it.
Thank you, Jeff, and thanks to everyone attending today.
All right. Very cool. Let's go ahead and just make a few changes here. Go ahead and make the presenter for me. And want to spend just a second to say thank you to both of our sponsors today. I hope you enjoyed today's Online Trader Summit. I enjoyed it. I think that it was great. I appreciate all the guests for coming in, talking to us, all of that kind of stuff. Bradley, we just recorded it today. Oh, how long ago was the class recorded? That's a really good question. I don't know, but you can give them a call, or you can go to their website and they'll be able to kind of answer. I know we were working on the Pro Trader Strategies, the coding of it. I just don't remember how long ago that was, or if it's been re-recorded, all that kind of stuff. So best to ask them. They'd know better. Anyway, thank you to all of our great speakers, CMT Association, great organization. We're very, very proud of the sponsorship that they do for us. In addition to that, Stocks and Commodities, of course. Stocks and Commodities, where it's there, always a great supporter of the Online Trader Summit, and we appreciate that. To all of the speakers today, thank you for all of the time you spent with us. I liked it. I thought you did a good job. For all of those of you that came in, appreciate that. Gary, the recording is actually going to be emailed to you in just about an hour for today's session, if that's what you're asking about. You'll be sent this link, which is the YouTube simulcast. You can go watch it right now if you want to. I'll just send it over to you right, actually. You don't need to worry about kind of clicking on that link. If you want, wait about an hour. It'll be sent to you by email by GoToWebinar. So the last thing I would like to say is, of course, if you haven't done an extended trial on our award-winning Metastock software program, it's a good opportunity to do it. $69 a month for end of day will get you basically 3 months access. So if you buy a month, we'll give you the second and third month for free, 30 years in a row. You can do that by giving us a call at 882-3040. You go to metastock.com/summit deal. You go to metastock.com/saleschat. And also take advantage of this really good offer. You know, we had GoNoGo come in and they talked about their GoNoGo Complete. You get 3 months of Trade Trend that was developed by Jeff Tompkins, who's now a hedge fund manager. Oscar Carboni and his training and the training that's available with that, the 3 months of Metastock, 2 years of stocks and commodities, Unleash the Power of Metastock. All in all, that package, if you just buy everything retail on the website, is $2,810 here today. If you do it today, metastock.com/summit deal, it's $1,235. So metastock.com/summit deal, 800-882-3040, metastock.com/saleschat. So I want to say thank you again for coming. Thanks again to all of the sponsors, the presenters. I appreciate it. I hope you enjoyed today's class. And stay healthy, stay well. We'll see you at the next one.
Hi, Kelly Clement here from Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.